expected from the RBI and the monetary policy. Goldman Sachs will be speaking with us. It's a conversation you should not miss.
And the clock is ticking for Tata Suns. The listing deadline ends today. All you need to know about it on NDTV Profit. You have Vodafone, which has filed a fresh plea in the Supreme Court. They're seeking a waiver of the AGR penalty and interest. NDTV Profit exclusive.
IPO season here. One IPO opens today, 4 listings today. We talk about all of that on the show. And of course, Avendus Spark report on consumption growth story joins in, is the head of institutional equities to talk about what is their analysis of the kind of demand that has shaped up thus far. All of this on India Market Open.
But as always, we'll start with what's happening globally and the big setup. Guys, what really struck me is how clear Trump is that he's going to punish people for a possible US government shutdown. Now, US government shutdown is something which looms in every few years. It's more of a political kind of a clash than anything else. But this time it may really hurt because Trump is saying if they lay off workers or they put workers on leave because the US federal government will shut down over the passing of a bill, this time they'll be sacked permanently and will not come back.
Yeah, I mean, he's very clear with his stance, and I don't think so he wants to budge.
Hey, I think this is going to be an exciting one.
Well, Vance is saying that US is headed for the shutdown. So that is happening now. So the punishments, if they are to come, are definitely happening. But interesting moves even otherwise, right? I mean, punishing or talking about 100% tariffs on movies made outside the US. I mean, will the Marvel superheroes now only save the US and not the rest of the world?
You know, what we're hearing is that the impact of any from the Indian perspective was on the Telugu film industry, if at all, because that is a big market. Maybe if you cut more H-1B visas won't be as big, but there is a huge local market there that wants to watch these movies made in India and from this film industry. Anyway, but what we're seeing every day looks like it's from the movies, no doubt. And here's what's happening. US markets have risen in trade as AI stocks have rebounded. Let's take you through the indices this morning and what we've been seeing. You'll see all of them in the green, really, with the NASDAQ about 0.5% up. Meanwhile, US VP J.D. Vance is saying the government could be headed for a shutdown and government job losses could be permanent. Even key data may not be released on time if the US government shuts down from Wednesday. In fact, let me see if we can play out that J.D. Vance bite and what he said. Meanwhile, US Treasuries have dipped ahead of jobs data, the 10-year at 4.14%. Gold has hit a record high on the fears of a government shutdown, and gold prices are seeing no ceiling. Oil prices, meanwhile, have dipped as the OPEC Plus plans more production expansion, and Brent is at the $67 level mark. I'm going to pull up Asia very quickly for you and show you what's happening there. Before we move ahead, sort of mixed trade this morning with the Hang Seng up in the green, Shanghai as well, Nikkei marginally down in the red. Implied open for India is looking at a very soft kind of a start, just 8 points up in the green. But listen in to what Vice President J.D. Vance said when he believes the US is headed towards a shutdown.
Now we have to remember, they're very frustrated. They say that they're very frustrated about the fact that this negotiation has not taken place until today. But if you look at the original thing they did with this negotiation, it was a $1.5 trillion spending package, basically saying to the American people, we want to give massive amounts of money, hundreds of billions of dollars to illegal aliens for their health care, while Americans are struggling to pay their health care bills. That was their initial foray into this negotiation. We thought it was absurd. We told them it was absurd, and now they come in here saying that if you don't give us everything that we want, we're going to shut down the government.
And this is something that the street will be watching out for in terms of what happens if there is a US shutdown and the repercussions. But Indian markets, we ended pretty flat, and the day was absolutely volatile and range bound. In fact, if you talk about Nifty, it's posted its 7th straight decline. In fact, markets actually attempted an early upside after a positive start, and the persistent selling that we've been seeing on intraday rallies, that is what actually dragged Nifty to close near the day's lowest levels yesterday. Now, from the day's highest points, if you see Nifty and Sensex, they've shed nearly 200 and 600 points respectively. Talking about the near-term headwinds, you're talking about the uncertainty around the US-India trade deal, the sustained weakness that is coming in with regards to IT and Pharma. Broader markets, your mid-cap and the small-cap index, both of them, your mid-cap actually gained 0.3%, whereas your small-cap index slipped slightly. Sectors, you have oil and gas, PSU banks, energy and real estate. All of these actually gained in trade. It's interesting to see how oil and gas actually rebounded after 5 sessions of decline. And you had the PSU banking stocks that gained ahead of the RBI's monetary policy outcome. The defense index, the top loser, which shed nearly 1.2% in trade, and you had the media index that slipped nearly 1%. A lot of strong demand that was witnessed in the cables and wires sector yesterday, and strong demand across infra, EVs, data centers, and real estate, and that is what is working for the cables and wires sector. In terms of FI/DI flows, absolute divergence is what you're seeing. In fact, the DIIs have infused nearly 55,000 odd crores in September, even as FIs have offloaded nearly 30,000 crores so far. Let's quickly look at the Nifty top gainers and top losers in trade in terms of yesterday's session. If you can pull up those names on the screens, you will see the kind of boost that you saw in terms of the markets. In terms of the top gainers, you had names like Titan, Wipro and SBI, gains in that range of almost 1.5 to 2.2% that came in there. And in terms of the top losers as well, it was interesting to see, one of the stocks that was on the radar, we had a trend, but this is Biocon, M&M Financial and Voltas, that was from the broader markets. iSure, Apollo Hospitals and Nestle, the top losers in trade today. A lot of individual stock-specific action that we saw in the broader markets. No major sectoral trend that emerged on that aspect. But I think any positive news, you saw that up move, and any negative news, you saw those huge gyrations that did come in. And that was the flavor of the session yesterday, Neeraj.
Yes, indeed. Now, just before we get to what the trade setup of the day today is, I think it's important to highlight one more thing that has happened. And the question mark that is floating around on social media is whether daily expiries are back. Because NSE IFSC, viewers remember, has introduced daily expiries from October 13th. Now, just keep in mind that these expiry trading is available, daily expiry trading is available for global traders, NRIs, global traders, not for domestic Indians, because it's happening on the IFSC exchange and therefore not on the local NSE exchange. And guys, I don't know how you think about it, but I think the intent seems to be not to expose Indian retail to the daily expiries. And it's I mean, there are twin effects to this. One, yes, direct exposure is not there, so therefore you can't bet on it. But if indeed the Jane Streets of the world are impacting market volumes and thereby movements, can that happen via these expiries any which ways? And therefore, why people may not have direct exposure to options, they'll still be subject to the gyrations that happen in the market because of this trading.
So I have some thoughts on this, if I
Of
can
course.
just come in. I think it's a cop-out. And it's a way to, in a sense, give the exchanges something, because you shut down a huge tap of flows for them when you reduced expiries. There is talk also that even weekly expiries could go. And then you're, in a sense, saying that you think foreign investors have more sense than Indian investors. That's why you're protecting them and not foreign investors. So, some views over there. I mean, some of the commentary, and you're saying this is all a buzz on social media, some of the commentary was also as simple as, okay, let the foreigners lose money and protect the Indian investors. But my point is, it should be an equal playing ground. Either it's bad for the whole space or it's not.
I think the impact it could have on volumes and the kind of gyrations that we could see, that is what we'll have to watch out for, because the volumes from the overseas market is going to be important over here. I think if we get that number to understand what is the quantum of participation by overseas investors, that is something we need to watch out for.
I think this could go up, right, from the foreigners' side. Now, like I said, there is a morality argument creeping in here, and you can't always logically argue against a question that is put up, but we're saving the Indian investors. So it's difficult one to really bring out a counter argument against as well, because there is data, reams of data, which show that Indian retail, 92% of the Indian retail is losing in the options side. So, you can slice and dice this both ways, but just keep in mind, viewers, that this is not coming in for the local traders.
Yeah.
It's coming in only for global guys. So
some jugaad will be found.
October 13th, that's the one thing. Let's see volatility moves up after that. So that's one. Okay, very quickly to the trade setup, right? I mean, now we've been mentioning that it's very difficult to call for a bullish argument until the dust settles around the India-US trade deal. The bullish argument might well be that since November is close by, at some point of time you will have something, and the PCR is at 0.7 times, roughly 0.7 times. So therefore, some dust settling might actually make markets, and because some dust settling has made the markets light, maybe now we do not fall with a lot of gusto. We kind of have measured downticks, if you will. The advice is to not go long, but now you need to be careful with leverage shorts as well, because there are a lot of indicators which are now no longer in the extreme greed zone. Like I said, PCR is where it is as well. Be careful with naked shorts as well, except for if you're betting on specific buckets wherein you are completely convinced that things might go. I think a lot of people got caught on the wrong foot on the oil marketing companies yesterday, right? Because there were shorts in the system, market is looking weak, oil is higher, and boom, OMC started to rally, and that may well continue with the oil prices dropping. So that's the point I'm trying to make. You need to be careful with leverage shorts as well. The one bucket that is starting to make its way on investors' mindset is the non-large cap IT. Now, we heard Pankaj Murarka yesterday, who was on Talking Points, say this is the best time to invest into IT names. His calls may have been different, but Somit yesterday, when he came and spoke about what dealing rooms are recommending, there were two mid-cap IT names that came into the dealing room conversations that HNIs were building in long positions. In a bit, I'll also talk about some of the brokerage calls that have come in on those IT names as well. So certainly the not PSU banks. I don't know why we're tagging the PSU bank index. I'm saying the non-large cap IT names are starting to come into the investors' buy list. So keep an eye out for that bucket. So leave out the Infi, TCS, Wipros, and the HCL Techs of the world. Look at the other bucket, and that is what is coming in. So keep that pocket at the back of your mind.
Just before I get to the factors that I'm seeing through the day, guys, I wanted to know your view on something which really caught my eye. And we covered the Tata Capital IPO in detail yesterday. But again, the question of what happened in the pre-IPO space with this company. I mean, those stocks were going in the pre-IPO in the private space, or whatever you want to call it, as high as $1,000. And then you have the price band somewhere around 350, 325. You have a 600% loss on that. For anyone who got in, I mean, maybe it is time that regulator steps in and says that there has to be some clarity.
And Sebi, I think I remember a conversation either with NDTV Profit or on a common podium where he clearly indicated they are coming up with some norms or a mechanism with regards to the pre-IPO.
But there's nothing stopping it as of now.
Nothing stopping it as of now.
There is still enough, stakes out there in the private space, and you don't know how they're going to list and at what price.
Yeah. So, I mean, I think one of the arguments again will be that it's a market that is getting developed. I don't know if you can impose controls at this stage. Maybe you should, but usually that happens with the regulatory actions, that it's when the shit hits the ceiling is when the action comes about. Let's see.
This morning. All right. What has actually been positive is the IIP data. Depends on how you look at it. For August, the industrial output has risen to 4%. This is versus 3.5% in July, but the estimates were a little higher, 5.1%. What's really saved the day would be mining. and manufacturing. Infrastructure goods output growth was at 10.6% versus 2.7%, so there was a big jump up there. Mining is where the action was, output growth at 6% versus degrowth of 4.3%. That was very positive as well. For the manufacturing sector, output growth was at 3.8% versus 1.2%. For the electricity sector, output growth was at 4.1% versus a degrowth of 3.7%. So electricity and mining has moved it up, can be seen as positive cues. Meanwhile, it's the monthly expiry for the Nifty today. Since we've been talking about Nifty and expiry, a bearish bias is maybe because of sustained selling pressure. There's no doubt about it. There is zero conviction at higher levels that can sustain gains. Every intraday recovery is being swiftly sold into. Most immediate and crucial downside support now at 24,600. Stronger support expected at 24,500 to 24,400. Key resistance, the first important level to track on the upside is 24,790. A major hurdle between 24,800 to 24,900. Overall bias, of course, continues to remain bearish unless we have a close above 25,200. Frankly, right now, that's looking quite far away. Key index to watch as it triggered the Nifty fall on Monday but showed a brief spike towards the close will be the Bank Nifty. 54,500 remains an important resistance on the upside. Decisive move above it could lead to an extension of the up move, support at 54,280. Puneet joining in for more. A lot of action expected today as it's the monthly expiry for the Nifty, Puneet.
Well, definitely. And subsequently, we have seen the open interest also fall for all these, in this particular point of time. But largely, it's a very important day today as well as tomorrow. As you rightly said, there has been some shorts that have actually been cut both by foreign investors as well as domestic investors as well. And subsequently, while that could be taken as a positive trigger, it likely just remains as a key aspect of a tentative move essentially at this particular point of time to just reduce your current short positions and stay away, at least in terms of not adding any more longs at this particular point of time. You've seen that the Nifty 50 largely below the 24,700 level. It is consistently been under pressure over the last 7 days, and because of that we've had a subsequent impact on Bank Nifty as well. Very interestingly though, this will be an index which will be in focus tomorrow because of the MPC meet outcome. Irrespective of those aspects, over the last 1 month we've seen very interesting moves in the Nifty Bank as well, because specifically on the Nifty Bank we've seen stocks like ICICI Bank actually down 4% in the past 1 month, while something like an Axis Bank is actually up in this particular point of time, while HDFC is largely flat. So we've seen some smart money moving into stocks like Axis Bank, but currently an index that's largely will be in focus tomorrow as well. Apart from that, in terms of foreign investor positions, we've seen some kind of selling in Nifty futures, while index options and Nifty options has seen some buying, while essentially the index long is now at 16%. The highest has been over the last 3 to 4 weeks, where we were at roughly about 8%. So that seems to be the trajectory of the markets. But with IT, with banks, as well as with something like an autos, that'll be in focus tomorrow because of the sales number and a bumper number expected for all players. Very important that these pockets have to be kept in mind of investors as well.
Okay, so big day to watch, and actually a lot of stocks to discuss as well. It was tough picking the top three, at least for me. So first on my watch list would be Tata Motors. Tata Motors has had an analyst meet, and this was important because so much has been happening from JLR. So the street has also looked out for some clarity. These are the big takeaways. They say that the post-hit from the cyber attack in September 2025 will have impact for some time. JLR will resume production in a phased manner ahead. JLR demand outlook stays challenging in the near term for Europe, China and US regions. For the India PV and CV industries, GST cuts will aid better growth, and outlook of a high single digit in the second half of FY26 is coming in. As far as Iveco is concerned, that buyout, that is ex-defense buyout, will be EPS accretive initially and should become meaningfully accretive in 2 years. Management has upgraded the FY25 to FY30 CV industry outlook to 6 to 8% from 5 to 7% earlier. So yes, an up but a pretty small one. Management is expecting double-digit CV industry growth in the second half. They saw 25 to 30% booking growth from 5th, September till Navratras. And the industry has seen 20% growth. So it's an uptick on that, which is why a thumbs up on it. The third quarter will be seeing higher discounts to push volume. After a flat H1, the management expects 7 to 8% and sub 5% PV industry growth in the second half. Here's what Jefferies is saying. They've maintained an underperform though with a target price of 575 rupees. They say JLR is still recovering from the cyber attack. There's a strong uptick in PV bookings. They're sanguine on India CV demand and margins as well. The second stock I'm talking about, again, it's an analyst meet, which is what is going to be the key driver, is Welspun. Now, this is important because it's the first analyst meet after an imposition of 50% tariffs by the US, and we're now getting details of how exactly Welspun has dealt with it. Watch out for a spillover effect on the entire textile space, because if a large company has had to deal with these terms, others will have to as well. So here's what's happened. Welspun has absorbed the 25% tariff while the rest is being borne by customers. Welspun has prioritized market share versus near-term profitability. Retail demand in the US remains steady, they say, as retailers have not passed on the full tariff impact. They remain cautious on building inventory, and this should result in a 15 to 20% decline in US revenue in the second and third quarter. Management expects a washout of profitability until the 25% tariff penalty is withdrawn. And unfortunately, there is no clarity on when that will happen. Here's what Jefferies is saying. They've maintained a hold, but they've cut the target price to 120, still above its current market price. They say tough times until the tariff issues are resolved, significant near-term challenges in its US business, washout of profitability in the short term, and 15 to 20% decline in US revenues. But management is confident of recovery once that tariff is withdrawn. Management has also said that they're focusing now on the domestic business and the impetus they're getting from GST. There's no clarity if that's going to recover what they've lost in terms of US market share. For Man Industries is the third one, and this is quite astonishing actually. And I wonder if we can pull up the one-year stock price of Man Industries. It's a clear thumbs down because of SEBI's action and serious corporate governance questions that have come in. This is a stock which has gained 14% in the last 12 months. And the downtick is fairly recent. SEBI has banned Man Industries and top executives for 2 years. They've barred the chairman, MD, and ex-finance chief from markets. They say the company failed to consolidate under Merino shelters, misrepresented related party transactions, engaged in round-tripping of funds to hide true financials. There's a penalty of 25 lakh rupees each on the company and 3 executives. It's not the penalty amount really, which is key here, but this is a company that has been raising funds. And these are serious issues which have come in. And this is the second day in a row that we're talking about corporate governance issues. Yesterday was PTC India Financial, who's, by the way, come out with an exchange filing saying they didn't even know these independent directors were upset, etc. But this is a serious one.
And you had a KRBL a couple of weeks ago.
KRBL
Likewise,
as well, yeah.
Independent directors resigned on the back of corporate governance issues. And I think SEBI is going to be really strong with this. And Man Industry is a 45-50% up move in 6 months.
Yeah.
Right?
The one-year chart was 14%, but yeah, in 6 months it's been...
Yeah. So the uptick is pretty strong on the back of the fundraise and the plans that the management had given out. So I think the pressure absolutely inevitable in today's
session. Just to put it out there, we're very happy to hear from Man Industries. Our teams are reaching out to you, but an appeal here as well. Come and explain what's happened. I think your investors deserve to know.
Absolutely, investors deserve to know what has gone wrong. But on my list, 3 stocks, BEL. You know, that has been one stock which has been in the limelight on the back of order wins. Now, they've secured additional orders worth little over 1,000 odd crores. And this is since the last disclosure that was made on the 16th of September. In fact, yesterday we already spoke about another 30,000 odd crores as well. This contract covers a wide range of defense requirements, including electronic warfare, system upgrades, then defense network upgrades, tank subsystems, communication equipments, et al. Now, BEL has actually not disclosed the details of the clients from whom it actually received the orders, so watch out for this one pretty closely. Godrej Agrovet is another one where SEBI has now warned the company over delayed disclosures in Aztec Life Sciences deal. They've received administrative warning as well, and what they've said is that the company failed to comply with disclosure requirements under the SEBI Regulations Act. The lapses were covered, the lapses actually covered 4 separate instances of acquisitions on February 9th, 2017, in March 2019, February 2020, and then yet again in March 2020, because of which they've cautioned the company to ensure strict compliance going forward. The company has clarified that warning will not have a material impact on its financials or operations. So watch out for this one as well. And very lastly, from the logistics space, you have Blue Dart and All Cargo Gati. Both of them have actually taken a price increase. Blue Dart will be increasing average shipment prices in the range of 9 to 12%. This will be the 1st of January effective date. All Cargo will be implementing a 10% price hike as well for their express distribution services. This is also effective the 1st of January. The reason why both of them are doing this is to bolster infrastructure and workforce to meet the increased demand of the festive season, and they are implementing strategies to improve operational efficiency and deliver seamless logistics services. So both these counters in focus as well.
Okay, the 3 ones on my list. Our first one is Hindustan Zinc. And the reason I bring this up is because it's a key beneficiary of the uptrend in silver prices. As per an MK note, consensus expectations trail the strong silver move. Remember, silver at $47 per troy ounce versus 34 in Q1 versus 30 in FY25. So there's been a substantial uptick in the very recent past, and therefore that's interesting. Silver contributes to about 15 to 20% of revenue and 40% of profitability. I analyzed the Q1 numbers. Can we stick to the numbers? I analyzed the Q1 numbers of Hindustan Zinc to try and get these percentages, that it is 15 to 20% of revenue and 40% of profitability. And remember, viewers, global peers like Fresnillo and Grupo Mexico have already re-rated YTD. It is Hindustan Zinc that hasn't made a move. And look at the price moves. Fresnillo, YTD is up to 57%. Grupo Mexico, 57%. And compared to that, Hindustan Zinc at about 5%. So it's not a very large move that has happened in Hindustan Zinc already, and which is why maybe brokerages are constructive. You do your own research and try and figure out, but just picked up something interesting on Hindustan Zinc, so I thought I should highlight that. The other one is Coforge. Now, you remember we were talking about how mid-cap IT is coming into focus. CLSA's initiated coverage with an outperform rating and a target price of 2346 versus the current price of 1552. That's substantial upsides, right? Now they say there is able leadership. It's well incentivized with the company, with ESOPs, and has a strong track record. Derives 2/3 of its revenue from the financial services and travel verticals. And CLSA forecast an FY26 to 28 revenue, EBIT and EPS CAGR of 15, 16, 22%. CAGR is the compounded annual growth rate, which means CLSA is saying, let's just stick to this plate. CLSA is saying that their EPS of Coforge will grow 22% year after year for the next 3 years. So keep that in mind. They are very, very constructive here. And by the way, Morgan Stanley has also come out with a note on Coforge. They maintain over the target price of 1880. Their tactical buy suggests that the share price will rise relative to the country index over the next 60 days. So tactical buy and a fundamental buy for Coforge today. I want to keep that stock on your radar. Maybe it rallies. And just sticking to that, I mean, there is also a note that has come out on emphasis, since we are talking about mid-cap IT, Morgan Stanley has an overweight rating in the target price of 3625. Last but not the least on my list, I was toying between Avenue and Dixon. I've chosen Dixon right now. We'll talk about Avenue as well, maybe with Tamanna. But Goldman Sachs has come out with a note on Dixon, and the reason I bring it up is because Dixon was down 5% yesterday on news that maybe, just maybe, the US government may impose tariffs on consumer electronics. Now, Goldman Sachs says that they expect a 4% quarter-on-quarter growth in mobile and EMS division for Dixon versus 15% guided by the company for Q2. If this were to happen, yes, it will be a soft Q2 for Dixon. Let's see if indeed it turns out to be that way or no. But of course, the stock was down yesterday on other news, but this could set, well, a further flutter amongst the bulls of Dixon Tech.
So flutter as in they're going to run in the opposite direction.
No, I'm saying the bulls could actually, I mean,
come
if
back,
they indeed
come back to charge.
No. I'm saying if they do only 4% quarter-on-quarter growth versus expected 15, then it's actually further case for some nervousness.
So bulls की तबीयत खराब हो जाएगी. See, sometimes, in Hindi, you can just say it as is. We have a great story on Trent, but before we go to that, I'm just going to ask for your indulgence to talk about a couple of more things that caught my eye. I thought this point that Motilal Oswal Mutual Fund has bought Bharat Forge shares nearly 378 crores was important. We've been talking about Bharat Forge and the hit that they've had from, the secondary hit from US market tariffs, which we don't really know if it's coming through or not. So Bharat Forge is one that I would say keep on your radar. Avenue, the only thing that I found interesting apart from some new store in Delhi, that's not really the case, but they are raising 100 crores short-term debt and have opened that new store in Delhi. So Avenue is another one that you may want to watch. But talking about the retail space, let me go across to Mahima for this special report on Trent. It's a deep dive on the stock, which somehow seems to have gone from darling of the market to people wondering that what's happening with Trent.
Absolutely, Samana. So it's been a year since Trent has been included in the Nifty 50, and since then it's fallen 43%. Year to date also it's down 33%, making the worst performer on the Nifty 50 index. RSI also trading below that 30, marking it in the oversold zone. So we'll take a look at as to what's not working for Trent. Firstly, the growth rate has declined from a 50% to a 20% in the last 4 quarters. We've seen as to how YOY growth was over 50% for Trent in 2024. That has come down to around 20 to 25%. In terms of valuations, that's always been a concern for Trent. Start of 2025, it was trading at 101 times. The trailing 12 months is right now around 106 times. Current PE at 83 times. 5-year average of 131. So it's nowhere near to cheap where valuations are concerned. Plus, FIs have been selling the counter since its inclusion in the Nifty. It stood at around 24.43% in March 23. It went to around 27% around September 2024, but has come down to around 18.4% as of June 2025. So FIs have been selling the counter slowly and steadily. In terms of the ANR consensus that's there on Bloomberg, this is an interesting one. Despite of this kind of selling happening in Trent, a lot of analysts are still bullish on the counter. There are 17 buys right now, 5 holds and 4 sells, and a return potential of 27%. Macquarie having the highest target price of around 7,200 for Trent. Now, what is making analysts exactly bullish? That's the real question. Firstly, analysts are expecting, and this is in line with what the management has already guided for, a 20 to 25% sales CAGR over medium term. That's around FY20 till FY28. This is what they're expecting because of the kind of aggressive store expansion that the management has already guided for. Plus, steady margin expansion is something that they're looking at going forward. They're adopting a lot of AI in their business, which is kind of taking their employee cost down. Plus, they are foraying into newer things. Recently, they launched something called Burnt Toast, which is catering to the Gen Z and newer audience. So they're tapping into newer and younger markets as well. HSBC believes that valuations at this space right now, with the kind of growth that Trent has already guided for and is penciling in, is justified. And in terms of the other factors that have been doing well for Trent includes your revenue per square feet has been steady despite of the aggressive expansion that the management has taken. Plus, operating cash flow has also been healthy. Plus, this is an interesting one because Zudio's share in home market is lower than other retailers in different countries. For example, Uniqlo in Japan has a market share of around 14%. So there's still a lot of runway of growth for something like a Zudio. And lastly, ROC has also been improving because from a 9% in 2022 to a 31% in 2025 is what we've seen in terms of improvement in ROC. So this is the overall view of what's happening with Trent right now.
Fantastic. Thank you for that very, very detailed look at Trent. And in fact, we're going to speak to someone who tracks it so closely, has a great note out on it as well. Jignanshu Gaur, Director and Senior Analyst at Bernstein. Jignanshu, very good morning and great to speak with you. You are optimistic on Trent, but let's start with where you think the problem began, where the last 4 quarters has not been up to the mark.
Thank you so much, Donna. It's always a pleasure to be here. I think there were 3 simple reasons why the problem for Trent from a stock price perspective began. The first was on its revenue growth numbers, which were completely burdened by the expectations. The expectations were to continue a 40-50% growth rate for a while, and that has crashed from 100% to 50% to 40% to now 20%. That's from number one. Number two, the lead indicator for their growth was store additions. And over the last 2 quarters, the number of stores that they've added has also been materially lower, which has dampened expectations for the future. Number three is the lookalikes similar to Zudio, which have come up in their micro markets where Zudio has strengths. So that gives the impact of competition, and that all three put together create a narrative challenge for Trent as well. So I think those are the three narratives which have turned the tide for Trent after its inclusion in Nifty last year.
Okay, then the question of, I suppose, remains, Jignanshu, why are you optimistic? Because the fact is that the margin mix is not looking like it's going to change anytime soon. I think you're penciling an improvement for the fourth quarter of 2026.
Yes. So I think the growth has bottomed out, which is why the expectation is positive for the stock. Why the growth has bottomed out? Because there were certain one-time issues that the Trent had, but also it was about resetting of investor expectations. We think that is over, and right now the expectations which are penciled in of around a 25% growth rate for the next 1 year or 2 years is reasonable. On the margin front, we believe a large part of their margin improvement are structural and hence sustainable. Those improvements on the back end have not been done by any other player in the industry in India so far. Right? Which is why at the scale at which Zudio and Westside operate, they are able to throw in 11.5% of operating EBIT margin, which is one of the best in the industry for being a value retailer. So the third part is we still believe store expansion has potential. The slowdown is again temporary because the larger stores which they need in the kind of cities which they need, there is a higher lead time for store opening. And that lead time, I don't think it was anticipated by us or by the company. And hence both the performance of the company and the stock price has suffered. So revenue bottoming, potential for steady or slightly expanding margin and store growth coming back. I think we are it's an oversold part of the cycle. Maybe we see better times ahead.
Okay, so Jignanshu, morning, Hiral here. You are saying you will see better times for Trent. So a good opportunity for investors to buy into right now. What should an investor who's already holding a Trent with the anticipation of outperformance do? Are you expecting those levels back again, and how soon? What would your immediate target price be in terms of the time frame and the next level that you would be tracking?
So our 12 to 18 month target price is around 6,100 rupees. Today it is at 4,800. Given that the short-term impact for the company may not be positive for Q2, right? Like we believe that, and we've written this in the note as well, that Q2 expectations will remain muted. However, growth is near bottom. So the recovery and the beating of expectations from the company should start happening Q3, Q4 onwards. Given two things: one, broader consumer environment will turn, their store openings which have been in the pipeline should materialize as they have in the last 2 weeks. We see a much higher store growth for Zudio and Westside both. And we also expect some impact from the GST reduction to support Westside revenue growth. So all of those combined, I would say Q2 should be soft, but we expect the full year to still be a good number at around 25% revenue growth, which makes recovery very likely in the stock price from Q3 or Q4 onwards.
Jignanshu, one quick question. I'm comparing Trent to Avenue Supermarts journey over the last 4 years that Avenue has had, right? March 2021 to March 2025 or trailing 12 months, profits have moved from 1,000 crores to 2,700 crores. The stock hasn't, trading at about 100 times PE. Trent currently is at 100 times trailing PE as well, right? Could it well happen that despite the growth numbers that we're talking about, because of the price earnings multiples the way they are, that the stock may just stagnate instead of moving up. Why shouldn't it if there is a peer which has also had the same fate in the last 3-4 years because of expensive valuations?
So Neeraj, one challenge I have to you is I don't think it's because of high valuations that Avendus Supermarts has not given returns. I think it's because its business model was fundamentally threatened last year. And before this business model was threatened with quick commerce, right? And the news and the performance of quick commerce players, it was at an all-time high. So it did give returns till I think for 5,700, if I'm not mistaken. So that threat does not exist for Trent, given its product and value proposition to customers is not currently being replicated by anybody else. When I say there are lookalikes in terms of competition, it is not an existential or a business model issue. Right. So I think the flywheel for Trent, is much stronger right now than it was for Avendus Supermarts a year ago when we saw a significant correction in the stock price.
Okay. So 6,200 or thereabouts pricing, hopefully at some point of time. Jignanshu, quick 20 seconds. It goes to all-time highs as well in the next 24 months, 36 months?
I think it really depends on what they pull out of their strategic bag post-studio.
Yeah, makes sense. Okay, fair call. Thanks so much for putting clarity to all of those thoughts and for joining us this morning. That's the Bernstein view on Trent, a stock which is bought by many. Off late has been stagnating. I saw last, right? Feb of this year was at about 5,000, currently at about 4,700. So it's been stagnating.
There's value destruction, wealth destruction, which has taken place in Trent for sure.
And I think the buying now will come in from new investors, taking into consideration the growth map that Jignanshu is talking about as well. But 6,200, I don't think so is going to be that good a deal for investors taking
that. Bought in 8,000.
Yeah, I mean, 8,000.
Buying it right now, it's good. Come on.
Depends on where you're sitting.
Exactly.
I suppose. We'll take a very short break. Let's just pull up the implied before we get into that break, because when we come back, we'll give you the top trading strategies for the day. Slight improvement in implied open, still a very flat opening. Why is the market so worried? What should you buy into? All of that coming up after the break.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV. Presenting the all-knowing, all-powerful Tech Guru.
Whoa, Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboard
Welcome back. You're watching India Market Open now. Clearly, if you see in terms of implied open, a pretty flattish day is what is indicated. Now it's seeing an upside of around 20 points, but again, no major moves. Let's get in Osho Krishnan, Senior Analyst, Technical and Derivatives of Angel One, and Sunny Agarwal, Head of Fundamental Equity Research at SBI Cap Securities, joining in. Osho, welcome to the show, and Sunny, to you as well. The way markets have panned out in yesterday's session, 7 consecutive sessions of decline. Today, again, your implied open not really doing much. What should the strategy be on Nifty as well as Bank Nifty?
Very good morning, Hiral and Sunny. Firstly, thank you for inviting me on the show. See, overall, we are witnessing a kind of a strong selling pressure from the higher levels, and technically all the significant support zone has been broken down in the last 4 to 5 trading sessions. The day from where we have seen a breakdown below the zone of 25,000. And now it is struggling. The benchmark index is struggling to sustain on the higher levels. Yesterday also we have witnessed a positive opening, but despite that, there has been selling pressure at the later half of the trading session. So I expect that there can be some kind of volatility because of the expiry in the benchmark index and all the other indices. But overall, I expect that on the lower front for Nifty, 24,500 should be supposed as a very strong support on a positional basis. And even for intraday, any dip towards the zone of 24,550 to 560 can be seen as an intraday buying opportunity. While on the higher end, there is a very stiff resistance around the zone of 24,750 to 800, which even coincides with the sloping trend line from where we have seen a strong breakout. Now, the same trend line is supposed to act as a very strong resistance for the benchmark index. So I am expecting that in today's session, dips can be seen as a buying opportunity, but only for intraday. On positional basis, there is a range for Nifty, 24,500 to 24,800 is the immediate range. And any breakthrough between the range can see some kind of decisive uptrend or maybe a downtrend in the coming period. So I expect that once the range is going to have a breakdown, then only we can see some kind of momentum returning back into the market. Now for Bank Nifty, again a similar kind of a view. Although for Bank Nifty, the support is very nearby, 54,200 on spot levels, followed by 54,000 is expected to provide very strong cushion to Bank Nifty. While on the higher end, again, 55,000 should now act as a resistance. So any dip towards 54,200 in intraday should be seen as a buying opportunity, while on the higher end, 54,800 to 55,000 kind of a zone can be seen as a profit booking zone for the day.
Okay. What about the ideas for the morning, Osho?
Very good morning. I have 2 buying recommendations. First one is from PSU banks. PSU banks have started gaining some traction in the last trading session. So Punjab National Bank is one of the picks that I can recommend at current levels. Currently, it is hovering around 109. So one can look to accumulate the counter at current levels. 105 and 106 is a very strong support level. So one should be on the conservative side and keep a stop loss of 106 on a positional basis. And on the higher end, it has a potential to retest the zone of 115 to 116 in the coming period. So PNB will be the first recommendation. Second is NTPC. NTPC have seen a retestment of the breakout levels. It is currently hovering around the neckline of the consolidation breakout level. So I expect the momentum can return in the counter. So NTPC will be the second preferred buying recommendation at current levels. 341 is the last closing price for NTPC. So one can look for buying opportunity in NTPC, keeping a strict stop loss of 334. While on the higher end, I am expecting a target of nearly 352, followed by 354 from a very short-term point of view.
Got it. Sunny, good morning. There's a lot of newsmakers out there, but the one bucket that stood out yesterday were the oil marketing companies. I wonder if oil prices dipping further overnight gives a further leg up to this pack. Are you constructive there?
Yeah, good morning, everyone. Good morning, Neeraj. I think, definitely, I think cooling off in crude oil prices augurs well for oil marketing companies. And again, in terms of valuation, trading at a very reasonable valuation, closer to 5 to 6 times price to earning multiple, dividend yield of 3 to 4%. I think lower crude oil prices definitely will boost and margins as far as the retail fuel sales is concerned. And on the top of that, we have seen an intention of government to compensate oil marketing companies on losses due to the LPG sale, which was in a year prior. So that will also add to an sales as well as balance sheet number. So we continue to remain constructive. And if I have to choose one stock, I think HPCL is well placed to encash on the growth opportunity, and as well as the lower crude oil prices should give an uptick in earnings for HPCL for December quarter.
Okay, all right. So that's the focus on HPCL, but it's that time of the morning where we talk about all of the chatter from the brokerage rooms. Samit Sarkar joining in. What's new, Samit?
The market setup is not that quite strong. 7th consecutive day of losses, 800 points of something that we are down. And yesterday also, if you look at the trade, was quite volatile. Nifty changed direction nearly 4 times in trade yesterday, and that shows the kind of volatility. And however, we did manage to remain above the crucial support level of 24,600. When it comes to stock-specific action, Astral is one thing that dealers have indicated that there are buy flows on promoter desks. In fact, they are saying that promoter has been buying from the open market when it comes to Astral. And yesterday, the company also did meet a couple of analysts. In fact, Motilal Oswal also today came out with quite a bullish note on Astral. And when it comes to Federal Bank, dealers are indicating that there are sell flows on FI desk in trade, and this is largely because of the fact that they're expecting second quarter numbers to be on the weaker side. For Adani Ports, buy flows has what dealers are indicated on large HNI and PMS desk in trade. And yesterday we did indicate about Samman Capital. The stock was out of F&O band, though it has again entered the F&O band today. But dealers are saying that yesterday's move was largely because of short covering, and they're also expecting a big corporate development to happen in that counter. And if you look at the bundle data that came in yesterday, ICICI Prudential Mutual Fund was one of the buyers, and that strong buying action could have triggered the short covering part as well for Samman Capital. When it comes to Coforge and Emphasis, we did indicate yesterday that there are buy flows on FI desk and delivery volumes were expected to be on the higher side, and today there are multiple bullish notes that have come out on both these counters. In fact, Morgan Stanley has come out with a tactical buy on both Emphasis and Coforge, and CLSA has initiated coverage on Coforge with an upside of more than 50% and Bharat Forge was part of our segment on September 26th. There are buy flows on lower levels as what we had indicated, and dealers are also expecting some passive flows. And the bundle data that came in yesterday indicates that Motilal Oswal Mutual Fund was a buyer. They bought nearly 31 lakh shares in trade yesterday.
In fact, we spoke about Bharat Forge, and definitely that is another khabar confirmed with Samit's hit rate continuing to be pretty high there. I'm going to go to Sunny Agarwal, and let's start off with Bharat Forge because that's what we've just been talking about. Some headwinds, but it's not clear yet what is going to be the entire impact of US tariffs and the outlook on a Bharat Forge. How would you look at it after the kind of bulk deal data which has come in and Motilal Oswal Mutual Fund picking up 31 lakh shares?
Yeah, I think, again, as you rightly pointed out, there are definitely some headwinds for Bharat Forge in terms of exposure of business towards the US and the kind of Class 8 truck numbers which we are seeing of late. But what we believe that if you look at the recent order wins for Bharat Forge, also gradually this company is moving towards an defense, and in the next 3-4 years, defense will become a significant contributor to the top line as well as profitability. And that is something which I believe the street is looking forward to in terms of Bharat Forge. So we believe again long term we continue to remain constructive. Obviously in short term the headwinds of exposure to US business definitely remain. But I think in long term the kind of work which the company is doing on defense front will definitely add a lot of value to the shareholders of Bharat Forge.
With regards to where Bharat Forge goes, 2.5% downtick is what we've seen in yesterday's session. But moving on, you have DGTR, which is actually launched an anti-dumping probe against China. Actually, India has been initiating a series of these anti-dumping probes targeting Chinese imports. This has been across mobile covers, solar encapsulants, chemicals. In fact, the mobile phone covers are under scanner after the MSMEs alleged dumping by Chinese exporters. This actually opens in clean energy supply chain for India as well on the back of the solar encapsulants. Energy supply chain is one of the crucial aspects that they're looking at on this front. And the dumping margins were well above the limits, and hence they've done this. On the back of this, if you talk about the impact, a negative impact in terms of Waaree Energies, Vikram Solar, Premier Energies that you should be watching out for. But on the positive side, you could look at a NOSL that will be in focus. Let's quickly take a question with Sunny on this. Sunny, on the back of the anti-dumping probe that has been initiated, what is your view on all of these companies that could see an impact?
Yeah, definitely. I think anything which restrict the import and support the domestic market augurs well for any company. I think the recent anti-dumping duty on solar encapsulate that augurs well for an solar ancillary player. So I think most of the film manufacturer, whether it is Garware High-Tech or some other Cosmo, I believe they may be they have a potential to supply such kind of a solar encapsulate to solar panel manufacturer, and they may benefit out of it. In addition to that, anyway, a few months back we have seen an anti-dumping duty on solar glasses also, so that also augurs well for companies like Borosil Renewables.
Okay, I just want to get your view, Sunny, and I'll come to you, Osho, as well, on Tata Motors this morning. They have given a path to what the recovery is going to be after the JLR cyber attacks, etc. But there seems to be not a very positive view on what the recovery mode will be, more dependence on their outlook for the domestic passenger vehicle and to some extent CV business as well for Tata Motors. How are you looking at Tata Motors right now, Sunny?
Yeah, so again, we continue to maintain our neutral stance on Tata Motors, although we have seen a minor upgrade in terms of domestic business as far as passenger vehicle and commercial vehicle sales volume for the second half of FY26 is concerned. But again, JLR contributes majority of the business to the Tata Motors, and there we are seeing a continuous disruption or headwinds in across Europe, US and China geography, and that is something which will keep the earning growth in check. I think going forward, as we see a demerger of passenger vehicle as well as commercial vehicle business, maybe investors can look forward to the commercial vehicle business as a separate entity, and that can deliver a better value in a short to medium term. On a passenger vehicle side, I think still it's a slightly recovery, slightly 3 to 6 months away, and we continue to maintain the neutral stance on Tata Motors on a consolidated entity basis.
Okay. All right. Just want to take a second to talk about this very important post from Prime Minister Modi. And Prime Minister Narendra Modi is responding to what Donald Trump has announced in the White House on Monday, standing side by side of Netanyahu. It's a 20-point program to end the conflict in Gaza and find an ultimate solution to something which has been simmering over decades. This is what PM Modi says. He says, we welcome President Donald J. Trump's announcement of a comprehensive plan to end the Gaza conflict. It provides a viable pathway to long-term and sustainable peace, security and development for the Palestinian and Israeli people, as also for the larger West Asian region. We hope that all concerned will come together behind President Trump's initiative and support this effort to end conflict and secure peace. This is important because even as negotiations are going on for a trade deal, for a reduction of tariffs, one thing is very clear, that Donald Trump wants to be positioned as someone who brings peace. He wants a shot at the Nobel Prize, and that 20-point comprehensive plan actually, if followed through, could find a solution. It includes immediate cessation of conflict on both sides. It includes amnesty for the Hamas. It includes a pathway to Palestinian statehood. It includes complete demilitarization, a removal of the current government in Palestine and a technocrat-led government, and of course the US support along with Arab nations. So let's see if, I mean, you never know. Bigger things have happened. Yeah.
Bigger things have happened, and I think this entire global concerns which are emerging, a lot of it goes out of the way because though this is a smaller piece out of that lot, but that sentimental impact that does come in just goes away.
I mean, maybe that's bigger with Ukraine, Russia, one would argue. But why I think this is important is PM Modi responding to this at a time when we're trying to fix things with the US becomes important. Very short break. We're coming back with the pre-open rates and a huge NDTV Profit exclusive. Don't go away.
the world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves...
Okay, welcome back. You're watching India Market Open. Completely flat opening that is expected in the markets today after continuously having a bearish trend and 7 consecutive days down on the trot. There is very little action happening, maybe a lot of attention on the primary market, and that's one reason as well. But we've been talking about big governance issues in various companies, and one of them we talked about yesterday was highlighted at PTC India Financial Services. Now we're getting more details on the 3 independent directors that quit on differences with the chairman Manoj Kumar Jawar. Vishwanath and our Mumbai Bureau Chief is joining in for more details on that. So, Vishwanath, what's happened so far is the independent directors put out their version. The company has come and said, we didn't even know they were upset they're going to resign.
Yeah.
But you were learning that there's something much more brewing.
So the resignation letters by these 3 independent directors, which is Seema Bahuguna, Naveen Bhushan Gupta and PV Bharti, they were all identical letters, essentially saying that the environment has become such that we cannot, in all honesty, uphold the corporate governance standards that we are required to do as independent directors, and that's why we are quitting. The reasons were not clear. What we are learning from our sources is that earlier this month, somewhere around the mid of September, there was a very stormy meeting of the Nomination and Remuneration Committee of the board. Essentially, this was because Manoj Kumar Jawar, the chairman of the board, was seeking to appoint an independent director, and this was somebody that he wanted on the board, and he had placed his independent director's name at the last minute, right before the NRC meeting was supposed to come in. And that was not something that is allowed. Actually, if you want to appoint somebody or if you want to recommend somebody's name, you have to do that 7 days in advance so that the directors can come in prepared for the meeting and discuss the pros and cons of hiring this person. So that was the first corporate governance lapse that had happened. The second was that he also warned of consequences when the directors opposed this appointment, saying that there was a reason for these rules to apply, and if PTC India, being the promoter of PTC India Financial Services, was not going to follow those rules, then corporate governance standards are not something that we need to discuss in this boardroom at all. And these consequences, or these so-called consequences that he has warned for, that sort of ticked off these 3 independent directors, and they decided that they need to step down at the earliest. Remember that their term was anyway ending in November, so just about 2 months later. So it's a bit surprising that this came in, specifically in this company, where in the past we've had similar issues, just not too long ago, just about 3 years ago.
Okay, pretty serious, I would say, corporate governance questions coming in from PTC India Financial. Thank you so much for that, Vishwanath Nair, with all of those exclusive details there. And of course, that's a story we'll keep tracking. Just wanted to highlight, another rather troubling trend that we've been seeing in the markets, and this is something we want to put out there for investors at NDTV Profit, because investors need to really beware of the unlisted market. There is no protection, first of all, from a drop in listing price. This is something you want to remember, and we're speaking about this in the context of the Tata Capital IPO price. But this is not the first time it's happened. And it's not only about Tata Capital. There are enough unlisted entities out there right now waiting for an IPO. There is, first of all, no protection from drop in listing price. The lock-in ensures your capital is stuck as an investor. You have to approach this market with caution, and only if you have that kind of risk appetite, the way even some brokerages are palming off unlisted shares is becoming alarming. There's lack of regulation and liquidity, and it's prone to fraud and manipulation. Now, what am I talking about? The issue price for Tata Capital, which was announced yesterday, was 310 rupees to 326 rupees per share. The last traded price in the unlisted market for this was 735 rupees a share. Issue price is at a 56% discount to the last traded price, and is even at a bigger discount, a 71% discount than the April high of the unlisted price at 1,125 rupees. So people have gotten stuck here. Same thing happened in NSDL. The price band was 760 to 800 rupees, 22% discount to unlisted valuation of 1,025 rupees. For HDB Financial Services, the IPO price band was at a 42% discount of its unlisted price. So this is truly something which is alarming, and I'm sure regulators will be looking at it as well. And I want to know, Neeraj and Hiral, what you think about this. That maybe, I'm not saying that everything needs regulatory action, but maybe enough awareness for investors to know people are buying it without perhaps knowing the full extent.
So I think it's becoming a case-to-case based scenario over here, according to me, because the kind of hype that is being created with regards to a couple of the IPOs, everyone is actually looking at listing gains, right? But what is happening is the fair value just before the IPO opens is what gets determined, and that's why people are losing out. A lot of your smart investors probably are actually exiting just before the lock-in starts. So I think that's probably where the game is, and the run-up that has happened till the lock-in, those are the smarter ones, and the retail investors, or even not even the HNIs, I mean, little lower than the HNIs are the ones who are entering little before the lock-in, and they are the ones who are getting stuck.
I mean, I don't know who are, right? I don't know whether the category of people who are buying in the high price is the ultra HNI or the informed or not. But simply put, I mean, it's a market that has made a lot of riches. There are 3 or 4 cases of people having lost money, but everybody trades with their eyes open. I mean, people who've bought into Chennai Super Kings or the NSE in the pre-IPO market as well, all through the last few years, have made lots of money. So some cases of stray losses here and there, 2, 3, 4 names in the recent past. Fair enough. I also think that we're seeing we're calling this at a lot of cases simply because the quantum of pre-IPO investments has gone up so substantially that now you have 3, 4 cases, but relative to the number of pre-IPO stocks or the unlisted stocks that are traded and invested in, 3 or 4 cases is par for the course, I would reckon.
Okay, all we're saying is tread with caution.
Yeah, most
it's
certainly.
tread with caution. This is not a pakka kind of deal.
It is not.
And the fact is that it is being sold like that. My only concern is because, I've seen those WhatsApp messages that get sent, hey, investors, great opportunity for you. Nahi hai bhai.
Be careful.
That's the only point that we're making. Of course, you're all free to make the decisions you want. All right, on to the brokerage call of the day, and we're talking about Coforge. This is a stock that Neeraj also had on his watch list. CLSA has initiated an outperform. And Morgan Stanley has maintained an overweight. So Amit Sarkar joining in to tell us why.
The most important part of this report was the upside that CLS has highlighted. They're expecting a 50% more plus upside when it comes to Coforge. They have initiated rating with outperform rating with a target price of 2,346. Now, as per the brokerage, the company has an able leadership which is well incentivized with ESOPs and a strong track record. And these are the 2 key positives that CLS has highlighted in its report. It also says that the company derives nearly 2/3 of its revenue from the financial and the travel verticals, and management's execution when it comes to both these 2 verticals have been quite strong, and they have built in an expertise in both these verticals which will aid growth for the company even going forward. They also say that having a consulting mindset is quite visible when it comes to the strong order book that the company has reported, and going forward, that is over FY26 to FY28, they're expecting the company's revenue, EBIT and EPS to grow at a CAGR of anywhere between 15 to 22%. On the other hand, Morgan Stanley has maintained its overweight rating when it comes to Coforge. In fact, they have initiated a tactical buy on this counter. They believe that the share prices could rise for the next 60 days. They expect the revenue growth and margins to trend well in the second quarter and in the second half of this financial year. They are seeing limited downside when it comes to their EPS number, and they also see potential in the free cash flow margins going for improving going forward. They also believe that Coforge is a strong candidate for re-rating going forward, is what Morgan Stanley believes at this juncture.
Interesting. Well, as the 7 minutes are settling down, Sumit, thanks for bringing us that note, but Coforge seems to be starting off okay. And remember that bucket or that cohort of stocks is seeing some buying off late. Kunal Shah, senior technical and derivative analyst at Mirae Asset Sher Khan, also with us on the show. Kunal, good morning. Thanks for joining as the pre-open rates are settling and we're seeing some semblance of sanity in the markets for the last couple of days. Is this good enough for people to initiate some fresh trades on the long side, or would you stay short?
Good morning, Neeraj. Good morning to everyone. So as we can say that Navratri didn't start well for the markets. There were 7 consecutive days where we have ended on the negative side for the market indices. And now for the Nifty indices, today, Tuesday, this is the monthly expiry. First time we are going to have the monthly expiry on a Tuesday. So if you look at the data, what has been spanned out on the open interest perspective, 24,800 continues to be a very strong resistance for the market. Till the time that is not taken out, the market will remain in a sell on rise mode. 24,600 is the immediate support on the downside, but once that is taken out, you can expect 24,400, 450 to be tested on the downside. So overall, the trend continues to be on the negative side for the markets till the time 24,800 on a short-term basis is not taken out. So even if you get any bounce towards that 24,750, 800 zone, could be a good opportunity to initiate on the short side. Coming to the Bank Nifty index, here we have the RBI policy coming up. So Bank Nifty in yesterday's trading session has formed a doji candle, which indicates indecisiveness or a stop in the current fall. So probably it might continue to consolidate in a broader range. Even if you look at the open interest data, there has been put writing happening at the lower levels of 54,000, 54,200 as well. So Bank Nifty is stuck in a range. On the higher end, the resistance for Bank Nifty is placed at 54,800. So till the time that is not taken out, Bank Nifty might continue to trade in this broad range where 54,800 is the resistance and 54,200 is the support. So this is a broader range for Bank Nifty. I am expecting Bank Nifty today to consolidate, and maybe we can have an expiry somewhere around the mark of 54,500 because in yesterday's trading session, we saw both the call and the put writers were active at the same strike price. So there has been short straddles which have been written on Bank Nifty, and that is where we expect Bank Nifty to be sideways between this range of 54,200 to 54,800.
Got it. Okay. So what are your ideas for the morning? And Kunal, club that in with a view on Coforge, because Sumit just spoke about it and that is seeing some traction this morning.
I think Coforge, if you look at already there has been a sharp correction into the stock and it has been trading in the oversold zone. So there could be a technical bounce that could kick in. So that would start positive. The resistance for the stock is at around 1650. So you might have a rally towards 1620, 1650. But the entire larger term downtrend is again still on the downside, where the stock had already on the weekly chart had formed a double top, and post that we have been forming lower top, lower bottom formation. So within this downtrend, this is the pullback since it is trading in an oversold zone, can come towards 1650, 1660. Probably from those levels, you can again see the down move continuing. So back could be utilized as an opportunity to exit if you are stuck on the long side or initiate fresh shorts. Coming to the ideas perspective, my first pick over here on the buy side would be Fortis. So Fortis has been one of the outperforming stock. Even in yesterday's trading session, we saw above average volumes on the cash market. Even the rollover data again indicates positive rollovers for Fortis. Shorts have been covered into the stock, and now we can expect further move on the upside. So Fortis is a buy for me with a stop loss of 945, looking for targets of 995 to 1010 on the upside. So I think this could be a good rollover candidate as well, where you can see some swift move on the upside. The second stock is where we are seeing the actual rotation happening in the banking space. So most of your private banks have been underperforming, specifically the two big boys, HDFC and ICIC, and that has been shifting towards the PSU banks. So PSU banks again continues to be in the strong momentum, and SBI continues to be on the buy phase. So SBI again has witnessed a breakout and is consolidating at higher levels. Again, yesterday's trading session, we saw above average volumes in the cash market. So this could be again one more candidate which could see a good up move in today's trading session. So SBI is a buy for me with a stop loss of 855, and targets would be 890 to 910 on the upside.
Okay, so those are the topics coming in from Kunal. Sunny, a quick view with regards to IT and Pharma. These are the ones where you're seeing weakness. Would you be a buyer taking where the valuations are, or would you say a complete avoid?
Now, coming to IT, I think yes, definitely in terms of growth, there are a lot of headwinds, and but again, we continue to remain selective as far as IT is concerned, and investment horizon need to be slightly longer if somebody is planning to deploy a fresh capital in IT stock. So I think tier 2 companies or mid cap names are well placed to grow relatively as compared to the large cap peers. So as discussed, Coforge was already discussed. So that again sitting on a very robust order win recently. We have seen Q1 was very strong in terms of order win, and as the execution picks up, we believe the earnings should start coming in. In addition to Coforge, Persistent is one company which is outperforming the rest of the peers. So these are the two names which you would recommend from IT pack. Coming to Pharma, again CDMO is a place to be in, although there is again a headwind from related to US tariff, but we believe a few players like Anthem Biosciences, or for that matter Sai Life, Blue Jet Healthcare, where we have seen a recent correction due to an exposure to an international territory. So these are the few names which we are recommending from the Pharma basket.
Got it. Okay, Sunny, that's interesting, and we'll talk about Blue Jet after the market opens. Sunny, would love to know more, because I think that's had a recent downtick as well in the last couple of months. So very interesting. But Kunal, if I can pin you down, one for one top idea, and two, if you're still buying an oil marketing company stock today, this morning.
See, I think definitely that would be from the oil marketing space. I think BPCL looks very attractive on the chart perspective. Already the stock had been facing resistance around that 330, 335 zone. There were multiple rejections out there, and in yesterday's trading session, we have taken out those levels with volumes, and we have got a strong closing above that. So clearly the weekly chart looks very strong. We expect the stock to go towards the mark of 350. That is where the falling trendline resistance come into the picture for BPCL. BPCL is a buy candidate for me with a stop of 330 on the downside, looking for targets of 350.
Got it. It's BPCL, Kunal's top call for the morning. Watch out for Blue Jet and a few other fundamental ideas as well. Not from a day trading perspective, but from an investment perspective, that Sunny game. But here's how the markets are starting off this morning. 0.25% higher. Not a bad start. Banks are actually leading. You know, these days we get excited by 0.25% in the green simply because of the last week and the way the markets have cracked. IT should come up on your screen next, and let's see what's happening there. 0.5%. What is sulking is the key question. I think maybe some of the consumer names, we'll get there. Mid caps and small caps should come up on your screen very quickly. 0.25% for the mid cap index, maybe 0.25% for the small cap index. Let's get the heat map up on the screen. I want to see what's losing out today. Okay, consumption it is. ITC is down a little. Tata Motors, Bharti Airtel, those are 2 or 3, that's it. Otherwise, the market is in fine fettle. Titan, which went up 2.5% yesterday, up another 2% today. Frankly, if you look at the last 2 days, Titan has been the stock in the large cap space to watch out for. Hero MotoCorp gains, BEL yet again on that order win, up about 1.29%. Some gains for Asian Paints, JSW Steel, Cipla, Hindalco, Ultratech. So that's the long and short of it. Frankly, there are not too many losers. The heavyweights aren't sulking really, but the hero of the morning has to be Tata Motors, in addition to, of course, Hero MotoCorp, which is also doing well.
Titan.
Yeah. Oh, did I say something else?
You said Tata Motors.
Okay, Titan.
Tata Motors actually is kidding. I thought after the analyst meet, Tata Motors might have done better. But that fear that the phased improvement of JLR will take place out of the cyber attack, maybe not going down too well. Titan, maybe because of the way gold is glittering, prices are insane. Hero Moto, remember, our very own Danish broke the story about how they're expecting a huge bump up in this festive season from Hero Motor because of the GST cuts. Well, I agree with you, Neeraj. 0.25% higher is something to celebrate in this time of markets that we've been seeing. Let's look at what the broader markets are doing very quickly before we move ahead. You're seeing the mid-cap 150 pretty flat, but at least in the green, about 40 points up. No great shakes. Completely flat on the small cap 250. It's the broader indices that have been flailing for the last several sessions. Let's pull up the sectoral heat map if we can and see what's happening there. Metal stocks are shining this morning, about 1% up in trade. Consumer durables also looking good, maybe on that consumption story which is taking place today. And the Nifty CPSE, not too bad. Pretty much green on the screen. Remember, the IIP data was quite positive if you take a look at it. Realty stocks hurting, Nifty Media, Nifty Next 50 is all that's in the red. So this is not a bad screen at all by all accounts. Let me pull up the India VIX for you very quickly and look at what's happening there. Remember, we've had 7 straight sessions of losses for the Nifty and the India VIX also pairing downwards. The bears easing off in the markets today. I'm going to pull up specific stocks let's look at Blue Dart and All Cargo Logistics first. Blue Dart and All Cargo Logistics have hiked prices, both of them. I mean, strange that after GST cuts, though, the logistic companies are hiking prices, but great for the stocks. Blue Dart looking at a 7% uptick. All Cargo Logistics also hiked prices in the green, but not that kind of an up move. Remember, there's already been a fair bit of up move in All Cargo Logistics. Coforge. Very positive brokerage notes and outperform from CLSA, 1% higher though on the stock. Kalyan and Titan are both I want to see. You're seeing Titan go up. I want to see if Kalyan's reacting as well because of gold prices. And yes, it is about 3% up. Record high at gold prices. Their inventory levels are already adding in value. BEL will revisit. They've got additional orders. Bharat Electronic, the gains have actually paired off since the opening. IRFC, another company that has seen pretty significant order wins, but nothing much happening for the stock this morning. Bharat Forge, this is something we talked about on Heard on the Street section as well. There's an additional stake buy from MOSL Mutual Fund, but the stock is about 1% down. Samman Capital, because of its fundraise news, let's see what's happening there, about 4% up. So some uptick coming in. Man Industries, they've given a clarification just before markets open. It's not helped. 16% down on Man Industries. Remember, we have appealing to the management to come and talk to us and explain what's happening. Wellspun was on our watch list. They've talked about the impact on tariff. They're saying it's going to hit their profitability, but the moment the tariff rolls back, they can make it up again. I think what's also helping the stock today is that they're saying the additional 25% of tariffs is being borne by US clients. They have to absorb 25% of what has come in. So Wellspun actually looking up in the green. So quite a few stocks that are reacting today to specific news, Hira.
Yes, quite a few of them. In fact, a few of the other names, no particular news there, but the DCX Systems, that's seeing some good moves. Cybertech is another one. Strong moves coming on both these counters. DCX is around almost 4.5-5% up in trade. Cybertech, 11% uptick in today's session. You look at a Hindalco, Hinzinc, Hind Copper, because all of these will be in focus on the way copper prices are panning out, on the way silver prices are panning out. Hindalco, 1.2%, Hind Copper around 3% uptick in trade, and the Hinzinc up around 2% in trade. PVR, let's pull up that one because it could probably see a sentimental impact on the back of Trump tariffs on movies not produced. There you go. It doesn't get impacted, but a 2% downtick coming in on a PVR as well. So these are a few of the other names that we should be tracking. But let's quickly get in Kunal. Kunal, the metal pack, Hindalco, Hinzinc, Hind Copper, good moves coming in terms of today's session as well. And anything with regards to exposure to zinc, copper, silver are seeing some strong moves from a fundamental perspective. Would you recommend buying with what the charts are saying?
I think definitely metal as an index has already given us a breakout from that mark of 9,500, 600 zone. And we have positional targets of 11,000 for the metal index and currently trading at around 10,000. So still 1,000 points upside left for the entire metal space. So the entire space is looking very strong. Yes, definitely the top pick over here would be Hindalco, where we are seeing a consolidation breakout that would happen into the stock. And we expect the strong momentum to continue on the upside. So that is definitely a buy, looking for targets of 790, 810 that could be achieved in the very short term. The support for the stock is placed at 740 on the downside.
Okay, so that's with regards to where the metal counters go. But thank you, Kunal. Thank you, Sunny, for talking to us at NDTV Profit and giving us your recommendations and views. But the stock of the day right now, on the negative aspect in terms of reaction, Man Industries. As we know, SEBI has barred Man Industries and the top executives for 2 years over alleged fund diversion. The stock is down nearly 14%. Nikhil Mansukhani, Managing Director of Man Industries, exclusively joins us on NDTV Profit. Nikhil, good morning. If you could first help us understand what has exactly gone wrong, because SEBI coming and barring the company and 2 executives for 2 years over alleged fund diversion, what would this actually mean?
So let me bring the clear perspective on this. This SEBI order is a long-standing order. It was of the past history of 2015 to 2021. SEBI did their entire survey, and this order has been pending since almost now 4 to 5 years. In fact, the company took a call to get it adjudicated, and SEBI passed an order with a minimal penalty, which is hardly 25 lakh rupees on the company. The company getting restricted from trading in day-to-day in other companies doesn't bother, because it does not really, that's not our day-to-day business. So honestly, it's important that this was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. The company, obviously, regarding the barring and everything, is taking whatever legal remedy which will be required to be done. But we feel that this was required because it's been very, very long. It was of the 2015 eras, which I wasn't a part of completely. And it had to be done. We were waiting since a long time. And this does not impact the company's operations, day-to-day operations of any act altogether. In fact, the company is doing well. It's got its largest order book currently. The profitability is higher. Merino shelters was the main reason why this audit started from SEBI, and that is already been resolved. And we've in fact sold the asset and already recovered 70 crores, and the remaining almost 600 to 700 crores will be recovered over the next 4 to 5 years. So overall, with the shareholders, the trading, I don't see any issues. So I feel that it was to be done.
So Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive, because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that first up. Secondly, it's not just about Merino, it's also what they're talking about in terms of round tripping and related party transactions. Can you shed some light on that? Because when you say that you weren't involved, but the management was the same, right?
Correct.
Your name has been mentioned, right? Because I believe,
I was the director.
Exactly.
Yes. I have been the director, obviously, but I took over the complete operations in 2020-21. But nonetheless, the point is about the round tripping. Yes, there was money given off to the subsidiaries. It was in line with the erstwhile provisions of infrastructure, which we've already claimed also, if you read our reply to this. SEBI is obviously taking a contrary view to it, which they are obviously free to, and we are free to do the legal remedy. All the money which was given has already come back in, including Merino shelters. So we had given it to our subsidiary, and the money has come back. And even when we gave that money, it was given with interest. So as per the provisions of the law, it was done that way. Yes, we were not, consolidating Merino shelters into Man Industries. That was because of the legacy issues between the brothers, the demerger and everything. So that call was taken by us on the basis of a court order. SEBI again took a contrary view to it. And we respect it. End of the day, it's their view, our view. We will do the, whatever legal remedy it is, we will be going for the appeal. But it's been an overhanging issue since very, very long in the company. And we are glad it is, at least there is a next step to it and we can move forward from it.
Are there any related party transactions at that time, Nikhil? And were they, as the order says, misrepresented?
No, they were not misrepresented. In fact, the related party orders were a part of the board meeting. They were given in the board meetings, AGMs, if you pick up the balance sheets and the AGMs, everything was represented. Also, the related party transactions had the interest provisions provided and the interest also paid up. So there was not even and in fact, the matter of fact that when this was adjudicated, everything was already paid off. So not only the principal, but the interest and the principal has come back into the company. And Marino is getting consolidated since FY 23-24.
But the allegation, the crux of the allegation, Nikhil, and I just, I think it's good to have transparency on this and understand what it is. The crux of the allegation was that Marino was not included in the consolidated financial statements because by doing that, the losses at a group level were being suppressed. That is at the core of the allegation, which I think we should address. You mentioned very briefly about a family dispute at the core of it. I request you to elaborate and explain this.
So basically, the family dispute when the demerger happened. So both the brothers, Ramesh Mansukhani, Jagdish Mansukhani, were into the dispute, and both were in the helm of the company that time. In 2014-15, there was a demerger which took place about MIIL and MIPL, Man Infra Projects Limited, and Marino Shelters had come to Man Industries. After that, the other brother started raising claims and everything, and that's why the matter has been in court. So it's basically companies got cleaned out, but because of the demerger issue, Marino was not getting consolidated. There was an order to that context. That's why we were not consolidating. It is a part of all the AGMs and the balance sheet, and the notes are there about it, why it is not getting consolidated. In fact, the matter of fact is that there was only 3 crore rupees differential if the Marino was also adjudicated and consolidated into Man Industries. Now, if you see the 10-year data of 10,000 crores of top line, 3 crores is a minuscule amount which doesn't make any difference whether it be on the profit or the loss basis. And interest of that is already been paid by Marino to Man Industries when it was done. So end of the day, it's a contrary view which was taken by SEBI, which obviously from their right, they can do it. But these are the absolute facts and the numbers which were represented in the order by us also. And this is the absolute fact of there was no monetary as such loss to the company, even if we consolidated it.
Okay. Nikhil, let's break this down. We're talking about the SEBI order which stated that you failed to recognize interest income on loans granted to MSPL, which you, I think, mentioned have already come back in terms of the interest. Okay. Yeah. Secondly, during FY 17 and 18, the loan of around 564 odd crores, the advance that was given to MSPL and was converted into a capital advance without any prior approval from the audit committee or disclosure as a related party transaction. That was giving the appearance of a disguised interest-free loan. Anything that you have reversed on that aspect?
Yeah, so first of all, it's not 576 crores.
Okay.
It's 56 crores.
Okay.
The company had bought a back-end office for moving the operations to Marino because it was a real estate asset and doing commercial business. And that time we had tied up for the commercial development with another developer. So company had bought an asset at that time, and that asset is been already changed and money's already come back into the company. So it was because it was a related party, we had bought the asset as per the current market rate. And accordingly, when it did not happen and all the issues happened, we canceled that particular allotment to the company. We have reversed the money and money has come back into the company.
What about the equity shares of MSPL that were held by Man Industries? It seems they were pledged for the company's credit facilities, but such pledges were not disclosed in the financial statement of FY 19-20 and 2021. Again, violating the Indian accounting standard norms. So this was only about disclosures, or wasn't this something which was really necessary?
No, it was not about the disclosures. Like I said, Marino Shelter was fully disclosed of in all the balance sheets, including all the board meetings. And we have, like we said, we've submitted all the documents to that context. Yes, we were not consolidating Marino Shelters into Man Industries, and that was a call taken. And again, that is recorded in even the board and even in the AGMs. And post the SEBI audit, we took a conscious call of taking a call and getting it consolidated. When we consolidated into Man Industries, by the way, we had to take from the opening book till the completion. So when Marino has got consolidated into Man Industries, any impact you would have seen it, which is not there. So why no one is questioning that if there was an impact, because when you do a consolidation, it is from the start till the end. So that has already been done since 2023. So there is no impact on the company.
Okay. My one question in terms of clarification is the intercorporate deposits and advances given in FY18 that were written off during FY20 and 21, again without requisite disclosures or compliance with Section 186 of the Act. If you would have a clarification on that, were they written off? And if so, why was that done?
No, there was no loan written off to any sister companies which money was given off. Under 186, we were allowed under the Infrastructure Act to lend to our subsidiaries. Even though we were allowed to lend and we have taken the call under 186 of the infrastructure company, they have not taken cognizance to that. And all the loans which were given as an ICD, all of them were recovered and recovered with interest.
Nikhil, what's been the feedback from shareholders? A couple of guys who are long-term investors of yours that I spoke to said that it concerned them. I'm sure you've been contacted by people as well. The stock price today fall says that there has been some exit that would have happened too.
Yes. Obviously, it concerns when the order is, though there is no financial impact on the company, the shareholders, it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date. And we are keeping monitoring very, very close, and all the related party or any we have stopped completely since 2021. And this is to, interest more shareholders, and which we have seen over the last 2 years, with where we have reached from where we were. Today we are, the order book is the strongest, which was never been the case. We were always trading between 1,000, 15, 2,000 crores of top line. And today we have a 5,000 crore order book already in line. We have managed to, remove the assets which were not performing and generate that income as well into the company. And looking forward also, we will be doing the same. So yes, obviously this affects us, but it has been a long time overhang for the company as well. And by paying 25 lakhs and getting this matter disposed of and getting it over and done with, we can look forward now positively. So I think it was to be done someday or the other. It's happened today. It was supposed to happen someday. And yes, we will fight for our legal rights wherever we feel the order is not in our favor, and we will do the needful.
Which are the points that, you mentioned you have a difference of opinion with SEBI, and it's very interesting to see a difference of opinion with a regulator, right? Which are the points where you have a difference of opinion, number one? And number two, what is it that you're going to challenge and how?
There is a list of differences. I don't think it's the right thing to put it across on national TV. But there's whenever there is an order against you, there will be disputes, there will be differences, and which is very normal. I think that I will leave it to my lawyers to put it across and put the appeal in SAT. And we know where we have all the documentation, where we are strong, and we know that the paperwork which was disregarded and not considered by SEBI. So we will do the remedial act, and the remaining amount of the payment of 25 lakhs, which is inconsequential to the company's financials, we will do the needful and move ahead.
Nikhil, I just want to go back to something that you said earlier when you said that SEBI has said what it has, but you have a difference of opinion. My only question here is that this is the regulator. So it's not quite a difference of opinion. What are the next steps? And how keen are you to prove that some of the things which I've said on round-trip PIC and related party transactions are not really the case? How keen are you to pursue this legally? Because if it's just the fine can be paid and you can move on.
Correct. So we are definitely going to appeal whatever differences we have on the order, and we are very confident as we have all the documentation in place. Most of the related party transactions which have been already squared off and which were with interest, and also we had taken the 186 under infrastructure was disregarded by them. These are the three major points. Merino shelter was one of the major points for them, and which started the whole audit by SEBI, which is already been consolidated, which is again not being considered in the order, as it is a past, obviously, 2015 to 2021. But for us, it's nothing to worry about because it's already been consolidated. There's no impact on the company. So I don't need to prove that because it's already part of the consolidation. The other facts which were disregarded by them, we have enough paperwork and we have this. So we will be doing the legal remedy, and hopefully soon I will come up and explain that once we get some positive order in that context.
Nikhil, who are the auditors during this point of time when these allegations have cropped up in the SEBI order, the time period thereof? Has there been a change in those auditors? Is there some feedback from your stakeholders about a need for further change in the auditors at all? Can you tell us a bit about that?
Yes, so auditors have been changed already. And the new auditors, yes, there has been a certain feedback of upgrading and, from compliance point of view, from audit point of view, from internal audit point of view, which we've already done. We've, internally shortlisted high-ranking internal audit so that, all the compliances, and it's important, I think, in today's day and age, you need a very strong internal audit that, even we are 100% aware of what is happening, and if there is anything, we can stop it from day one. And I think this is something which we've been working towards, and very soon we will be appointing a very reputed internal auditor, and you will obviously hear about it. And we've been discussing this with our shareholders as well. And we are in line with, better compliances, better ESG, better auditors, so
Nikhil,
that,
Nikhil, sorry, if I may ask, in the interest of time, who are your current auditors currently, and who is going to be coming in as the new auditors?
M&A is currently, and coming in is for internal audit firstly. So once they're appointed, we will.
Okay, but the external auditor, you're not going to change. I mean, you're happy with the current team.
No, external auditors we will change in the next year as well.
Okay.
Year and a half. Yeah.
Okay.
So we are already shortlisting because the tenure is over, and we want to keep someone reputed. So all these matters are behind us. So which is important for our internal compliance as well.
Okay. Sorry, Nikhil, the family dispute which seemed to be at the core of what we saw with Merino, is that now resolved and put to rest?
The family issues related to the company, yes, but related to personal is still going on.
Okay, now I'm just trying to understand if this could have a bearing on the workings of the company in any manner going forward.
No, not really. Not really.
There are no conflicting stakes in the company or in the management of the company right now.
No, there isn't any stake of the opposite party in the company since many years now.
Okay. Nikhil, thank you for coming in and speaking to us at NDTV Profit. One last point from here.
Yes.
Yeah.
Nikhil, the last point that I have over here right now is all of this is the overhang that we're talking about. Now, let's talk about what's going ahead in the future, because you have big capacities that are coming up. Does this in any way affect your funding requirement? Because the expansion that you're looking at, and Neeraj already made a point where he's spoken to a couple of investors where they did think that this was a reaction. They expected some bit of negativity to come in, and it has come in as a shock to them. Will this anyway impact your funding needs?
So the funding has already been done for the existing projects. So whether it be equity raise or preferential raise is already been completed. And the debt portion from the banks has also already been done. In fact, these projects are at its final level of completion, and we should be operational in both the projects by Q4 2026. So I don't think there is any impact related to the existing capex projects. Regarding the shareholders' nervousness for the order, yes, every last 3 years, whenever I've met any institution, or any shareholder, the first question has been, there is a SEBI overhang. What is they going to do? What are the penalties? What consequences? What financial consequences the company will come? Now that we've got the order and it's out there and it's a minor financial penalty, and we get to move on from this. And obviously, we have been improving our compliances of the last 4 years. I feel it's done. We have to move on, and we will do the needful, and we will grow. There is no doubt on that. We will grow no matter what.
Yeah, Nikhil, once again, thank you for coming in and answering questions that we have asked. And all three of us have asked you questions that, anything that we can think that investors want to know. It's shown in the recovery in the stock price as well, while Nikhil Mansukhani has been talking to us. So we appreciate you coming in and giving transparency on what is happening. And of course, key highlights, Nikhil Mansukhani saying that they will challenge this legally as well. It's an overhang which is now out of the way as far as Nikhil Mansukhani is concerned and Man Industry is concerned. Thank you so much, Nikhil, for speaking with us. There you see it. I mean, sharp recovery. When we started this conversation, it was about 14% down. Now about 6% down on the stock. Sharp recovery. And I reckon, guys, that's because he's been very clear and transparent. It's better if more and more promoters come out and explain what is happening. He said that this is because of a family dispute. That they could not get Marino on the consolidated books. Yes, Nikhil Mansukhani was very much involved in the company but didn't have full capacity. I think it's also important that they have clarified that that dispute might be personal, but there is no controlling opposing stake in the company right now.
And a lot of the transactions where he stated have been reversed as well. So I think it's a matter of the fine and the challenge that they put forward. And from a low of 340 on the stock price, it's actually hit a high of around 385 as Man Industries speaks to NDTV Profit.
Yeah, past issues, of course. Let's see if the future is unaffected, and let's see what investors make of it.
I think even that point that he told you that they're going to change the auditors, that's also very crucial. So this is clearly a cleanup that they want to take in place after everything that's happened and using it as that opportunity going forward.
Yeah, most certainly. Well, that's the exclusive conversation on NDTV Profit, and you heard it first right here. By the way, just before we move on to the next conversation, keep in mind that the markets have kind of flattened out, if you will. Banks are doing okay, 0.5% up. The pocket which is sulking is Dixon and the EMS players. Dixon, after 4.5% down yesterday, is down another 2.5% yet again, in at 3% now. So in a matter of, 2 trading days, or not even 2 full trading days, Dixon has lost about 8% of market cap. So keep that in mind. Okay, let's shift focus to macros. So we are now joined by Shantanu Sen-Gupta, Chief India Economist at Goldman Sachs. And Shantanu, thanks for waiting by patiently. We were talking to a management which was under a bit of a cloud, and therefore important to get that out of the way. But thanks for being patient with us. And thanks for joining in today. Neeraj here, good morning. At the outset, Shantanu, the whole mix of, or the whole piece of intersection between global rates and expectations thereof versus what India can do. Because thus far, India has done, or the RBI has marched to its own tune when it comes to the rate cut trajectory and not quite paid heed to what the Fed was doing. But now the Fed has cut once, expectations are more, but the inflation numbers not looking, or the affordability index in the US not looking that positive, and people are skeptical about the Fed rate cut trajectory. What do you think plays on the RBI's minds as they take a decision and communicate to us?
Yeah, thanks, Neeraj. So firstly, on the Fed, our house call still is that they cut twice more this year and then twice more next year. But I think the RBI, as you correctly pointed out, is going to look at the domestic growth inflation trade-offs to make their monetary policy call. Our sense is that this time it's going to be much more what the RBI assesses on the growth trajectory than on inflation, because frankly, inflation has been running at sub 3%. We think it will be sub 3%, in fact, closer to 2% for this quarter, and then probably rise a little bit higher into the next quarter. So really the decision that the RBI will be basing their monetary policy on will be where they see growth. Now, the domestic growth numbers are looking okay. You know, the previous quarter's growth came out surprisingly higher than expectations, both consensus and us. You've had the GST tax cut and the tax reform all of that will feed into growth from this quarter onwards. We already have said that we think that a mass consumption revival is underway, and at the same time you have these external headwinds from tariffs and then H-1B visas and so on. And therefore, I think that's really the mix that the RBI will be looking at before making their decision.
Okay, so that's with regards to what the RBI could be doing from here on. But, Santanu, Hiral here, the GDP growth in the first quarter of FY26, that has actually beat estimates, and that is what the monthly economic outlook for August indicated. With this, if you have to tie in the impact that we will see in terms of US H-1B visas, the trade tariffs, how big a risk will this be in terms of growth? And to add to that, the government's borrowing for FY26, that number will be is a number which is lower at around almost 14.72 trillion. How are you reading that?
Yeah, so firstly on the growth mix, as I said, the domestic economy looks pretty okay to us. On the external front, I'll make a distinction between tariffs and H-1B. H-1B, we think the near-term impact is quite muted on the current account because even if, let's say, some of the remittances is to sort of wean off, it'll be more of an impact into FY27 or thereafter. So the short-term impact, we think, will be quite limited. But as you've seen that markets have reacted to these news, for the secondary tariffs of 25% that was imposed on the Russian oil purchasers, our call still is that this gets resolved by the end of the year, and some of that gets negotiated down. But the first 25% tariff still remains. So if you're an FII investor looking at India, then you have the first 25% round of tariffs, then the secondary sanction of 25%, and then the H-1B. And therefore, you've seen these outflows happening, especially on the equities front. That really is the headwind that India is facing right now, not so much from the growth drag that we are seeing immediately. The growth drag, if this is to remain for a long period of time, will come more later, will be coming later, probably likely in FY27, in our view. On the fiscal front, that's an interesting question. We think that the government will stick to the 4.4% fiscal deficit target, in fact, try to probably better it also. But the important thing is that you had seen a curve steepening, where the long end yields, especially from anywhere from the 10-year all the way up to the 30-year segment, had risen. The borrowing calendar is now indicating that some of the supply in that very long end tenor will be lower. And therefore, our call is that the very long end yields, which is the 30-year kind of segment, comes down. That will eventually lead up to financial conditions easing. That combined with one more rate cut, which we have in our view, likely the December meeting, our call is the RBI waits and cuts in December, should mean easier financial conditions going forward.
Okay. Shantanu, very lastly, in terms of if you talk about, from my side, the IP data that did come in yesterday, mining has been strong, but there has been weakness on the consumption part of it if you remove the non-consumer durables. What is that indicating? And if a bounce back has to come in, taking GST cuts into consideration, do you think it could be a steep one in the month of September and October?
Our sense is that the consumption growth upside will be felt more in the October to December quarter. I mean, there'll be a little bit of growth upside probably in the last 7 days of the current quarter, which is where we are in right now. But the main growth upside will really be felt in the October to December quarter, which is when, so end of September all the way up to October, December quarter is when we would expect production numbers to start showing up. But remember, if you're talking about durables purchases, you could see that from a bit of imports as well. I mean, it does not necessarily mean that, the domestic production has to show up immediately. So the demand that you're going to see, in our view, from about end September all the way up to the December quarter, will reflect in both production and import numbers in the following quarter.
Santanu, the other question is, in times which are as geographically disconnected as this when it comes to global growth, is this GST 2.0 move the last straw or the last hope for growth revival? Or do you believe it's it always is an ongoing process, but is there enough fiscal room to make an attempt for a capex push again if this doesn't give the desired results?
Interesting question, Neeraj. Our call is that whatever had to be done on the fiscal front in terms of fiscal impulse ammunition is pretty much done.
Okay.
You've had the income tax cut, you've had the GST cut. We don't think there's more fiscal space to do more. Can you look at structural reforms? Sure, yes. Can there be easier financial conditions through the monetary policy channel? Yes. Can there be ease of doing business? Yes. But fiscal impulse through further expansion of the deficits, we think is a no. I think the government, credit where it's due, I think the government has been extremely astute in terms of their fiscal consolidation path. They will want the debt to GDP numbers to align towards a more reasonable target by 2030.
I have one more question, Shantanu, and sorry if I'm not sticking to script. I know we had to discuss a note of yours as well, but this is very interesting for me, and hence I'm pushing this a bit more. The part two of my question is this. You've seen various economic cycles. You've seen India react to both capex push and consumption pushes. Do you think, in your wisdom, that this consumption push, coupled with the RBI moves as well as the income tax cuts, can bring back growth, give more tax revenues to the government to restart, if I can use that term, a capex push in FY27?
Look, our point is that capex had a huge upswing in the last 5 years or so, right? I mean, from the pandemic all the way up to FY24 or so, you saw 25% nominal CAGR growth. When your nominal GDP is growing at in the ballpark of 10-11%, it's difficult to envision capex growing at double that rate or higher for a long period of time. So I think that growth is behind us. But remember, Neeraj, the base that you're working with is anywhere in the range of 10 to 12 trillion INR right now. If the government is able to grow that at a rate of nominal GDP growth rate, which means that capex to GDP is flat at around 3.3 to 3.2% in our view, even that will be a significant amount of money that will flow into the system, both in terms of railways or roads, defense, and so on. Remember, India is not short on savings. So the long-term savings right now that is anchoring the sovereign bond curve can ultimately be channelized into infrastructure spending. I mean, you can think about, it's a separate discussion, but you can think about quasi-fiscal channels like NAPFID and so on to carry on your infrastructure spending. So we are not really worried about India's savings being able to fund the infrastructure cycle, but we think that the government's role in doing that any further, given where the fiscal situation is pretty much behind us, and the private sector or the quasi-fiscal or the quasi-government sector has to take up the baton from here.
Got it. Okay. Well, telling points, and therefore we do hope, and I'm sure you do too, that this piece, coupled with all the other actions that have been taken, do lead to the desired growth numbers. Santu, thanks so much for joining us. Like I said, I veered off script maybe, but there's such an interesting points that you mentioned that I had to ask the follow-ups on that. But thanks for joining in today.
Thank you.
All right, that's the Goldman Sachs view. And, guys, I think it ties in with what most people have said, that people are very happy that this government, despite all the other pressures that exist, that come in to try and loosen up, etc. I remember during COVID days as well, the talk was, oh, look at what the global countries are doing. Go out, loosen up, let the deficit go to tongs, and then, right now spend. They stood steadfast. The line in the sand was drawn. And even right now, FM in our GST conclave has said that 4.4 is a line in the sand they will not cross. And most people who look at this very closely from an economic and a bond market perspective laud this approach.
No, that's fair enough. I think the only thing left to be seen is what is the exact impact on the fisc of the tax relief as well as the GST cuts. Because there is one point of view that maybe what has been accounted for is
inadequate?
Is inadequate.
Yeah.
So on the fisc, maybe that's the only point that remains to be seen. And once that has clarity that perhaps the consumption boost that has come more than makes up then you think things will be steady.
Yesterday, Aquarius note was very interesting, yeah, when they are saying that North has actually made up for the 100% of the loss done thus far.
ACs, yeah.
On ACs, yeah.
Yeah,
so very
imagine.
Nice.
And it's still raining. So it's not about summers. It's about how you can make things more affordable.
Yeah.
Maybe what is, I don't know if these are going to be
That's a
affordable
line.
or not.
Maybe the AC companies will take it next year. It's not about the summer. It's about affordability. Yeah, we are affordable. Come and buy us now.
Yeah, and look, we live in a life world that who doesn't want to be in that temperature control thing.
And in fact,
I don't know. Maybe
Star,
people in Bangalore. I don't know.
Yeah. No, but you know what? Blue Star also came out and said that a 25% jump in growth is what they're expecting, because initial expectation was of a negative 20%.
Yeah.
And because of GST cuts, they're expecting a 25% increase, which is a very positive statement that's coming in with regards to Blue Star. And the note clearly tells you, so I think the other companies will follow suit as well.
You know, that aspirational new middle class, which wants to go up one rung, that's what we need to look at, which companies
and
get
that's what is happening even in the two-wheeler space, right? Your two-wheeler sales have not picked up, but your entry-level cars have gone up, four-wheelers. So someone who was purchasing a high-end two-wheeler is actually upgrading and getting into a premium category for them, which is the four-wheeler. May be an entry level, and that's why Maruti is seeing that bump up.
Absolutely. That's why industry really needed that move. Let's see if there's a bump up in all the listings today and what happens there. Couple of minutes to go, and it's a lot of action. There's Anand Rathi, Share and Stock Brokers, Solar World Energy, Seshasai Tech, and Jaro Institute of Technology, all set for their D Street debut. They're going to be at least 4 listings. I think there's a 5th SME one, if I'm not mistaken. But there is a lot to track today, and all of them on your screen. These are the pre-listing rates that are coming in. Anushi is joining in with details. Anushi, grey market premiums for all of these companies are hinting towards a mixed listing. Let's see if you can go through what we know about these companies and give us a comprehensive piece on it.
Hi, morning, Tamanna. Absolutely, you know, it's a big list that we're looking at. I'll start off with Anand Rathi first. Now, what we are seeing is an overall subscription of more than 22, 23 times is the number that we're looking at. The company came out with a fresh issue of around 745 crore, and this is a total fresh issue that we are looking at to be utilized towards the working capital requirements as well as some general corporate purposes as well. Now, in terms of key strength, it has diversified revenue streams, but any market-related volatility would impact the business. So that's Anand Rathi first of all. Coming to Seshasai Tech now the company came out with an IPO size of around 813 crore. This included a fresh issue of 480 crore while the rest was offer for sale. Now they'll be utilizing these funds towards capital expenditure requirements along with repayment of borrowings is what we are looking at. Now this is a strong one that we are seeing. 70 times was the kind of oversubscription number that we'd seen, considering it has a leadership position in payment solution business. Along with that, it has long-standing relationships also. But the other part of it, if we look at in terms of weaknesses, it had about 84% of its revenue coming from the BFSI segment. Along with that, even if you look at the top 10 customer mix, that account for 66% of the revenue. Third one in focus is Jaro Institute of Technology. Now the company is in a leadership position in terms of online higher education and upskilling space is concerned, but it derives 81.4% of its revenue through its top 10 customers.
Right.
Yeah.
Let's just get that last bit. Listing moment for all of these companies. Moment of celebration, one way or the other, no matter what the listing price comes in. It's a big moment for the history of any company to finally be listed in the stock markets, and a very interesting mix. Anand Rathi over there, and that capital market space is quite hot. The listing start has been pretty good. I would say at least in the green for 3 of the 4. Jaro Institute down in the red, about 8% down in the red, not really making the cut on its issue price, but Anand Rathi doing okay, Solar World Energy doing okay. I don't think Seshasai is also looking like it's going to hold up.
Yep, let's see how some of these, but the interesting piece is 2 of these had subscription numbers over 60 times, and we're not quite seeing the kind of gains that we had just last week. Just shows the bent of the market. Somehow, a lot of times, just the subscription number is not enough for the gains.
I think only Anand Rathi is looking like it has relatively decent listing gains.
Yeah, but single digit, unfortunately, for that one as well, right?
Yeah.
So in that sense, it's not been a great start per se for some of these. Maybe they'll build up later on. Yeah, Anand Rathi is the best of the lot. That is also only 5%. Okay, we need to slip into a quick commercial break. We slip into the break, come back, talk about markets and more.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio.
Welcome back. You're watching India Market Open. The markets continue to remain flat. We're trading below the 24,700 mark. But moving on, Advance Agro Life's 192 crore rupees IPO opens today. It's a fully fresh issue targeting working capital and general corporate needs. Varsha is joining us to tell us more. Varsha, where do the valuations stack up, and what are brokerages indicating?
Well, onto the valuation side, considering FY25 EPS, the PE stands at around 25. Now, onto so company will be using this funds for working capital purpose and of course for general corporate purpose. Now, this is an agrochemical company which makes herbicides, pesticides and fungicides, and also present into micronutrient fertilizers. The interesting thing in in the financials, if you see, the EBITDA margin for this company has continuously increasing from the last 3 years, versus if you see the EBITDA margins for its peers are in pressure, considering the pressure in the agrochemical industry. So the interesting and the good thing over here is continuous increase in EBITDA
EBITDA margin. Onto the strength, they have diversified product portfolio and they have multiple facilities with backward integration into technical grade, but 70% of their revenue comes from the top 10 customers, and they have lots of underutilized capacities, which forms the weakness for this company. A shift into technical grade manufacturing to secure higher margins, and of course the export potential that this company has are some of the opportunities, and because of the increase in exports, the EBITDA margins are expected to inch further. But business is inherently sensitive to the weather patterns, and of course there's lots of competition. If you see, you have PI industries, you have domestic companies, even you have MNC companies catering to agrochemical markets. So overall the EBITDA margin, increase in EBITDA margin is good. Onto the valuations, the valuations are currently at a discount level to its peers like Dharma, Sharda Corp and PI Industries. So overall, yes, a good company and lots of opportunity considering the export scale up that the company is going to do will inch up the EBITDA margins in future.
Okay, that's one of the IPOs that opened today, a whole host of them as well. So that's one space which is buzzing. But talking about listing, one listing which is glaring in its absence is Tata Suns. That deadline ends today with the CIC deregistration still pending. The company may avoid mandatory listing. Vishwanath Nair joins in with more details. Vishy, first explain to us how the company could avoid its listing in all of this, why it needs to list, and the impact on some of the listed players of the Tata Group.
Right. So, talking about the missing listing, specifically about Tata Sons. Now, of course, it's part of the RBI's list of upper layer NBFCs. This is a list that was released back in September of 2022. At that point in time, the RBI's rules were that within 3 years, whichever companies of this list are not listed need to come out and list. And this was primarily being done so that corporate governance issues could be handled if there are any market sort of impact that might come in because of the wide sort of borrowing that these companies may have from listed players as well as lenders out there in the markets, and then those can be addressed as well if the company is listed on its own. So that's why the RBI pushed for the listing. Tata Sons, of course, is missing from that listed list. You've got Tata Capital that has already opened its IPO later this week. Why is this important, and how are they actually missing or avoiding that listing? Well, it's important because this essentially is a precursor to the RBI taking any action. Will the RBI take any action against this or not? And if the RBI does not take any action, then the question being that do the Tatas actually get a free hand when they talk about their companies being listed under the mandatory rules? How can they avoid the listing? Well, this CIC deregistration, that is something that they've been attempting since August last year. It's been a little over a year and the RBI is still in the consideration phase. They've not taken a call on deregistering the company as a core investment company. It's a core investment company essentially because it invests money into other Tata Group companies and therefore that's its only business. It doesn't have any natural business of its own. So if it is able to avoid that CIC tag, then it doesn't need to be classified as an NBFC and therefore it doesn't need to list because it gets removed from the upper layer NBFC list. The whole issue here is that Tata Sons has already repaid its outstanding dues with the broader market, 20,000 crore. They've cleared their debt and that makes them disconnected with the broader system. So the CIC tag doesn't necessarily apply. It's only a holding company or a sort of incubator company of the Tata Group for other group companies. So that's how they're going to avoid the listing, but whether the RBI buys this argument or not, that's something that we'll wait and watch.
Noted. Thanks for that, Vishy. Now, Vodafone is in focus as well. They've filed an amended petition on September 19 seeking waiver of interest penalty and the interest on penalty related to adjusted gross revenues as well. Danish has been tracking this very closely and he joins in right now to give us more updates there. Danish.
Vodafone Idea has filed amendment to its petition, which was filed on the 19th of September, and NDTV Profit has seen that petition. And in this petition, the telco has sought, waiver on interest penalty and interest on penalty, and this is till the AGR dues of FY18 from 2018 to 2019. Before that, the earlier plea, which is already there in the Supreme Court, it is on the additional demand by the DOT, which nears around somewhere around 9,450 crore rupees. But in the petition, Vodafone Idea has also prayed to the Supreme Court to give waiver on interest penalty and interest on penalty by giving the fact that there is no there is no particular calculation that DOT has provided to Vodafone Idea, and the telco has said that both the parties, by that I mean DOT and Vodafone Idea, they both know that the whatever amount that the DOT has sought from Vodafone Idea, it is not crystallized, it is not finalized. So giving this justification, Vodafone Idea has sought relief from the top court, and in the petition, Vodafone Idea has also highlighted another case between MADA and SAIL and given an example of that judgment, which was a judgment given by a 9-judge bench. In that, it is clearly stated that such things cannot be permitted, and hence Vodafone Idea has given an example of that judgment and has sought urgent relief from Vodafone from the top court. And this hearing is supposed to take place on the 6th of October.
Okay. Thank you for that, Tanish. So 6th of October is something that we should watch out for. Meanwhile, just to take a look at what's buzzing in the markets at this hour, completely tepid. When you look at what's happening with the front line, Nifty flat, given up most of its gains. What's working, if at all, is a Blue Dart, for example, because they've hiked shipment prices. So Blue Dart is seeing some action. 9 to 12% is a bump up that they've given. Another one that's catching my eye is NetWeb Tech. I don't know, have any of you guys downloaded Aratai? The made in India option to WhatsApp is how it's been pitched by Zoho, Sridhar Vembu, and it's seen a 100x explosion in downloads since union ministers have downloaded it as a messaging app. And it's India's Make in India movement. Now, the thing is, now whether it works or not will have to be seen.
How do you spell it?
Aratai is Arratai, and frankly, I've been looking it up. I do not know Tamil, but it means chit-chat or gup-shup in the local language, in Tamil, and it is a Make in India version. So now why am I talking about Aratai? Because look at NetWeb Tech. NetWeb Tech is believed to be, Zoho is believed to be one of the large clients for NetWeb Tech, and if they're going to see their downloads go up several times, it is going to be NetWeb Tech doing the back end of that. So that's one stock that you may want to look at. I mean,
as you're just telling me, I'm trying to download it. It's ARATTAI. You're right. Aratai Messenger.
Yeah. Okay, so maybe we'll get on it and tell you what that experience
just
is
downloading
like
right now.
that don't blame on NetWeb. That might be the internet connection.
Of course.
But anyway, we'll have to see how it works, because there have been attempts in the past. I think there was a Desi version of Twitter also that we were trying to put out. I can't even recall the name now. Kuhu, correct. It has to last. It has to last. I mean, India is one of the largest users of WhatsApp in the world.
Okay, but
I don't know.
Okay, we did do a transition from a BlackBerry to WhatsApp.
No, but everyone stopped using BlackBerry at one go.
If this really picks up like the way Zoho did, you never know.
Yeah, maybe. So Aratai it is. Let's see. Anyway, time for some Aratai with Vijay Raghavan Swaminathan. Please forgive me if I've said that wrong. Mr. Swaminathan, Managing Director and Head of Research at Avendus Spark Institutional Equity, is joining in now. So chit chat is what we're going to talk about. And on your report, so let me start with the point that you're making, that you're looking quite favorably at India. You're saying macro concerns appear to be bottoming out. Let's start at that point. Why do you think so?
Hey, thanks for having me on the show. Just to give you a context, pretty much from December 2023, we've been having macro concerns. Variety of concerns we've been highlighting for the last 18 months. But starting from June, we started seeing some signs of green shoot emerging, especially around consumption as an economic pillar. So if you look at the broader economy, I can split it into three parts. One is consumption pillar, second is investment, and third is exports. So of this, because of series of efforts taken by the central bank, along with policymakers' decision also to revive consumption, so it is quite evident that the entire macro economy is centered around consumption at this point of time. So we need economic revival, for which the consumption recovery is very pivotal. So due to which we are clearly seeing push coming from both central government, state government, and the central bank. All of this put together should create a new consumption cycle at this point of time.
Now, the question is, what does the government do about the opportunities that present itself? And I say opportunities as a loaded word. There is, of course, a tariff impact going out there. Foreign investors are not seeing any reason to come into India in large numbers till that tariff overhang continues. A bit of a consumption hit is also there, and maybe will be propped up by GST. What more would you like to see, and what, as investors, should we look out for?
Yeah, as we have highlighted in our recent strategy piece, I think while it is inevitable that we are likely to see a rebound in consumption as an economic pillar, the net gains to the economy is still constrained by four broad factors. The first factor being, if you look at IT and BFSI sector being the largest recruiter, the net hiring data is still underwhelming to us. That is one factor which needs to improve from where we stand today. Secondly, investment cycle. For some reason, the last 18 months, both investment cycle and property cycle are definitely seeing signs of moderation. That needs to revive for us to see a holistic recovery on consumption. And thirdly, exports. I think there's a lot of uncertainty around the US tariffs. Hopefully, if that gets resolved in a month or two, you will see a rebound in exports of especially services exports. These are three important, moving parts in the broader economy, due to which the recovery will be still constrained at this juncture. But nevertheless, the first pillar, I think, which we have been worried about in the last, say, 18, 24 months or so, the first pillar of consumption will see, bottoming out at this juncture is the way we are thinking through right now.
Mr. Swaminathan, morning here on this side. With all the positives that you mentioned about your concerns that you highlighted, what is the approach that an investor should take at this point in time? Because you've already seen an earnings revision that has already happened. We're already talking about a 7% from a year ago when we were talking about 14%, right? So what is that investment approach at this point, and where would you advise investors to look at?
Yeah, if you look at the investment approach as a whole, we still need to prepare for some more pressure on earnings. For example, as you rightly pointed out, we started with 14-15% earnings expectations for the current fiscal year. We'll be ending up, at 7 to 8% kind of earnings. And even looking at fiscal year 27, we are looking at again a 15-16% kind of earnings growth. But within that construct, I think what is going to be interesting is anything to do with mass consumption, the small tickets consumption, which is where most of the policy reforms in the last 9 months has been pivoted to. So you will see inevitable recovery in small tickets consumption. So which has been our view right from the start of this year. We'll broadly stick to that view when it comes to small tickets consumption recovery is concerned. So when it comes to investment cycle or property cycle or exports, so it is going to be a stock specific or sub-segment specific approach is what is needed, because the going is not going to be as easy as it was 12 months back when it comes to these segments are concerned.
Vijay Raghavan, good morning. Yes, Neeraj here. Are you constructive on the earnings growth picture for the next 18 months enough to be bullish on the headline indices currently, or would you believe that we will remain in this range-bound mode for the headline Nifty 50, but bottom-up ideas would continue to do well?
I think I'll stick to my bottom-up ideas, because every sector today has got something or other in form of headwinds. Okay, so as a result, it is going to be a stock-specific or bottom-up specific approach is what is needed at this point of time. Given that there is lots of uncertainty around job creation, and lots of uncertainty about this exports. I think these two are important elements for us to see a holistic recovery in earnings cycle. So to put another way, I think for the broader indices, 15-16% of earnings to come through, only with consumption-led recovering is not adequate. So while consumer-related stocks can see some marginal upgrades, but it will be equally neutralized by downgrades in non-consumption sector, whether government-dependent sectors or B2B sectors can see downgrades if my other concerns continues to play out the way it is right now.
Well, the outlier could be defense, Vijay. Just wondering, because there the order activity seems to be very strong. So are you constructive defense even as you are not constructive government exposed sectors?
Yes, why we are concerned about government capex dependent sectors to start with. While government is clearly given a lot of benefits to consumption, but for a slowing economy in the last 18 months, government finances is definitely not in a great shape as it was in the last 4 years. So due to which any companies, any segments who benefited because of central government capex or state government capex are at the margin going to see growth moderation and working capital moderation. So as a result, within government capex itself, I think defense is a key priority, followed by railways to some extent. So barring these two subsegments, most of the other government capex dependent sectors should see subdued, order momentum growth or working capital related issues is the way we would summarize the government capex proxies.
Okay. Vijay, the other question is, because I heard you say that you might be constructive consumption. So such a wide bucket, right? Autos feeling happy after a long time. We're seeing a report that North India RAC sales have gone through the roof. So where are you constructive? Durables, autos, something else?
Yeah. So right from the start of the year, because of combination of low inflation, low interest rates, personal income tax cuts, followed by the GST cuts, the characteristic of consumption is going to be more of small ticket size or mass consumption recovery. This is what we've been saying for the last, say, 3 quarters or so. So post this GST, I think it is very evident that government is committed to correct the K-shaped recovery, which we have been going through since COVID. So which means anything towards small ticket size consumption, be it consumer durables, value apparel, value retail, select staple companies, this is where we see recovery is going to be more tangible. So clearly, focus more on low ticket size versus high ticket size products is the way we see consumption recovering over the next 18 months or so.
You have an interesting category of unloved stocks, contra unloved and out of favor. I'm wondering if going forward any IT names are making the cut to this category?
Yeah, if you look at IT, we've been cautious on IT sector pretty much for the last 18 months. For IT sector today, after one of the worst hit sector in the last, say 12 months or so, when have we seen TCS falling almost 30% year on year, right? So clearly there are concerns around IT sector while it is offering a lot of, free cash flow yield comfort at this juncture. But still, there is no big clarity on growth coming back and more importantly, pricing resets. Thanks to, adoption of AI, the productivity gains and the pricing is definitely, the way in which we're seeing IT companies, definitely we need to have a different framework to look at these companies going forward. So as a result, with uncertainties around growth, pricing and margins still there, we are still cautious when it comes to the overall IT sector is concerned. But having said that, some of the large caps from a free cash flow yield standpoint, after the recent correction, is definitely, seems to be bottoming out and is one of the few sectors where we are still seeing, large cap companies trading at a close to pre-COVID multiples at this juncture.
All right. Thank you so much, Mr. Swaminathan, for speaking with us on Talking Point this morning and giving us a sense of where you're seeing that optimism coming in. Having said that, the optimism drying out as far as markets are concerned. As we're wrapping up, folks, you're seeing most gains coming off completely. Some stock-specific action at best.
We wait for the resolutions to happen and then see if there is a sustained trend. But the market has stopped falling, which is a good sign for the last couple of days, which is actually something to take heart from.
And the trend that we're seeing right now, if there is a minor downtick right now, probably that recovery comes in the second half.
Yeah, all right. So that's all the time we have this morning on India Market Open. So from all of us and the team that put the show together, thank you so much for watching. Don't go away though. Ask Profit is up next, where we answer your specific queries. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बन।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful tech guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome back to NDTV Profit. I am Puneet Zaveri and with me is Mahima Vajrarani and you are watching Ask Profit, a show where we get all your stock queries answered from a fundamental as well as technical analyst. But before we move on to the queries, let's first take a very quick check of how the markets are doing, because it's been a day where we've seen consolidation essentially on the Nifty 50, and again from starting up in the green, we moved down to the red, now down to almost 10 to 11 points on the Nifty 50. Yesterday, we did break as well as continue to be trading below the key support level of 24,700, and essentially the any kind of positive move will be post tomorrow, the policy meet as well. let's quickly look at the constituents of the Nifty 50 as well. That's been another key aspect because we have seen some banking names that's largely been in the green and the red and playing tic-tac essentially between those two indexes. Today, we are seeing SBI being very marginally in the green. JSW Steel is the top contributor for the Nifty, but largely a session where we're seeing a lot of the other stocks as well within the Nifty 50 operating as well essentially in the green and the red, but very minusculely, not enough to make a move for either of these indexes. Let's look at the advance decline very quickly before I go to Mahima for the broader markets as well. Advances continuing to be in the green, but we're starting to see that inch up, starting to inch below essentially at this particular point of time. The declines are almost 1,000 now versus advances of almost 1,300 stocks as well. But mid cap and small cap Mahima have also been range bound, but some positive move has been seen compared to the benchmarks.
Absolutely, and that kind of move is being seen in the advanced decline, reflected in the advanced decline ratio as well, right? The chart has been narrowing, and that's because the mid cap 150 is almost trading flat. The small cap 250 is slightly in the green, up by about 1.13 odd percent. But again, it's a very stock specific market. Some counters that are doing well includes names like Tata Investment, Blue Dart on the back of the price increases, rate gain. Hindustan Copper has seen a significant rally in the past couple of days, and this is on the back of silver prices going up. There's J&K Bank, which is up 4%. Responsive Industries, GE Shipping, Bank of India, 5-star. Some counters doing fairly well in trade today, up by about 3 to 4 odd percent. All of these names, but some counters that are under pressure includes something like a Zydus Wellness, which is down 4%, JSW Holdings down 5%, of course, Man Industries down about 10% as we speak, Happy Forging, Everready, Dixon Tech also under pressure, down by about 3.7 odd percent. Nazara Tech, Hitachi Energy, some counters that are trading in the red. There's PVR Inox, which is also under pressure, down by about 3 odd percent. So that's with regards to where the markets are concerned. But with that, let's also welcome in our guest for the day, Vineet Bolinjkar, Head of Research, Ventura Securities, and Swati Hotkar, AVP Technical Research at Nirmal Bang, joining us now. Welcome to both of you, and a very good morning to the both of you. Before I come to you, the recent listing, that is Anand Rathi, let's try to pull that up and see as to what it's doing right now in trade. Almost 3 listings we had today, but largely flat because of how the markets are doing. But Anand Rathi has managed to see an uptick of 5% as we speak, and in fact we spoke to the management as well. Pradeep Gupta, CMD of Anand Rathi, and Roop Putra was the director of Anand Rathi. Listen to what they had to say.
Big day for you, the listing that is about to happen. I'm trying to understand from you, how are you feeling at this stage? 745 crore IPO that you did, oversubscribed 20 times. How are you feeling with the response that you're getting from the market?
Yeah, I think thank you for the direction, and my good morning to all the NDTV's viewers. Yeah, we are feeling really great and really happy because lots of investors have come and joined us and shown their interest and confidence on us as well as in company. So I think really good.
Sir, if you were to look at the subscription numbers there, your QIB portion and your HNI portion have all done reasonably well. Retail still, 5 times it's still oversubscribed, but not as much as the rest of the components. Any reason you think that is happening?
I really can't say in words, but I think maybe it all depends on the customer base and the investors who are coming and joining. Probably they are thinking how they look at the company, how they look at their investments in this company. But the other reason probably is on the same day there are 3 or 4 other IPOs were there, and probably they might have distributed here and there, is something which probably you can anticipate and see.
I wanted to get a sense about the future. Now, of course, you will have to report the September quarter results, because now that you're a listed company, you will have to come out with those quarterly reports. As a company that was so far privately held and now coming to the public markets and having to do a quarterly results meeting, how are you anticipating the rush that is going to happen?
Basically, I think, as you already know, that this is going to be a second listed company from our group. So, I mean, from last 3.5 years, obviously, we have started and we learned the way how fast and how and what kind of a transparency and what kind of a results is to be, provided to the investors and how investors are looking at various different companies. And I think that philosophy is going to follow. Because if you really look at it, we have been very, very meticulously delivering in our Anurati Wealth result dot on between 10th to 15th of every quarter ending, after post-quarter ending. So I think the similar kind of similar nature and similar fashion, I think over here also we are going to probably start coming out with our results. So far, growth of this company is concerned, so we are quite confident that this company is also going to grow over a period of time. There are enough, shoots for the growth are available by diversification the revenue stream, by stabilizing and looking at our total revenue mix between broking and non-broking and trying to improvise on a non-broking side so that you can create an annuity kind of a revenue over a period of time. And I think once you are set for that annuity revenue and constantly expanding the revenue from annuity side, I think the stabilization and stability in terms of prediction, stability in terms of growth is going to be a future for this company also.
So one of the questions that was raised earlier when the IPO was open for subscription was about the promoter pledge, 30% approximately, which is considered high by a lot of market viewers. I'm trying to get your sense and your argument in favor of that.
See, basically those shares are being placed just to give certain amount of guarantee and taking certain amount of assurance in the main group company for doing those businesses. But I don't think that's going to matter much over a period of time once the financial strengths are going to be created. And when those things are not going to be needed, probably those kinds of plays can be released. But I think nothing major is to be read in between, because these are all requirement, unfortunately being required by various players in the market. I think, and that's what we have done.
Well, that was the management of Anand Rathi, but let me go across to Vineet as well. And Vineet, any of these 3 to 4 IPOs that have come out today listed on the exchanges that you have a view on? Because we also had a viewer query from Bengaluru. Naveen had asked, actually, it bought 50 shares at 434 just post listing. Any view on either of those? Any coverage that you have on the IPOs that are listed today?
We don't cover them very actively to forecast on price action. But I guess, the way we are seeing volumes on the exchanges kind of, better off. I think that, booking your gains on this stock around 450 levels would help you book some profit in Anand Rathi.
Got the view, Vineet. But let's go across to a viewer query now. Now, viewers, you can send us your queries on WhatsApp, which is on the top of your screen on a number, as well as you can call us on a number that's flashing in the white as well. The first query is on WhatsApp today. Gopika from Chennai is asking us on Bharat Electronics. She's asking, she wants to know actually if this is the right level to buy into the particular stock as well. While she's not given a time frame, let me go across to Swati. Swati, on BL, fundamentals look very strong on the charts. Is this a good time to enter the stock? Swati, I think you're on mute.
I'm really sorry. First of all, good morning, all of you. Definitely, the view is positive for a longer term horizons. The counter is trading in the formations of the higher tops and higher bottom. But the interesting fact that it is facing a very strong resistance at around 415 to 420. So unless and it doesn't give the breakout of those levels, we are not likely to witness the swift rally on the higher sides. But downside, I believe that the 380, 390 are the good support levels, and that will be the attractive levels to take a buy call fresh long positions, because the risk reward ratio will be effective. profitable. So as of now, wait for some more time. We might witness some sort of a profit booking in this particular stock. 380 to 390 levels are the good levels to take up buy positions.
Okay, all right. We've got our next question from Amit, who's writing us from Mumbai and asking about Ajanta Pharma. He's got 700 odd shares, bought at the levels of 1500 per share, and wants to know if he can hold on, accumulate more at the current level from a 1 year time frame perspective. Vineet, your view with regards to where Ajanta Pharma stands for the next 1 year?
So, right now we would like to advise investors to hold on to the investments and not commit further funds to pharma stocks, because, we expect that there could be further tariff action from the Trump government coming in. And hence, we believe that either you book profit or not commit new funds to these stocks.
Got the view, Vineet, but we're getting the first caller for today, and it's actually coming in from Dubai as well. Amit is dialing in for a stock query. Amit, a very good morning to you. What's your query?
Good morning, everyone. Happy festivals, everyone. Quick one. I have NCC, I think about 1,000 shares or even more, at about $240. I would really like to know what is the long-term potential. I don't do trading. I normally buy and hold for at least 2 to 3 years. So I'd just like to see where is this stock headed, because just not doing anything over the last 4 to 5 months.
And festive greeting to you as well. Before I go to the guest, any rationale that you had before entering NCC? Were you looking at exposure in the infrastructure and the road space? Was that the rationale?
That was the rationale. I just felt that I did not foresee that the capex is going to slow down. I think the politicians will continue to spend a lot of money on capex, and I thought, let's ride the wave. But let's see. Now everybody talks about consumption, and I sometimes don't understand where is capex. So that's why the question. Yeah.
No, fair question, Amit. And let me go across to Vineet first. Vineet, while Amit makes a very good point that the spending of government on capex is slightly slower than the focus has shifted on consumption. What do you think of NCC? Because Andhra Pradesh, we've seen a government change there, and the focus is a lot on capex, at least in that state. Would you suggest a longer-term view on NCC as positive and continue to hold the stock for Amit?
Yeah, definitely, I would continue to hold that stock. NCC has got very good execution capabilities. And although, as he pointed out, that, there's a possibility of consumption, gaining strength over, capex slowing down, I think that would not hold the case in Andhra. And so, to a large extent, NCC would be well taken care of in that aspect. So while the general market sentiment is down, it is not only restricted to NCC, it is across the board. And hence, I would recommend to hold them on currency and see the long-term buyer of stocks.
So that's with regards to where NCC stands. We've got our next question from Shijit, who's asking about eMudra. He's holding 600 odd shares and wants to know if he can continue to hold from a longer term perspective. Sitting on a loss currently, is not mentioned the price at which he's bought it. But Swati, with regards to where charts are concerned for this counter, what are they indicating? A slightly longer term perspective?
Yeah, as of now, the view is a little bit cautious, Mahima, because this year was not a good year for this particular stock. We have seen a very sharp sell-off, and as of now, on the monthly basis, also the stock is almost down by 9.5%. I believe that the more selling pressures can be seen into this particular stock, which might take a counter towards to 620 to 600 levels. Those are the good levels to take a fresh long positions, but not at the current market price. I believe that the selling pressure will come down once it manages to take a support of a 600 to 620 levels. Upside momentum has been restricted. On higher side, it is facing a very strong resistance of 710. As long as it trades below that level, the trend will remain on the negative side. So try to avoid the long positions at the CMP. Wait for some more time. Any momentum above 710 will lead a rally towards to 750 to 770 levels. So for the longer term horizon, view is positive, but at a short period of time, I believe that some sideways momentum or the selling pressure is likely to be continued in this particular stock.
Well, that's Swati's view coming in on eMudra as well. But the next question that's coming in is on WhatsApp again. Dr. Rao from Hyderabad is asking a question on a stock HFCL. And he's asking in context of the recent land of about 1,000 crores that was allotted to the company in Andhra Pradesh. He's asking for a view on the stock. So I think he's not entered the stock yet. He's asking for a view there. Vineet, do you have coverage on HFCL by any chance?
Yeah, so we do have coverage on HFCL, although it's not recently updated. The promoter had recently sold off some stock. So there was concern, and the promoter shareholding is also down quite a bit. But the land that they bought, I presume, is probably going to, contribute to the defense growth. Secondly, the optic fiber and the telecom business is doing very well. And, one can continue to hold this stock given that, the future outlooks look pretty good.
Got the view, Vineet, but we're getting a second caller for today. From Hyderabad, Snigdha is dialing in for a stock query. Snigdha, a very good morning to you and thanks so much for joining in. What's your query?
Hi, my query is regarding Dixon Tech.
Okay.
So I've purchased 15 shares at 16,150 rupees today morning.
Okay.
So I would like to know the stop loss and also, if not Dixon Tech, may I know few suggestions for short term?
For short term, got it.
Yes.
So, could you suggest why did you?
I also want to know, the target for 1 month for Dixon Tech.
Got that. And your rationale for entering Dixon Tech, is there any particular rationale that you picked this particular stock for a short term view?
I thought as the market is a lot corrected, so I've taken this.
Got it. Swati, let me come to you because we had some news flow on Dixon Tech yesterday that there could be some tariffs from President Trump on foreign electronics. We saw the 4% move on the downtick yesterday on Dixon. Any view, short-term view, a month's view is what Snigdha is asking. Your view on the stock?
In my view, is a little bit cautious. No wonder from the last 3 trading sessions, we are continuously witnessing a very selling pressure in this particular stock. I believe that this rally is likely to be extended on the downside towards to 15,500 or 15,200 levels. Up to that level, we might witness some sort of a depth in this particular counters. Fresh longs positions can be initiated only if it manages to give the breakout of 17,000 psychological mark. Probably we are likely to witness some sort of a short-lived bounce back rally, but I believe that those will be a short-lived only. There is no major trend reversal as of now I'm witnessing into this particular counter, and the stock is about to enter into the oversold zone. So if it manages to take a break support of a 15,500 level, then only we can think about a buying. But at the current levels, my view is a little bit cautious in this stock.
Okay, all right. So that's with regards to where Dixon Tech stands. We've got our next question from Chandra, who's writing us from Germany and asking about BLS International. He's saying that the stock has been falling, but there's no fundamental trigger as such, and wants to know as to, from a longer term perspective, if we can continue to hold or not. Vineet, I'll come to you on this one. Your view with regards to where BLS International stands?
The company has got a very steady cash flow kind of business. But we are not tracking this stock as such, and hence I would refrain from offering any comment on this.
That's with regards to where BLS International is concerned. We've got our next question from Senthil, who's writing us from Chennai and asking about Siemens. He says that he bought this December last year at an average price of 6,117 and wants to know, and now the stock is down, Siemens is what I'm talking about, and the stock is down 50% since the buying is what he's saying. Considering the current market conditions and Siemens fundamentals, what is expected in terms of the future price targets is what his question is. Would it be advisable to buy more to average down is his overall question. I think, Swati, I'll take this up with you first and then go to Vineet with regards to where fundamentals are concerned. But do you think averaging out Siemens right now makes sense?
Because this particular counter has already seen a depth of it at around 2400, 2450 levels, and from there onwards we have seen a turnaround in the month of the March 2025. Slowly and steadily, gradually it's going up. So trend is definitely positive since already the counter is 50% down from your buying price. So you can at least add on 20-30% at your current levels. If you're getting any dips towards to 2900 levels, you can add on with the more quantity. Downside, keep in mind that 3200 is acting as a crucial resistance level. Any move above that level will see some sort of a positive momentum, which will take a stock towards to 3400 to 3600. So those are the levels I'm witnessing on a downside if it's break the 3200 levels on the closing basis. But in order to not to miss the rally on the positive side, 20-30% I recommended to take a long position at the CME.
Okay, and Vineet, your view with regards to where Siemens stands?
I think one should hold on to this stock. There has been a recent demerger in their business model. So, it's not like the stock is down 50%. And you can continue to hold this stock. Siemens is a very quality management, and the capex and the growth outlook for capital goods industry is very strong in India at least.
All right, so that's with regards to where Siemens stands. Vineet and Swati, we've started a new segment. We also do rapid fire in the first segment as well. So you know the drill. You can keep your answers as short as possible, and we'll try to throw as many questions as possible. The first one is on Schloss Bangalore, that is Leela. And we have this question with regards to where charts are concerned. Swati, I'll take this up with you. Your view with regards to where charts are concerned for Leela?
The view is positive. Upside 425 to 430 levels can be seen. Maintain the long position with the stop loss of 410.
Well, the next question is on Crystal, and Balaji from Chennai is asking that he's bought 100 at 782 rupees. So I'm talking about Crystal. That's the stock. Vineet, do you have any view on the stock?
It is going to be a major beneficiary of the recent policies of the government towards employment creation, and would look to buy this stock on declines.
Okay, Natco Pharma is the next one. Kishore is asking this question. He's got 80 shares at 962 a piece. Wants to know from a longer term perspective, can he average out? Swati, your view on the charts?
If the counter is entering at the oversold zone, at the level of 780 to 770 levels, you can definitely average it out, but not at the current market price.
Swati, I'll come back to you for Infosys as well. Our viewer has bought 21 shares at roughly 1600 rupees per share and asking if he can average at the current levels or wait for a further correction.
Wait for further more correction. If you're getting any dips towards to 1370 to 1350 level, those levels will be a good level to take an average position.
Okay, Vikram Solar is the next one. Vasudev Rao is asking this question. He's got 100 shares bought at the levels of 323. Wants to know if he can hold or sell. Your view with this, with regards to this, Vineet?
One should hold on to this stock. The solar EPC and the segment is expected to do well going ahead.
The next question is coming in on Cummins India. M. Raju from Chennai is asking if this is a good level to buy into. Swati, your view?
My view is definitely positive, but don't buy at the current market price. If you're getting any dips towards to 3700 to 3600 levels, those levels are attractive levels to take a fresh long position. So wait for some time.
Okay, Union Bank of India is the next one. Nikhil from Hyderabad is writing in, wants to know if he can continue to hold for the next 6 months. He's got 1000 shares bought at the levels of 148. Swati, your view?
Definitely, you can hold on these long positions. I believe that the stock has a potential to reach up to 155 levels. So you can hold on the long positions at the CME.
All right, okay, so that's with regards to where Union Bank of India stands. With viewers, that brings us to the end of first part of Ask Profit, but it's time for a very short break. Do stay tuned, more queries on the other side.
That's huge. That is a biggie. It's out of it.
गोल्ड ग्लास क्लियर ग्लास पार हो या नियर सब कुछ दिखे क्लियर.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने.
NDTV World Summit 2025, Edge of the Unknown. 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful tech guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
the markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back to Ask Profit. But we're putting the focus now on Man Industries because SEBI has actually barred top executives for 2 years over alleged fund diversion from accessing the securities markets. Now, 3 senior executives barred are namely the former CFO Ashok Gupta, Chairman Ramesh Mansukhani, and Managing Director Nikhil Mansukhani, who we caught up with exclusively earlier today. Now, he clarified that the primary issue is related to minor compliance issues, and let's listen into what he had to say, because the stock actually fell 16%, recovered all the way down to almost 6% downtake, but it's now down again 13%. Listen into a slice of their conversation.
If you could first help us understand what has exactly gone wrong, because SEBI coming and barring the company and 2 executives for 2 years over alleged fund diversion, what would this actually mean?
So let me bring the clear perspective on this. This SEBI order is a long-standing order. It was of the past history of 2015 to 2021. SEBI did their entire survey, and this order has been pending since almost now 4 to 5 years. In fact, the company took a call to get it adjudicated, and SEBI passed an order with a minimal penalty, which is hardly 25 lakh rupees on the company. The company getting restricted from trading in day-to-day in other companies doesn't bother, because it does not really, that's not our day-to-day business. So it's important that this was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. The company, obviously, regarding the barring and everything, is taking whatever legal remedy which will be required to be done. But we feel that this was required because it's been very, very long. It was of the 2015 eras, which I wasn't a part of completely. And it had to be done. We were waiting since a long time. And this does not impact the company's operations, day-to-day operations of any act altogether. In fact, the company is doing well. It's got its largest order book currently. The profitability is higher. Merino shelters was the main reason why this audit started from SEBI, and that is already been resolved. And we've in fact sold the asset and already recovered 70 crores, and the remaining almost 600 to 700 crores will be recovered over the next 4 to 5 years. So overall, with the shareholders, the trading, I don't see any issues. So I feel that it was to be done.
So Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive, because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that first up. Secondly, it's not just about Merino, it's also what they're talking about in terms of round tripping and related party transactions. Can you shed some light on that? Because when you say that you weren't involved, but the management was the same, right?
Correct.
Your name has been mentioned, right? Because I believe,
I was the director.
Exactly.
Yes. I have been the director, obviously, but I took over the complete operations in 2021. But nonetheless, the point is about the round tripping. Yes, there was money given off to the subsidiaries. It was in line with the erstwhile provisions of infrastructure, which we've already claimed also, if you read our reply to this. SEBI is obviously taken a contrary view to it, which they are obviously free to, and we are free to do the legal remedy. All the money which was given has already come back in, including Merino shelters. So we had given it to our subsidiary, and the money has come back. And even when we gave that money, it was given with interest. So as per the provisions of the law, it was done that way. Yes, we were not, consolidating Merino shelters into Man Industries. That was because of the legacy issues between the brothers, the demerger and everything. So that call was taken by us on the basis of a court order. SEBI again took a contrary view to it. And we respect it. End of the day, it's their view, our view. We will do the, whatever legal remedy it is, we will be going for the appeal. But it's been an overhanging issue since very, very long in the company. And we are glad it is, at least there is a next step to it and we can move forward from it.
Were there any related party transactions at that time, Nikhil? And were they, as the order says, misrepresented?
No, they were not misrepresented. In fact, the related party orders were a part of the board meeting. They were given in the board meetings, AGMs, if you pick up the balance sheets and the AGMs, everything was represented. Also, the related party transactions had the interest provisions provided and the interest also paid up. So there was not even and in fact, the matter of fact that when this was adjudicated, everything was already paid off. So not only the principal, but the interest and the principal has come back into the company. And Marino is getting consolidated since FY 23-24.
No, that
was the full conversation that happened today morning. We'll put out this on YouTube as well if you want to catch the full conversation. But Vineet, let me come to you. Any view that you have on Man Industries for investors that are already invested in the company?
We recently came out with the coverage on the stock. And, it's disheartening to get a negative judgment in terms of corporate governance. Having said that, I think, the stock has got a very strong business fundamentals. They're doing a lot of capex in the Gulf and in India also. And order book is very strong. So I believe that, the stock will face some flack in the short term because of the corporate governance issue. But given the positive business fundamental, it should find some good moves coming in ahead, going out into the future.
Okay, all right. So that's with regards to where Man Industries is concerned. We've got our next caller then. Venkat is calling us from Bengaluru. Venkat, hi, a very good morning to you. How can we help you today?
Very good morning, Mahima. Nice talking to you. Thank you for taking up my call.
Nice talking to you as well, Venkat.
Citizen.
Okay.
I'm a senior citizen from Bangalore, Venkat.
Okay.
And I'm holding Dr. Reddy Laboratory average price was, is about 1262.
Okay.
And I have been holding it right from, 24, that is in the last year, October, 1 year. And the stock has not been moving up at all. Nothing has been happening over there in the stock, and I do not know. I am slightly confused as to why Dr. Reddy Laboratories, out of all the Pharma, is not doing anything at all. And what will I have to? What I have to do for getting a decent profit of about at least 15% to 20% per annum.
Okay, understood. Venkat, I got your question. I got your question. Yeah. I understand your concern as well. Thank you so much for speaking with us. I take this up with Vineet. Vineet, his concern is valid and wants to know if DRL can probably give him at least 50%. I got your question. I got your question. Yeah. I understand your concern as well. Thank you so much for speaking with us. I take this up with Vineet. Vineet, his concern is valid and wants to know if DRL can probably give him at least 15% return in the next 1 year. If not DRL, would you recommend him to book losses right now and enter into something that can actually fetch him around 15 to 20% of profits?
Right now the issues around the US tariffs is probably weighing down on the price. DRL is a very strong company, has been doing very well. But their regulated banking businesses will to come under slight pressure. And, you can keep holding this stock for the long term. But, if you're looking for a reasonable return in the short to medium term, then I think it would be better to exit this stock and look at some of the, Adani counters where we think that the worst in the story is done with. And, there is some very, very strong fundamental growth story playing out there.
The next question is actually coming in on WhatsApp from Mumbai itself. Sagar is asking a question on Tata Motors. He's been holding the stock since February, bought it at 646 rupees per share. And holding roughly 25 shares. Now, Vineet, let me come back to you because, we've seen a slew of changes just before the demerger effective tomorrow. Your view on the stock, do you feel once the demerger happens, it's a good time to hold the share before that? Any view on the same?
So, we continue to be a little bit, cautious on the Tata Motors business because almost 80% of its profits and revenues come from JLR, which is facing a lot of headwinds in terms of, concerns in their overseas economies. So, we think that Tata Maruti is a stock which is better situated to benefit from the growth story emerging in PV vehicles than Tata Motors.
Fair point, Vineet. But we have a next caller calling in for a query from Hyderabad. Anjali is dialing in for a stock query. Anjali, very good morning to you. What's your query?
Yeah, good morning, sir. So I'm holding Marine Electricals stock. I've bought it at 214.80.
Okay.
192 shares. And after, yesterday I've bought and from then it's been falling. But recently, if you can see, shipbuilding sector has been in buzz, right? So what are your thoughts if I should hold this stock for long term or...
Anjali, is there any rationale that you had before entering this particular stock? Have you been tracking it for a while?
Recently our, Prime Minister also been pushing shipbuilding sector, right? So there's a huge potential, I thought, and Marine Electricals and GRSC Shipyard, these few stocks are been in my mind, Cochin Shipyard and all. So I thought, Marine Electricals are in, less price as well as, it has potential to move up from here. I thought like that. So that was my thought.
Yeah.
So if you could, help out to let us know if I should hold for long term.
Right.
Or,
Got it. Vineet, any coverage that you have on Marine Electricals?
Coverage, but we have been tracking this company and we are quite positive about the management. They're quite conservative. Growth outlook is very strong going ahead. And if you are an investor with a slightly longer kind of time horizon, I would recommend holding on to this stock. And as we expect this counter to do very well in the long term.
Okay, all right. So that's with regards to where Marine Electrical stands. We've got our next question from Chandra, who's writing us from Bengaluru, Hyderabad, and asking about HAL. Bought at the levels of 4,100, 150 shares. 100 shares is what he's having, and wants to know if he can hold from a longer term perspective and maybe even add more or hold more at the current levels. Vineet, your view? It's receiving orders left, right and center, but execution is the key for the counter.
I think we will see good news also on execution coming ahead. So would recommend the person to hold on to this stock.
Got the view, Vineet. But we have a next caller calling in from Karnataka. Muthuraj is actually dialing in to us. Muthuraj, very good morning to you. Thanks so much for dialing in. What's your query?
Yeah, actually, sir, morning. Actually, I was having a Tata Motors shares on 400 shares. Nearly I bought on 1,099. Can you hold or... present 1 lakh is losses. Right.
And do you want a short-term view, or you can hold the stock for a little while and it can probably recover to your buying price?
No, we'll wait on long term. I'm looking on long term.
Vineet, do you have coverage on this one as well? Datamatics, our viewer has roughly about loss of rupees 1 lakh and roughly bought at 1,100 rupees per share. Do you have any view on the stock? Do you think that it can recover back to those levels?
I don't track that stock quite actively. So would refrain from giving any views on that.
Sure, no problem. Swati, on the charts, does it suggest that it can go back to our viewers' buying price?
Yes, it will go to the buying price, but it will take a longer period as such, because whatever the rally we have seen in the month of the June to till the August, the stock has retraced more than 61%, which is the cautious signs, because it has given the breakdown of that golden ratio average. I believe that the downfall can be continued and which will take a counter towards to 800 levels. So up to that level, more selling pressures can be seen. Let the stock support down at 800 levels, then we will see some consolidation phase, then the turnaround. As of now, we are witnessing a profit bookings for a shorter period of time. So just no need to worry. Any momentum above 900 levels will take a stock on the upside towards to 970 to 1000 levels. So if you are looking for a longer term horizon, definitely you can hold on the stock.
Okay, all right. So that's with regards to where Datamatics stands. We've got our next question from Mahalakshmi, who's writing us from Hyderabad and asking about Azad Engineering. She's got around 80 shares at the levels of 1620. sitting on a loss of 4,000 rupees right now and wants to know if she can add more from a longer term perspective. Vineet, her question also is whether there is any tariff problem with regards to where Azad, any kind of tariff impact that will be or have bearing on Azad Engineering, if at all.
So, if they have exposure to the US, definitely there'll be an issue. But apart from that, I think it's a good company. Order book is very strong, and we expect it to continue to do well going ahead.
Okay, all right. So that's the with regards to where Azad Engineering is concerned. We've got the next caller. Aditya is calling us from Ranchi. Aditya, hi, a very good morning to you. How can we help you today?
Very good morning, ma'am.
Good morning, Aditya. Go ahead with your question.
My question about regarding PNB.
Okay.
And to hold this share around 5 to 10 years.
Okay.
Not in hurry.
Okay. I see, Aditya, that you're sitting on profits of over 14 lakh rupees right now because you've bought at the levels of 38 and the stock is currently trading at 111. So congratulations on that. That's significant amount of profits. I'll ask Vineet with regards to your query from a longer term perspective, whether you can continue to hold or maybe book partial profits. Vineet, 14 lakhs is commendable for him. Do you think he can continue to hold this entire holding for the next 10 odd years, or would you recommend him to book partial profits right now?
I think, taking a 5 to 10 year view on the economy is very commendable. We do have a good, outlook in terms of the current dispensation and outlook on the Indian markets. Definitely the stock will do well going ahead. But, I would advise him to book a little profit on this, around 20%, so that he frees his capital and he carries all the money, which is, purely profits that, keep compounding going ahead.
Got the view, Vineet. The next question is actually coming in from Balaji from Tamil Nadu. He's asking a question on Exide Industries. He's bought a decent quantity of over 5,000 shares at 420 rupees per share. Swati, do you have a view on Exide Industries, because it has been a volatile stock? Your view on the same?
The long-term view is definitely positive, and the client has bought at the elevated levels. Downside, it has a good support at around 370. From there onwards, we might witness some sort of a reversals. But as of now, for a short-term period of time, view is a little bit cautious. We might see some more depth towards to 370 levels. Then some turnaround rally can be seen, which will take a stock back towards to 420 to 430 levels. So the view is definitely positive.
Got the view, Swati. But we have our next caller for the show from Hyderabad. Chanakya is dialing in for a stock query. Chanakya, very good morning to you. What's your query?
Good morning, everyone. I'm looking for suggestions regarding JSW Cement, considering an investment of 7 to 10 lakhs and with a holding period of 3 to 4 years. So I just wanted to know, is this a good time to enter, especially in the light of recent developments involving the JSW Steel and the Bhushan Steel case being up?
Chanakya, do you have a specific, view essentially on the cement space and you're looking to enter that, or do you want something specific on JSW? Like, what is the reason that you want to enter this particular stock?
Considering the green, the development side, they are, because I heard that in the entire India, JSW Cement is the only one doing that green energy related. Yeah, that's the word.
Fair point. Vineet, let me come to you on JSW Cement. It's a recent listing. Do you have any view regarding the same, as well as any other picks in the cement space?
So we would recommend Ambuja Cements. We think that all companies do green initiatives, and their capex plans are quite mature, and we think that there is strong growth outlook going ahead. So recommend investing in Ambuja Cement rather than JSW.
That's with regards to where the cement companies are concerned. We've got our next question from Kirti, who's writing us from Bengaluru and asking about Titagarh. She wants to know if she can hold buy or maybe average down at the current level. Swati, your view with regards to where charts are concerned for Titagarh?
See, this is a stock which majorly we have seen a rally during the budget sessions and all those. At the current levels, my view is simply cautious to negative. No need to take a fresh long positions at the current market price. If you're getting any dips towards to 820 to 830, those levels are the good levels, and the risk reward ratio will be also favorable at that point of time. So try to avoid at the current market price any dips towards to 820. You can definitely go long positions, and the targets can be set at around 900 to 940 levels on the high side.
So avoid on Titagarh is Swati's view. We have another caller coming in from Chennai. Aditya is dialing in for a stock query. Aditya, very good morning to you. What's your query?
Hi, good morning. So I bought Quest Corp 5 to 6 months ago at about 342, 400 shares. And it's been going down ever since, and I want to know whether I should get out of this portfolio or I should continue holding it and hope for a recovery.
Aditya, do you also, I think because Quest Corp also had the demerger angle this year, so do you have the shares of the other companies as well?
No, I don't. I bought it after the demerger.
After the demerger, okay. Vineet, let me come back to you on Quest Corp, your fundamental view on the stock, because we've always seen that this one has lagged TeamLease in terms of valuations. Your view?
I think, that discount will persist. And but considering the fact that the market is down and Quest Corp is no outlier to this, I think you should continue to hold on and wait for the market recovery, and then you can take a decision on that a little later.
Okay, all right. So that's with regards to where Quest Corp is concerned. Moving on to the next segment of Rapid Fire. Vineet and Swati, you can try to keep your answers as short as possible, as I said before as well. We've got our first question on Lotus Lab. Danish is asking this question, wants to know as to what the charts are indicating. Swati, your view? Swati, I think you're on mute.
Charts looks positive. You can hold the long position by keeping the stop loss of 825, upside 900 levels can be seen.
The next question is coming on EMIL. Our viewer Siva from Amravati is holding 10,000 shares at 160 and he's asking for a 3-month view. Swati, coming back to you on this one.
Yes, definitely. The longer term horizon is positive. I will suggest to hold on this particular counters. Upside at least 5 to 10% can be seen from the current market price.
Okay, Ismo Limited is the next one. Anil from Kuwait is asking this question. If this is the good time to make an entry, Swati, your view on the charts?
I will not suggest to take the long positions at the current market price. Let the stock find out the support nearby 1180. At that point of time, you can review this particular stock once again.
Adani Total Gas is the other one, and standard disclaimer viewers on this one. Our viewer is asking for a 3 to 5 year view on this one. He's bought it at 917. Vineet, your view?
Very positive. His cost price will come back.
Okay, Suzlon Energy is the next one. From a longer term perspective, Pankaj is asking this question. Vineet, your view?
We have a sell on this counter with a target of around 40.
Happiest Mind is the next counter. Swati, your view in the short term? Vamsi from Bengaluru is asking this question.
My view is negative on this particular stock. It might come down towards to 510 to 520. So avoid the long positions.
Okay, Chandrasekhar is asking the next question on Geo Finance. He's got 50 quantity bought at the levels of 322 and wants to know from a longer term perspective if you can continue to hold. Your view on this, Vineet?
Please continue to hold this stock. Financial services is going to be a big market, and Jio has a very dominant position out there.
Vineet, let me come back to you because a viewer has an interesting query. He wants to invest 10 lakhs in either BSC or Bajaj Finance for the next 5 to 10 years. Your view?
Bajaj Finance is a very good stock to invest.
Okay, all right. That brings us to the end of this segment of Ask Profit and of course Rapid Fire. Vineet and Swati, thank you so much for taking out the time and speaking with us and of course giving us those insights in the past 1 hour. In fact, we've done 38 queries today. So that's a good amount of queries that we've taken so far today. But viewers, thank you so much for watching Ask Profit. Do stay tuned. More news and updates on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
जिसके हम ना हो जान रहे दिल ये तो जान दी है तू
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to KYC on NDTV Profit. On this show, we're going to talk about a stock that has gained
over 30% in the last 1 month. This is at a time when viral and flus are on the rise. Is this hospital a beneficiary? We will get to know that. We're talking about Shelby. Welcome to KYC. I'm Hiral Datia, and with me is Varsha. Clearly, this is an interesting time that we're talking to the company as well, when the entire season is with regards to virals and flus. But yes, Shelby does do a lot more. First, let's quickly understand what are the key answers that we want from the management so far. First up, the occupancy ramp up in Shelby Sanar. What is that actually going to look like from here on? Because that is the key in terms of the recent acquisitions as well. Secondly, when you talk about the Mumbai Greenfield Hospital, the timelines with regards to execution and operationalization of the Mumbai Greenfield Hospital is what we will be watching out for. And very lastly, if you talk about the company's implant business, now that is something that we should be looking out for, because it sits under Shelby MedTech, and this is a key part of the company's long-term growth strategy and diversification plan as well. So these are the first three important points, Varsha, that I'm looking at.
Well, what I am looking at, one is the growth in average revenue per occupied bed, because Shelby is at such a phase wherein at a certain point of time you cannot increase your ARPOB beyond a certain level. So we might want to understand what is that ballpark percentage that Shelby is expecting when it comes to growth in ARPOB. Then I would also like to know the EBITDA margin stability. Because in Q1 FY26, if you see, the margins were under pressure. Now this was because of high doctor costs. So I would want to know what is the sustainable EBITDA margin going ahead for next 2 to 3 years. So these are my two main questions that I would want to ask to the management.
Absolutely. In fact, let's shift focus and understand more about the company. Shelby operates a chain of multi-speciality hospitals, and this is across India. They have 11 hospitals which are spread across Western, Northern and Central India. A franchised hospital network is what they look at as well. In fact, implant is another segment that they're looking at. They manufacture US FDA approved implants and sell them across the US and other international markets as well. The plan is to make this $100 million business in the future, and that is one of the pressure points right now that the company is facing.
Right. And also we might want to understand what are the business highlights when it comes to Shelby hospital business. So if you see the ARPOB, that is average revenue per occupied bed, which is an important metric in an hospital, which stands at around 45,673 rupees. The operational bed, if you see, is at almost 1,400 odd. The occupied beds stand at 639 beds. With that, if you see, the occupancy rate is at 45%. Also, onto the average revenue per occupied bed, if you see the trajectory, company has seen a decent growth, when it comes to ARPOB. So in FY22, the ARPOB was 32,106. Fast forward to FY25, it stands at around 41,377. So good growth we have seen in ARPOB when it comes to Shelby.
Okay, so that's with regards to where the ARPOB go, but let's understand the segmental mix as well. Now, it's a specialty business, so the revenue mix is also pretty interesting. Arthroplasty, 41% of the revenue is coming from here. Orthopedic contributes around, say, 10%. Oncology is pretty similar, and others is around 40%. So that's the kind of revenue breakup that you're looking at across verticals.
And also, Hiral was talking about Shelby Sanar, which is an important acquisition that the company has done. And why this is important? Because that will outline the growth going ahead. So onto the Shelby Sanar, the ARPOB for that stands at around 89,803 rupees, while the bed capacity is at 130. The occupancy rate over here is only 22%, which management want to increase it, going ahead. So overall, if you see the pain point in Shelby Sanar is the occupancy rate, which is at only 22%.
Okay, so that's a question we will check with the management, Varsha, but let's understand all the parameters that we are going to consider from here on. First up, you have the income statement check that we will be doing. Balance sheet is another one. Cash flow, return ratios are very important over here as well. Shareholding, street cred and valuations along with the outlook is what NDTV Profit is considering. But first up, let's quickly look at the income statement. It's very interesting because it's consistent and robust upward trend is what we've seen in revenues over the last 3 years. Between FY23 to 24, the growth did stabilize at around 15 to 16%, which indicated sustained business expansion. If you talk about the operating profit as well, that has seen a significant growth, and the growth on both these parameters is actually translated into profitability, which you can always see on the screens right now. Though what is interesting is in FY25, the profit number was only 2 crores, and a lot of factors that have impacted as well. The recent performance is also suggesting margin pressure, and this is potentially on the back of the acquisition which has been made, because over there occupancy was lower initially and the finance cost was also higher. We're talking about acquisition of Sanar hospitals. In fact, it has been a significant point of concern right now. The new hospital has actually faced slower than expected occupancy rates and has been operating at a loss, negatively impacting the consolidated margins and profitability. In fact, the management is expecting the facility to break even in the near future, but its performance will remain a key credit monitorable from here on. And the challenge is effective integration and scaling of the newly acquired expanded facilities to maintain the margin trajectory. And very lastly, when we spoke about the implant business, this division, while expected to contribute to revenue diversification, has actually faced challenges, and it is evident in the kind of profit growth and the margins that you're seeing, because it is a high working capital business with a significant inventory that is holding up, and it's yet not become consistent in terms of profitability. Expenses are also high, and that is what is impacting the margins, and the margins have been fluctuating over the last couple of years.
Now, talking about the balance sheet, let's see what are the key concerns there. Well, overall, not a dramatic one. The good thing is the debt to equity ratio, if you see, stand at around 0.48 levels, though debt has been increasing, but not at an alarming sign. So, and if you see the cash and bank balance, which has increased from 12 crores to 35 crores. So overall, not a dramatic one. So we have given a neutral rating when it comes to balance sheet.
Okay, so that's the balance sheet. Now let's look at the cash flow. Now there has been an increase in the working capital days of Shelby, and that is what has actually locked up most of the cash in the business. Acquisitions have dragged the cash flows, and this is on the back of initial losses, lower occupancy as well as the integration costs, and hence a downtick. That's a thumbs down on the cash flow, because your net cash flows, though have turned positive this time around, your cash flow number is negative at around 4 crores.
And talking about return ratios, let's see what's happening there. If you see return ratios, there's been dip in FY25 from FY24 levels. This is because of the impact of the profitability that we have seen, and one of the reasons is also the higher tax outgo that the company has seen. So overall, if you see the return ratios barring FY25 is good compared to its peers like Aster DM or Yatharth Hospital, but because of this a pressure in profitability, that 14% we are seeing for FY25, and that's one of the reasons why we have given a neutral rating when it comes to return ratios.
So that's with regards to return ratios. Let's look at the shareholding pattern from here on. Overall, promoters absolutely consistent. FIs have actually gone ahead and increased their stake from a 4.88 to a 5.21, which is a positive. Likewise, the DIIs have also marginally increased the stake as well. And your public shareholding slightly has gone down, though your shareholder base that has increased. So taking these three aspects into consideration, we've given it a thumbs up with regards to shareholding pattern.
Considering street cred, so in the last 1 month, company has given a very good returns of almost 30%, while in last 5 years, the stock is up 190%, though in the last 1 year, the stock was down almost 10%, but overall, if you see, that's, considering the returns that company has given, not a bad one. Even if you see the year-to-date returns have been around 9%, and so, the last 1 month, the stock has given actually very good returns, and one of the reasons why we have given an upward rating to it.
Okay. Let's look at the valuations over here. It's a very interesting aspect to look at the valuations here on, because if you have to compare it to peers, It probably sits in on number 3 in terms of being expensive, because you still have an Aster DM and KIMS, which are way higher as compared to a Shelby. And it's not only in terms of FY26, but even if you talk about FY27, the scenario remains the same. Now, with this kind of inconsistency that we've seen in terms of the earnings right now, I'm talking about the latest quarter, the investments that it is making as well, I think what analysts are of the opinion is that the outlook is something which is supporting the kind of earnings multiple that a Shelby is sitting on. And taking the outlook and the current and the future multiple into consideration, if it all fits in well and is able to perform, that is what we have to see, and hence a neutral rating in terms of evaluations go.
Right. Now, lastly, combining your analyst recommendation and outlook. Well, on analyst recommendation, there are not much analysts who are covering this stock, and hence there are only 2 analysts who have given buy rating, 0 hold and 0 sell, while the downside potential for is 15%. But then we have given a thumbs up. Now, this is basis outlook that the company is expecting. So they expected the EBITDA margin with operational leverage and business mix shift. So the EBITDA margins are bound to inch up. The occupancy is expected to touch at 50% plus for FY26, and the government mix is expected to reduce to 20% of revenue, and the single digit EBITDA margin is been expected for their implant business in FY26 and 27, and which will scale up to 20 to 25% in next 4 to 5 years. So good outlook, when it comes to FY27, and of course for the next 3 to 5 years. And this is the reason why we have given thumbs up when it comes to outlook.
Okay, so those are the parameters we are considering. But let's quickly look at all the parameters, the 8 ones. What do they stack up? Income statement, balance sheet, return ratio is a neutral. Cash flow is a thumbs down. On the other 4, you have 3 thumbs up, which is shareholding, street credentials, and street coverage and outlook. Valuations, again, neutral. And this takes us to a 5 on 8, which is also a pretty good rating in terms of where KYC goes. And the conversation from here on is going to be interesting, because Varsha did catch up with Shanay Shah, president of Shelby, to discuss the company's outlook and the plan of Mumbai Greenfield project. Let's quickly listen into that conversation.
Let's talk about what is the talk of the town when it comes to Shelby, because of the Delhi acquisition that you made, that is Sanar. The occupancy there remains low. I think it was almost 22% in Q1. Now, what steps are being taken to ramp up it quickly, and where do you want to take that occupancy level to?
Sure. So, look, Varsha, thank you for having me. We have seen that, usually we take 2 to 3 years for a hospital to really turn around. Essentially, this is a hospital where, it's been 6 quarters since we've taken over. And we have taken the right steps over the last, 6 quarters by getting the right clinical talent on board, as well as, the entire management rejig that happened at the senior level. So, the worst is behind us, and, we will see that the numbers will start improving, and they have started improving. In a couple of months ago, we also had an issue with, due to the Middle East crisis, and a lot of the patients, were not traveling into the NCR region at that time. So that did temporarily affect us. But, as I said, it's a high-end center for transplantation, whether it is liver, kidney, bone marrow, all high-end treatment happens at that hospital. And we are getting good traction, not only from international patients, but also from, the domestic patients, as well as patients traveling in from the neighboring states.
Understood. Also, Shanay, when it comes to your standalone hospital business, the margins over there were dropped due to higher doctor cost. When do you expect that margin stability, and what is the sustainable margin when it comes to hospital business going forward?
See, over the last few quarters, we have, kind of added a lot of doctors, and, we have, including some of the star doctors in some of these locations. So, we are building institutes of different specialities across all these different hospitals that we run. And for that, the initial investment is to get the right clinical talent on board. And that is the reason why we saw that, the earnings as a percentage to revenue has come down, not very significantly, at the absolute EBITDA level. But in the times to come, we do believe that we will stabilize, and we are looking to be at anywhere between 20 to 23% in this year.
Understood. Also, continuing on that, your Mumbai Greenfield Hospital, now that Charity Commissioner has the approvals are in place, what is the expected timeline for final approvals and handover?
So the Charity Commissioner, as you rightly said, has given the nod to us, and what we have to do now, as the trust is obliged to kind of submit the document to the Charity Commissioner, the document which has been agreed. So they are in the process of doing that. Once that is submitted, the following that the other formalities will be completed, and then we will be going in for the approvals with the BMC for the building plans, etc.
Usually, just wanted to understand a ballpark number, or rather ballpark months, if you could give us, by when you're expecting this project to go live?
So after the complete handover of the property to us, which should happen hopefully very soon over the next 3 to 6 months. Once that happens, it should take us roughly 3 years to kind of operationalize the hospital.
Understood. Also, continuing with the Mumbai, Greenfield Hospital, what is the expected bed capacity and target revenue per EBITDA once it becomes operational?
Yeah, so this is going to be a 175 bed facility where Shelby will be investing close to 250 odd crores. And it is a pure revenue share, with the trust. So there's no fixed lease arrangement here. And the average revenue per occupied bed, if that is what you were asking, in Bombay has been in the range of 50,000 to 60,000 for most hospitals. So we will be in that range for the Bombay hospital.
Continuing on that, Shanai, so if you see in Q1 FY26, the ARPOB, that is average revenue per occupied bed, was almost 45,000. Now, after a certain point of time, it's not possible to increase ARPOB at a certain level. What is the growth estimation when it comes to ARPOB, maybe, in next 1 or 2 years?
So see, I think for Shelby, the ARPOB has consistently gone up over the last several years. So if you look at the data 5 years ago, we were at around 30 to 33,000. Today we are at 45,000. We believe that the ARPOB growth will continue to be in the 4 to 5% range, on an annual basis. Now it may happen, it may be that you may see that there is a spike of 10% in 1 year. At times you will not see a spike in a particular year because the specialty mix also changes, and different specialties have a different ARPOB. So that might change, but in terms of the price revisions are in the range of 3 to 5% every year.
Understood. So 3 to 5% is what ARPOB growth is expected. Now, Shanai, let's talk about your implants business. Now, the revenue over there has seen growth of around 20%, but the EBITDA is still negative. When do you expect EBITDA to break even?
Yeah, so see, there are a couple of major changes that that is expected over the next 1 to 2 quarters. And these major changes, will basically help us reduce our cost of goods and at the same time improve our gross margin because of higher revenues and higher earnings per implant. Because we are launching certain implants which will actually give us a higher realization compared to our existing set of implants. So with these couple of things changing, and as you can see in the revenue growth, the acceptability of these implants is very high among the clinicians. Now, this is something that will take a quarter or two, but we do believe that, once that comes in place, we will definitely be EBITDA positive and also, then be inching for a higher EBITDA margin.
Understood. And any revenue target that you have set for implant business, Shanai?
Yeah, so we have set revenue targets. Unfortunately, we are not sharing these revenue targets, at the moment. But this is a business which is grown significantly. So last year we did about 90 crores. The year before that we did about 60 odd crores. So it is growing at 50% for us, and we believe that it will continue the high growth trajectory.
Understood. Also, Shanai, a significant portion of debt is been linked to implants. Now, when do you expect your debt to meaningfully reduce? Any target that you have set for that?
Well, if you ask me, the debt equity ratio right now is roughly 0.3 to 0.4. So, we feel that, we are basically in a very comfortable debt to equity kind of position. Having said that, the plan is not to increase the debt, very significantly from here on. We believe that our internal accruals, in the hospitals business will take care of the interim requirements of funding, the implant business, as well as, some of the newer strategic interests of the group, like the hospital in Mumbai.
Understood. Shanai, my last question, before I let you go, you have given a top line growth target of around 12 to 15% for FY26. Do you want to inch that up, number one? And number two, what are your target for EBITDA margins on a consolidated level?
Right. So, unfortunately, I will not be able to share, the numbers in terms of, what the EBITDA margins will be. But I told you that, we will be in the range of between 20 and 23% for the hospitals business. And in terms of, the revenue growth, we are well positioned because as I discussed, the implant business is in a high growth trajectory, and we are heavily investing in newer clinical practices. As I mentioned earlier, we are also investing heavily in oncology in terms of adding new linac bunkers in 3 of our hospitals, and also robotics in a very big way. So, the robotics within orthopedics for knee and hip replacements has really picked up very significantly for the group. And all these factors, will really help us, beat some of the past trends in terms of, our revenue growth numbers.
Well, this was the management of Shelby Limited. The top 3 takeaways from this interview would be: they expect unit economics for Shelby Sana to improve. EBITDA margin for hospital business is expected at 20 to 23% in FY26. And lastly, implant business to be EBITDA break even after few quarters. So all the main pain pointers have been addressed.
Absolutely, all pain points that the management has addressed, and the stock seeing some good moves, but completely out of time. Thanks for tuning in to KYC only on NDTV Profit for your profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
जान रहे दिल ये तो जान दी है तू।
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Nifty trades below 24,700. PSU banks, metals lead gains. Media and realty on the back foot. Broader markets trade with marginal gains. Meanwhile, Vodafone files a new plea in the Supreme Court. Sources say that it sought a waiver of penalty and interest on fresh AGR demand of 9,450 crore rupees.
The compliance since then we have been up to date. We haven't got any compliance issues since 2021.
Man Industries tanks in trade after SEBI bans management for 2 years. MD tells NDTV Profit that they haven't faced any compliance issues since 2021. Meanwhile, sources tell us that 3 independent directors at PTC India Financial Services resigned. Big governance issues in the spotlight. afternoon. You're watching Markets at 12 with me, Shreyansi Singh. And first things first, let's take a look at the markets. And Nifty, in fact, trading sub those 24,700 levels at this point in time. And whether you look at Sensex as well, you do have marginal gains coming in as far as the Sensex is concerned. Now it's slipped into the red, of course, like you can see on your screens as well. So that's largely the kind of picture as far as those two indices are concerned. But when you take a look at the sectoral picture as well, that is also looking quite mixed at this point in time. So what's leading gains for you at this point is a PSU bank, metal, IT, as well as bank and oil and gas indices. But on the flip side, you do have media on the back foot. So is realty, consumption, FMCG, as well as energy. So those are some of your top, that's the kind of picture that you have in terms of your top gainers and losers, at least on a sectoral basis. But let's also quickly take a look at the top losers from within the Nifty 50 pack as well. And what makes it to that list is an ITC, Bharti Airtel. And from the broader markets as well, Bajaj Finserv, L&T, Reliance also on the back foot at this point in time. And on the flip side, when you take a look at the gainers, there's a Hero MotoCorp that's doing quite well, 2.5% uptick thereabout coming in on that counter. Bharat Electronics is buzzing away in trade, up about 1%. And Adani Ports, HCL Tech and HUL also in good shape. So that's largely the kind of handover that you have in terms of the top gainers and losers. A mixed picture is what you're looking at on a sectoral basis as well. But let's move on. Let's also talk to you about gold prices, because that is where you're seeing quite the sparkle come in. In fact, let's take a look at the moves coming in on a year-to-date basis as well for gold. You do have a bunch of triggers coming in for gold prices. So you do have central banks that have ramped up their buying. Other than that, of course, there's been a bunch of other triggers. Let's also quickly take a look at the year-to-date moves as well for gold prices, as well as silver prices and platinum and palladium, because you've in fact seen quite the move come in, 47% uptick coming in on gold prices as far as the year-to-date move is concerned. In terms of the key triggers for gold prices, you do have, other than central banks ramping up buying, you do have inflows into the exchange-traded funds, and that has been quite the uptick as well that we've seen. Other than that, in terms of the key triggers for silver prices as well, the industrial metal in fact has risen on the back of it being a supply deficit driven demand that we've seen for silver prices as well. As you can see on your screens as well, gold prices 47% on a year-to-date basis and 77% uptick in fact coming in for a platinum, palladium as well, 63% gains coming in for the precious metal. But tell you what, let's also take this conversation forward with Navneet Damani, who's the Group Senior VP, Head Commodities Research at MOFSL. Thank you so much, Mr. Damani, for joining us this afternoon.
Well, thank you.
Well, absolutely. First things first, this is a good day to be talking to you. I feel like every week you do have gold prices hitting that record high. And when you take a look at silver as well, you've seen quite the strength coming in there. The entire pack is buzzing away. But first things first, let's talk about gold. What do you think have been the key triggers when it comes to gold prices, and where do you see it going from here on?
Well, central banks have been net buyer, as you rightly pointed out. Central banks have been the biggest buyer in gold over the last few months, quarters, and maybe for the year as well. But what has changed in the last few probably weeks or months is that the de-dollarization theme has caught up big time. Ever since President Trump is on the hot seat, there is a lot of activity which is not gone down too well for the global macro framework, and a lot of countries are getting disturbed. So we are seeing a lot of a kind of de-dollarization activity where people are dumping in US Treasury bonds, and this money which is coming in from there is parking its way to gold and silver, which is what has been driving these two metals for the last few months. Now, will this rally continue? Of course, this is the buzzword from which we've been talking about for the last many years, and now it is ultimately catching up triggers. The pace of the rally is a little worrying at this point in time. It is not the view that the gold prices are not headed towards 4,000 or something. They are definitely headed there. Silver is head towards $52 or maybe $55 on the COMEX. But what is the pace, which is about 18% in the last 18 days, is what something is going to set a panic tone globally. I think on the domestic front, rupee depreciation plus the kind of momentum we are seeing in gold prices is what is causing some stir. And eventually, any knee-jerk reaction, any correction could be an opportunity where you see maybe buying emerge once again.
Well, absolutely, thank you so much for joining us with that entire update. Let's also get Sachin Jain, who's the regional CEO, India World Gold Council as well, on board. Mr. Jain, thank you so much for joining us this afternoon. I wanted to get your take as far as gold is concerned. First things first, Mr. Damani has also talked about some of the key triggers that we've seen for the precious metal, but what do you think makes it to your list in terms of the key triggers that have been leading to this kind of uptick in gold prices that we've seen?
First and foremost, a big thanks to you to get me on the platform. And while I agree to Mr. Damani's whole insight on central banks' continued buying and de-dollarization, which have been common themes over the last 18 months. But if you look at the last 3 months in particular, what's really triggered up is the financial markets consuming gold purely on the return that golds have done and gold has performed on. I mean, this year in particular, 46% up from Jan 1 to now. And if you look at just on the segment of the Western ETF market, that's been the core driver of the huge increase. I mean, central banks in particular over the last 3 months have been quieter. Even the developing markets have been quieter. But I think the key driver has been the financial markets performance and gold as an asset class. So that's been the core trigger. And if you ask us in terms of looking into the future, while as World Gold Council, we will not ever predict a price, but the reasons and the pillars of why gold gets stronger and there's an influence on the price, those still continue to be in the favor of gold. Some of them were highlighted by Mr. Damani already, but I think elements around de-dollarization, central bank buying that have been continuing. But gold as a hedge, gold as a asset for rainy day, those core characteristics of gold are right now at play.
Well, absolutely, those are some of the triggers that we've talked about. But Mr. Damani, coming right back to you, when you talk about the de-dollarization trend, do you see a continuation of this going forward? Do you think that this is going to be driving a lot of demand when it comes to gold prices?
Well, absolutely. Where do you put the money which is coming in from, say, central bank treasury selling? So it cannot be parked towards equities, definitely. So you would look for some alternate asset which is safe haven, and nothing better than safe haven asset like gold or maybe dollars. But since you don't have an option to invest in dollar, maybe the money is moving towards gold and silver, which are the highly liquid commodity assets which are globally renowned. So that is where the kind of pace and the exuberance we are seeing in the last few days, weeks and months is what is pushing up gold prices. Of course, there is geopolitical tensions. Of course, there is news and buzz, and every day another round of tariff coming on some of the other product, which is adding to the risk premium to the prices. But the major trigger is at this point in time money flowing in from, say, other assets towards gold because of the financialization, because of the returns it is giving, and some bit of FOMO which is created in the market, that since you're not holding gold, the rally is going to get missed out, and a lot of people are buying it from that perspective as well.
Well, absolutely. A lot of buying from that perspective as well. Mr. Jain, I'll come right back to you when it comes to the key triggers, right? Because you do have a bunch of uncertainty in terms of geopolitics, as well as tariff uncertainty. There's a lot of conversation around trade talks that we've seen, and a lot remains to be seen in terms of what is going to be happening in terms of the US tariffs as well. So keeping all of that in mind, how do you think that really plays into safe haven demand for gold? Mr. Jain, that's for you. I believe you're muted at this point. Tell you what, I'll take that question across to Mr. Damani and Mr. Jain. We'll try and get back to you on this one. I wanted to understand exactly how the safe haven demand is playing into in terms of gold, and given all of the tariff uncertainty, how do you see that happening for gold prices in terms of the demand uptick there?
Well, demand has been pretty robust, and there is a supply shortage which is kind of emerging. And since the kind of demand we are seeing is not seen in the past few years, so there is a kind of risk premium and premium which is built into the prices. If you see domestic demand, it's been very robust. Particularly coming to silver, the demand has been outrageous. There has been 4 successive years of deficit, and this is the 5th year where we see silver into a deficit. Demand from China has been growing exponentially, from EV, from solar panels, from 5G technology. These are some of the major demand triggers, and the kind of sales we are witnessing in EV is phenomenal. In fact, whatever the target was for the 12 months has been already delivered in the last 8 months in China. So that is the kind of traction we are seeing in demand from probably EV segment as well as solar panel. So these are two major driving factors at this point in time. Industrialization particularly has been one of the driving factors, and a new segment which is getting emerging at this point is jewelry, because a lot of people, since gold is becoming unaffordable or very expensive, are flocking towards manufacturing of silver jewelry or silver articles, and that is where a next round of demand is coming in for silver. So in putting this all into perspective, it looks like the next thrust or the next big move along with gold can be in silver, and maybe another 15-20% upside could be possible in silver before we end this year.
Other than 15-20% upside is what you're penciling in, but quickly getting a sense of the kind of prices that you have in mind, the kind of forecast that you have in mind for this year's end, as well as 2026, because we've seen quite the bullish calls come in from brokerages as well off late when it comes to the 2026 target as well. So keeping all of that in mind, Mr. Damani, where are you at with in terms of your forecast there for gold as well as silver?
Well, for gold, we were anticipating 3850 could be the target for end of the year, but it is very closer to what, as we speak, maybe about $10-15 shy of that level. So I think it's going to be a difficult revision for us also to upgrade our target to maybe $4,000 plus dollars. So, but we are already working in that frame. For silver, we've been very bullish and very vocal about 1,25,000 as target, and the current target stands as 1,60,000 or maybe $52 on the COMEX. So we expect that 2025 is going to be ending at a very positive note. However, for 26, we have to see that kind of exuberance that we are into, or the kind of momentum we are into, will it carry forward beyond the first quarter of 2026 is what something that we have to analyze at this point in time. So we're not placing our bets for 26, but for 25, we will end on a positive note, maybe $4,000 for gold and $50 to $53 for silver.
Well, absolutely, and that's quite the forecast, Mr. Damani. Thank you so much for that update coming in there. And I like that you called the demand for silver outrageous as well. Mr. Jain, I'll take it across to you when it comes to silver. What do you think are the key triggers, as well as what are you penciling in by way of prices for 2025 as well as 2026?
Ma'am, as I said, for gold, as Goldman concept, we don't predict a price.
No,
but as I said, the pillars on which the gold prices are built upon are certainly in favor of gold, and these shall continue from mid to long term. And what I was reflecting in the past was that, you asked me about what is the impact of the tariff was, for example. Now, earlier in the year, we said 4th of April, when the whole tariff is going to get announced, the whole settlement of the world will happen. It'll be clear. Now we're sitting way forward on the 30th of September. It's still unclear. And I think we've seen the similar issues, the geopolitics level and trade level over the last 2 or 3 years, that elements are not getting sorted in like overnight decisions, and things get prolonged on. And I think that prolonging of clarity is also having a positive impact on gold, which shall continue. That's the way of life we're in. Will the world become completely peaceful, everybody will become each other's friends, is a far distant possibility. And hence, every decision will take time to finally get settled. And hence, those elements give the confidence of the gold pricing. So that's the element, and I think the bases and the pillars of gold on which gold is built upon are very, very strong and very much in the favor of gold.
Well, absolutely. I understand that you can't give us color in terms of the prices, but those are the key tailwinds as far as gold is also concerned. I also wanted to understand, Mr. Jain, if you had an outlook in terms of the inflows coming in on the ETF front as well, because we've seen quite the uptick there as well. Could you help us with some more color on that front as well?
Let me reflect upon the Indian ETF side first. So on the Indian ETF side, if you look at the AUMs on the 1st of January 2024, were about 40-41 tons. On the 1st of January 2025, were about 57 tons. Now, 16-17 tons over the last year, you might say that is small, but based on the base value, it is fairly large. As of right now, we've seen upwards of 72 tons as AUM on ETFs, and we're seeing a constant interest on not just HNIs and financial investors, but people or average people on the floor or the street are getting interest. And I think ETF as a product is a regulated product. It's a phenomenal product. Not everybody understands that it's backed by physical gold. And hence, we foresee that gold ETF in particular in India is at the cusp of a growth. And we foresee a very phenomenal growth in the coming time because, being regulated, the ease by which you can hold it, purity, and all of those elements are taken care of. Now, globally, over the last year in 2024, we saw a net increase of about $18 billion. And if you look at just in the, in the first few months of 2025, that was overtaken. And this year is going to be a bumper year, and we'll perhaps get back to the 2022 levels of global gold ETF. So from an ETF perspective, globally, Western markets, Eastern markets, everybody inclusive, it's going to be a very strong year. India, it's at the cusp of a very strong year.
Well, that's some key commentary coming in there, right? That we're still, given all of this demand that we've seen coming in for gold prices, we still have a lot to go forward to in terms of prices. But tell you what, Mr. Damani, I quickly wanted to get a sense of what you think about the gold-silver ratio that we've seen off late, because that has also been on a little bit of a higher level versus the averages. What do you think it indicates to you at this point in time, and where do you see that also going?
Well, if you see the 50-year ratio, the average around 68. If you see the 25-year ratio, the average around 70, 72. But only twice in the last maybe 10, 20 years, it has gone above $100 mark or maybe the 100 mark once in COVID, and secondly, about 3-4 months back. And post that, we are seeing a massive reduction in the ratio, and now as we speak it's around 80 to 83 levels. We see that 80 will be the base for the ratio, and maybe now 90 will be the peak for the ratio for the next few quarters, and it will hover around this range for the next few say maybe 6 to 12 month perspective. We do not see it averaging again towards 70, 72 in the near future because we feel that both these metals are poised for some reasonable upside. However, if somebody wants to trade the ratio, we are on the lower end of the ratio where gold again could start outperforming, and maybe silver could gradually add up to the gains.
All right, then, gradually add up to the gains. Thank you so much, Mr. Damani, as well as Mr. Jain, for taking time out and joining us this afternoon. So the pillars for gold are quite strong, and there's a big, long leap forward as far as gold prices are still concerned. Those are some of the key takeaways that you got in terms of the tailwinds as well. But let's also move on. Let's talk to you about the select logistics companies that are buzzing away in trade after announcing those price hikes. In fact, Jasmeet is standing by with that update there.
Well, right, yes, thank you for that. I have a couple of logistics stocks are buzzing in trade today. This comes in after the average price hike by the companies. While the first one on my list is Blue Dart. If you look at the stock, it nearly hit 10% intraday high and currently is buzzing in trade today. While this comes in when the company announces a price hike with the range of 9 to 12% effectively from Jan 1st. While company also reiterates that this price hike will not be applicable to the clients which are being onboarded during October to December month. Now, if you look at the overall quarterly margin trend of the company, it has been in the range of 15 to 16.5% in the past, but previous quarter reported a margin of 14.15%. While given this price hike should go forward and impact the margin positively, that's why the stock is buzzing in trade today. While if you look at my next stock in radar would be All Cargo Gati. While the stock is up nearly 3% on intraday basis, and again it's buzzing in trade today. If you look at the stock, the company announces a 10.2% general price increase going forward from Jan 1st itself, while the company also says this will be applicable to the express delivery segment of the company. While they also note that this increase in price will help the company to maintain the balance with the operational cost as well as to develop the infrastructure. And when you look at the other EBITDA guidance management has given going forward, as per the merged entity, they say that the FY25 EBITDA stands at 204 crores. While they also make a note that they expect the compounded growth to yield by 20% for FY28 and also yield by 21% by FY30. So these are two stocks buzzing in trade today on the back of increased hikes.
All right, then, thank you so much. So those are price hikes, and that is the kind of trigger that we've seen come in for a couple of those logistics companies as well. But let's move on to another stock that is in the spotlight. Let's talk about Man Industries. And they've talked about how they've not faced any compliance issues since 2021. In an exclusive conversation with NDTV Profit, you do have the MD talking to us about this. And this is, of course, after the SEBI has barred the company's management. He highlights the company's clean compliance record following the SEBI action. Let's go across and listen into a slice of that conversation.
Obviously, it concerns when the order is, though there is no financial impact on the company, the shareholders, it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date, and we are keeping monitoring very, very close, and all the related party or any we have stopped completely since 2021. And this is to, interest more shareholders, and which we have seen over the last 2 years, with where we have reached from where we were. Today we are, the order book is the strongest, which was never been the case. We were always trading between 1,000, 15, 2,000 crores of top line. And today we have a 5,000 crore order book already in line. We have managed to, remove the assets which were not performing and generate that income as well into the company. And looking forward also, we will be doing the same. So yes, obviously this affects us, but it has been a long time overhang for the company as well. And by paying 25 lakhs and getting this matter disposed of and getting it over and done with, we can look forward now positively. So I think it was to be done someday or the other. It's happened today. It was supposed to happen someday. And yes, we will fight for our legal rights wherever we feel the order is not in our favor, and we will do the needful.
All right, and there you go. That's Man Industries charting a path for growth amid that pressure coming in on the stock today. As you can see on your screens, 11% downtick coming in on this particular counter. And there you had it. That was an NDTV Profit exclusive, where he's talked about compliance issues not really being there since 2021. Let's also move on, get you the word going as far as Vodafone Idea is concerned, because in fact that company has urged the Supreme Court to waive penalties, interest on penalties linked to its adjusted gross revenue or AGR dues. That's the plea that was filed as an amendment to its earlier petition, challenges the 9,450 crore rupees in additional AGR dues till financial year 19. In fact, we do have Danish, who's tracking the story, joining us with more. Danish, help us out with some more details when it comes to their plea to the apex court.
Vodafone Idea has filed amendment to its petition, which was filed on the 19th of September, and NDTV Profit has seen that petition. And in this petition, the telco has sought, waiver on interest penalty and interest on penalty, and this is till the AGR dues of FY18 from 2018 to 2019. Before that, the earlier plea, which is already there in the Supreme Court, it is on the additional demand by the DOT, which nears somewhere around 9,450 crore rupees. But in the petition, Vodafone Idea has also prayed to the Supreme Court to give waiver on interest penalty and interest on penalty by giving the fact that there is no there is no particular calculation that DOT has provided to Vodafone Idea, and the telco has said that both the parties, by that I mean DOT and Vodafone Idea, they both know that whatever amount that the DOT has sought from Vodafone Idea, it is not crystallized, it is not finalized. So giving this justification, Vodafone Idea has sought relief from the top court, and in the petition, Vodafone Idea has also highlighted another case between MADA and SAIL and given an example of that judgment, which was a judgment given by a 9-judge bench. In that, it is clearly stated that such things cannot be permitted, and hence Vodafone Idea has given an example of that judgment and has sought urgent relief from Vodafone from the top court. And this hearing is supposed to take place on the 6th of October.
All right, then 6th of October is the date that we're marking on all our calendars when it comes to Vodafone Idea. But that was the plea that was made to the apex court. But with that, that's all the time that we have on this edition of Markets at 12. Thank you so much for tuning in. Don't go anywhere, because Profit Buzzers takes all of the action forward.
That's huge. That is a biggie. It's on.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
the world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to Profit Buzzers right here on NDTV Profit. My name is Puneet Zaveri. Let's, over the next half an hour or so, we'll get you some of the key important stocks as well as stories that you need to track as an investor. Before that, let's see how the markets are doing, because it's been another day of chop and change, to say the least. The Nifty 50 is back in the green again after being briefly in the red in the morning. Right now up almost 38 points, but still below the 24,700 level, and that will be key to end above, if any, in terms of positive momentum for the markets, because we have been seeing continuous pressure on the Nifty. It was down for 7 consistent days, including yesterday, and hence this is an important session before the RBI meet tomorrow as well. When you look at the Nifty Bank as well, it's a similar trajectory that it is back below the 55,000 level, and on the technical side, we have seen that 54,000 is a key support level. So before any kind of moves that happen with the MPC tomorrow, the other one to watch out for. When you look at the advance decline ratio, it's been a trajectory where we were having a higher number of advances at one point of time. Then we switched below that. We briefly breached that as well. And now the advances and the declines are very neck and neck, almost 1,200 advances for about 1,150 declines. So that's the key aspect. It'll be important if we can continue to be in the green, but it seems to be a day where we'll start and continue to see chop and change as well. When you look at the mid cap and the small cap index, we have seen that both these indexes have actually been outperforming the benchmarks. For today though, largely flat on the mid cap, the small cap as well as the other one, where we've seen some green earlier in the day and now it's slipped in the red, just 0.09% though. The BSE 500 is the other one where we've seen essentially a time where stocks like Tata Investment, Blue Dart, we'll also put the focus on Blue Dart during the show. PNB is up 3.4%, while on the loser side, we have seen Zydus Wellness as the one stock that's leading the BSE 500 on the downside as well, and that's largely one of the other key aspects as well. We have Mr. Chokalingam who's joining in as the fundamental guest for the show as well. Before I come to you, Mr. Chokalingam, we're just going to put the spotlight on Trent now, because it's Nifty 50's worst performer and down almost 33% year to date, and 43% since its index inclusion in the Nifty 50. With the relative strength index below 30 signaling an oversold condition, yet analysts largely are remaining bullish as well, despite the underperformance of the stock as well. Now they've cited the 20 to 25% sales growth that the company is guided for, but let me get in my colleague Mahima with her analysis of what to make of Trent going forward. Mahima.
So it's been a year since Trent has been included in the Nifty 50, and since then it's fallen 43%. Year to date also it's down 33%, making the worst performer on the Nifty 50 index. RSI also trading below that 30, marking it in the oversold zone. So we'll take a look at as to what's not working for Trent. Firstly, the growth rate has declined from a 50% to a 20% in the last 4 quarters. We've seen as to how YOY growth was over 50% for Trent in 2024, that has come down to around 20 to 25%. In terms of valuations, that's always been a concern for Trent. Start of 2025, it was trading at 101 times. The trailing 12 months is right now around 106 times. Current PE at 83 times, 5-year average of 131. So it's nowhere near to cheap where valuations are concerned. Plus, FIs have been selling the counter since its inclusion in the Nifty. It stood at around 24.43% in March 23. It went to around 27% around September 2024, but has come down to around 18.4% as of June 2025. So FIs have been selling the counter slowly and steadily. In terms of the ANR consensus that's there on Bloomberg, this is an interesting one. Despite of this kind of selling happening in Trent, a lot of analysts are still bullish on the counter. There are 17 buys right now, 5 holds and 4 sells, and a return potential of 27%. Macquarie having the highest target price of around 7,200 for Trent. Now, what is making analysts exactly bullish? That's the real question. Firstly, analysts are expecting, and this is in line with what the management has already guided for a 20 to 25% sales CAGR over medium term. That's around FY20 till FY28. This is what they're expecting because of the kind of aggressive store expansion that the management has already guided for. Plus, steady margin expansion is something that they're looking at going forward. They're adopting a lot of AI in their business, which is kind of taking their employee cost down. Plus, they are foraying into newer things. Recently, they launched something called Burnt Toast, which is catering to the Gen Z and newer audience. So they're tapping into newer and younger markets as well. HSBC believes that valuations at this space right now, with the kind of growth that Trent has already guided for and is penciling in, is justified. And in terms of the other factors that have been doing well for Trent includes your revenue per square feet has been steady despite of the aggressive expansion that the management has taken. Plus, operating cash flow has also been healthy. Plus, this is an interesting one because Zudio's share in home market is lower than other retailers in different countries. For example, Uniqlo in Japan has a market share of around 14%. So there's still a lot of runway of growth for something like a Zudio. And lastly, ROC has also been improving because from a 9% in 2022 to a 31% in 2025 is what we've seen in terms of improvement in ROC. So this is the overall view of what's happening with Trent right now.
Well, thanks so much for that, Mahima. But Trent's growth has bottomed out due to increased competition, and that's the view coming in from Bernstein's Jignanshu Gore. He's a research analyst there of the consumption space. Let's listen into actually what he had to say.
I think there were three simple reasons why the problem for Trent from a stock price perspective began. The first was on its revenue growth numbers, which were completely burdened by the expectations. The expectations were to continue a 40-50% growth rate for a while, and that has crashed from 100% to 50% to 40% to now 20%. That's from number one. Number two, the lead indicator for their growth was store additions. And over the last 2 quarters, the number of stores that they've added has also been materially lower, which has dampened expectations for the future. Number three is the lookalikes similar to Zudio, which have come up in their micro markets where Zudio has strengths. So that gives the impact of competition, and that all three put together create a narrative challenge for Trent as well. So I think those are the three narratives which have turned the tide for Trent after its inclusion in Nifty last year.
We're also being joined by G. Chokalingam, the founder and MD of Economics Research as well. Mr. Chokalingam, very good afternoon to you and thanks so much for joining in. So, we've essentially seen slower growth for Trent and hence valuations have subsided compared to historical averages. Do you like Trent as of now given the correction, or do you prefer something else in that particular space?
Yeah, good afternoon. It is my pleasure to be on NDTV Profit. Ever since it breached 8,000, I have been giving a sell call a couple of times on this channel also. Even after the correction, it is trading at a trading PE of around 100. Now, two things that the investors need to keep in mind that there is a lot of liquidity concern as far as secondary market is concerned, though there is no dearth of money in the primary market. So the primary market has already chucked out, nearly 1 lakh crore, which is the estimate for the whole of 2025 calendar year. On the other hand, FIs are also selling. So in this scenario, the valuation will matter a lot, and this is going to matter much more important starting from October 1st week to till December because of macro parameters little adverse now. So therefore, I would say that at best one can hold Trend because even to justify 100 PE on a trailing basis, the profit needs to grow at least by about 35-40%. Then only PEG ratio of nearly 3 can be justified for a counter like this. But I doubt whether Trend can consistently maintain 35 to 40% year-on-year profit growth, considering the last June quarter year-on-year profit growth. And also, as you rightly mentioned, the competition has increased in the fiscal format as well as e-commerce format. Also, the competition is increasing. So at best, a long-term investor can consider holding the stock, but buying, I would suggest only around 4,000 rupees.
So 4,000 rupees is the target that Mr. Chokalingam is looking to add the stock, but till then, hold on if you already have it, refrain from buying until then. But let's put the focus on Leela Palace as well, because brokerages like Kotak Securities as well as Axis Capital have actually initiated on coverage on the stock today with a buy rating as well. My colleague Mahima, who just put out Trent as well, is joining us to give perspective on this one as well. Mahima.
Right, Puneet. So, interesting notes coming out from both Axis Capital as well as Kotak Securities for Leela Palace, and both have initiated buy, and both are talking about how luxury play is going to be the next big thing for Leela Palace. I'll start with Kotak Securities. They've given a target price of 475. Long runway for luxury growth is what they're penciling in, and Leela is a pure play of luxury hospitality in India. Strong earning growth over the next 5 years is something that's visible on the cards for them. Favorable demand supply dynamics for the luxury hospitality industry is something that they're watching out for, and a strong brand coupled with limited upcoming luxury supply in key Indian cities will support Leela's hotel chains so far. Axis Capital has given a target price of 505, so that's higher than what Kotak has given. They've said that owned palaces will be the key vehicle of growth in the near term. Robust near-term financial metrics that includes the ROC that will inch up post FY28 onwards. Strong pipeline will show up FY29 onwards, and growth in medium term will be driven by same store RevPAR growth, and they see a revenue growth at around 14% CAGR and EBITDA growth at 15% CAGR over FY25 to 28 is what they are penciling in. So this is the overall view of the two brokerages that have given views on Leela Palace.
Well, thanks so much for that, Mahima. Mr. Chokalingam, within the hotel space, actually, you've seen multiple new listings over the last 3 to 4 years. Do you like any of them, including someone like a Leela Palace, or continue to prefer the large cap ones like Indian Hotels amongst others?
Definitely, a stock like Indian Hotel would be better than Leela Palace, because if you look at the bottom line, EV to EBITDA, PE, there is no valuation comfort at all in Leela Palace. I think it's a tactical rally, so one should capitalize on this. Conservative long-term investor can consider, Indian Hotel, but otherwise, little risk-taking investors in small and mid-cap space, I like East India Hotel Limited. I find it's a fabulous stock for medium to long term. One can also consider Taj GVK. That stock also has corrected a lot. It's a joint venture between GVK Group and Indian Hotel, and this GVK Group, is into little stress in terms of balance sheet and debt. So it's a joint venture between GVK and Indian Hotel. So I believe this company needs re-rating. So these are the two stocks I consider as the best hotel stocks.
Got the view, Mr. Chokalingam, but let's also pull up a Man Industries and see what that counter is doing, because stock was almost down 16% at the day's open. It did see a mild recovery there. You can see the start of the trading session itself. But then again, it's down over 10%, and that comes after SEBI's actually barred Man Industries' top executives for 2 years over alleged fund diversion from accessing the security markets. Now, 3 senior executives barred are namely former CFO Ashok Gupta, Chairman Ramesh Mansukhani, as well as the Managing Director Nikhil Mansukhani, who we actually caught up with today morning exclusively earlier today. He clarified that the primary issue is related to some minor compliance issues, but let's listen in to that slice of the conversation.
If you could first help us understand what has exactly gone wrong, because SEBI coming and barring the company and 2 executives for 2 years over alleged fund diversion, what would this actually mean?
So let me bring the clear perspective on this. This SEBI order is a long-standing order. It was of the past history of 2015 to 2021. SEBI did their entire survey, and this order has been pending since almost now 4 to 5 years. In fact, the company took a call to get it adjudicated, and SEBI passed an order with a minimal penalty, which is hardly 25 lakh rupees on the company. The company getting restricted from trading in day-to-day in other companies doesn't bother, because it does not that's not our day-to-day business. So it's important that this was a legacy issue. It's been hanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. The company, obviously, regarding the barring and everything, is taking whatever legal remedy which will be required to be done. But we feel that this was required because it's been very, very long. It was of the 2000 eras, 2015 eras, which I wasn't a part of completely. And it had to be done. We were waiting since a long time. And this does not impact the company's operations, day-to-day operations of any act altogether. In fact, the company is doing well. It's got its largest order book currently. The profitability is higher. Merino Shelters was the main reason why this audit started from SEBI, and that is already been resolved. And we've in fact sold the asset and already recovered 70 crores, and the remaining almost 600 to 700 crores will be recovered over the next 4 to 5 years. So overall, with the shareholders, the trading, I don't see any issues. So I feel that it was to be done.
So Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive, because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that first up. Secondly, it's not just about Merino, it's also what they're talking about in terms of round tripping and related party transactions. Can you shed some light on that? Because when you say that you weren't involved, but the management was the same, right?
Correct. Your name has been mentioned, right? Because I believe,
I was the director.
Exactly.
Yes. I have been the director, obviously, but I took over the complete operations in 2021. But nonetheless, the point is about the round tripping. Yes, there was money given off to the subsidiaries. It was in line with the erstwhile provisions of infrastructure, which we've already claimed also, if you read our reply to this. SEBI is obviously taking a contrary view to it, which they are obviously free to, and we are free to do the legal remedy. All the money which was given is already come back in, including Merino Shelters. So we had given it to our subsidiary, and the money has come back. And even when we gave that money, it was given with interest. So as per the provisions of the law, it was done that way. Yes, we were not, consolidating Merino Shelters into Man Industries. That was because of the legacy issues between the brothers, the demerger and everything. So that call was taken by us on the basis of a court order. SEBI again took a contrary view to it. And we respect it. End of the day, it's their view, our view. We will do the, whatever legal remedy it is, we will be going for the appeal. But it's been an overhanging issue since very, very long in the company. And we are glad it is, at least there is a next step to it and we can move forward from it.
Were there any related party transactions at that time, Nikhil? And were they, as the order says, misrepresented?
No, they were not misrepresented. In fact, the related party orders were a part of the board meeting. They were given in the board meetings, AGMs, if you pick up the balance sheets and the AGMs, everything was represented. Also, the related party transactions had the interest provisions provided and the interest also paid up. So there was not even and in fact, the matter of fact that when this was adjudicated, everything was already paid off. So not only the principal, but the interest and the principal has come back into the company. And Merino is getting consolidated since FY 23-24.
Well, the other space that is in focus is also the auto pack, because the September sales are going to start coming in and trickling in early tomorrow. But what's expected is a huge boost because of the GST reduction from September 22nd. And despite having a lackluster first 21 days because of Shraddh as well as a delayed GST from 22nd September, we're expecting a huge boost in these 9 days. That's also led by Navaratri. That's going to be the one key trigger. Positive sales growth across the board for all companies for the first time in FY26. That's going to be the biggest headline tomorrow when the data starts coming in as well. Within the two-wheelers and the four-wheeler space, when you look at the other key aspects, for two-wheelers specifically, that has been improvement that's led by demand, as well as expecting a revival in the entry-level segment. That's going to be one key positive. For four-wheelers as well, we're expecting the entry-level segment to get a big boost, and inventory is starting to build up with dealers as well in this particular point of time. When you look at the commercial vehicle space, that has also seen positive favorable aspects led by the favorable base. Last year was a 12% year-on-year drop. So this year it should get that benefit, as well as infrastructure spending has now started to pick up a little bit as well. So that's another key trigger. While for tractors, it's been a huge positive in FY26. the GST cuts as well as the positive ruler sentiment for farmers is going to be and driving the growth as well. Very quickly putting in this to numbers as well, I want to first start with Eicher Motors because we are expecting a 53% year-on-year growth for Eicher in this particular month. That's led by a lot of its portfolio that's gone from 28% to 18%, and some which has moved from 28 to 40%, but that's largely in the 650cc space. This is the second straight month when they're reporting over 1 lakh units sold in just one particular month. They used to average 80,000 last year, so that's a big jump. And the other one's TVS Motors, a 33% YOY jump. Average sales of over 5 lakh is expected in this particular month. So these two in the two-wheeler space, something like a Hero as well as Bajaj will get a 3 to 6% boost on a YOY basis, but relatively much lower compared to TVS and Eicher. In terms of the four-wheeler space, again, one of the biggest surprises, not surprises per se, but positive momentum is for Tata Motors. For the first 6 months, the company has not been doing very well in terms of sales growth. It's actually been falling on a YOY basis. It's expected to have one of the highest in this particular month, led by the GST rate cut, while M&M is continuing and coming back essentially in the positive territory. Last month, they pulled back inventory from the dealers because of the GST cuts were going to be delayed. So essentially last month was a 10% YOY drop. This month is going to be 10% as well, but on the positive side, while Maruti and Hyundai largely getting some benefit. On the commercial vehicle price, largely very balanced growth of 5 to 7% is expected as the factors mentioned. And for tractors specifically, we have seen Mahindra and Mahindra have one of the biggest boosts as well. So let's move on to the next plate and show tractors right now. We're seeing almost a 13% growth led by a positive farmer sentiment, and for Escorts as well. The tractors is actually a big benefit of GST going from 12% to 5% as well. And that's the trajectory on the auto sales in the month of September. Huge benefit from the GST rate cut this point of time as well. But Mr. Chokalingam, let me come to you. Within the auto pack, what are your top picks to watch? Because everyone has got a GST benefit across the categories. Your top picks in this space.
Yeah, so one has to really see, instead of seeing September, October sales year on year, because as you rightly mentioned, there is a pumped up sales after September 22nd that would influence the monthly sales figure. And also the GST reform had some positive impact. So we have to weed out this one-time impact to really pick up the stock. So till that time, I would continue to remain bullish on Bajaj Auto because its exports are growing in a very robust manner, and recent depreciation of rupee also positive. And M&M, although we close the call at the peak of the price, it has corrected quite substantially post that. So one can consider M&M. TVS Motor, yes, it's a fabulous performance, both in business and as well as in stock market. So only the long-term investor can consider, particularly if there is further any small decline. And I am also bullish on tire stocks because GST rate cut has happened to tires, and the boost to automobile sales also will help. And third trigger for tire stock is that the natural rubber prices are down almost 19% from 52-week high. And oil price also down about 18% from 52-week high. And the last 10 years, the input weakness has been the game changer for tire industries in margin expansion and also stock performance. I think that is going to be played out once again, thanks to this correction in the input prices. So among tire stocks, I favor the leader, which is MRF Limited.
Got that. Mr. Chokalingam, let me also just quickly ask you on Man Industries. Do you cover this stock? We put out the story about the SEBI order coming in. Any view?
Generally, even if there is an allegation, on governance issue, I drop it from the universe because my point is that there are over 4,000 small and mid-cap stocks. So, we retail investors need not take any, possible risk also. So, I don't cover this stock.
Fair point, Mr. Chokalingam. A lot more in the universe since a lot of listings as well as what we've seen. But let's put the focus now on the logistics space because select companies are buzzing away. Someone like a Blue Dart, while it has corrected from the day's high, still up almost 6% in trade today after announcing price hikes as well. My colleague Jasmeet is now joining in to give us perspective on all of these stocks. Jasmeet.
Well, right, thank you for that. Yes, the two stocks on my radar today, given the increase in the price and the wage hikes, starting off with Blue Dart. If you look at the Blue Dart charts, it nearly hit 10% intraday basis and the stock is buzzing, it's almost of 6%. While this comes in when the company increases the average shipment prices by 9 to 12% effectively from Jan 1st. While company also makes a note saying that the new clients hired between October to December will not be the part of this price hike. While the price hike is annual basis, also they see that this is in line with an regular practice. Well, if you look at the overall margin of the company, it has been in the range of 15.63 to 16.4%, but given the previous quarter, the margin saw a downtake and it was at 14%. Now, given the increase in the price will go forward and impact the margins, that's why it's positive for the stock and the stock is buzzing in trade today. If you look at the other aspect, that's the all cargo gati, where the stock is nearly all up almost 3%. Even this buzz comes in the back of increase in the overall express delivery price. What the company says is they increase a 10.2% general price increase, while they also make a note saying that this is necessary for the operating of the company, also to invest more in infrastructure. While overall management has also given an EBITDA guidance in their annual investor day meet. What they say is they expect the FY25 EBITDA was at 204 crores and they expect it to grow by 20% on a compounded growth basis for FY28, and they also expect it to grow by 21% by FY30. So there are two key stocks buzzing in trade on the back of increased hikes of prices.
Thanks so much for that, Jasmeet. But Mr. Chokalingam, let me come back to you on these ones. Anything that you like in this particular space?
Blue Dart is a good stock, as all of us know. Extraordinary management quality and brand. Last 3 years since 2023, the net profit has been going down because of the correction in the operating margin. So therefore, today's move is right approach in the interest of the shareholder. I hope the company is able to improve the margin. And the trailing basis, it is trading at around 58-59 PE. But I think with this margin improvement, probably the operating margin can improve. It used to be around 18% in FY23. It came down to as low as 14%. So even if it reverses back to 16%, I think current price is justified for buying it. So therefore, I would suggest a buy recommendation at current price for medium to long term.
Very interesting, Mr. Chokalingam. Buy despite the current move which we are seeing on this counter as well. But Mr. Chokalingam, stay with us. We'll take a very short break. Come back with more on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान
सोनू निगम के लिए जोरदार तालियां।
presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Well, welcome back to Profit Buzzers right here on NDTV Profit. For the next half an hour, I'm also being joined by Anushi Vakharia as well. And Anushi, it's been an interesting day to say the least. Some pressure on the benchmarks, but largely it seems to be a day where the last couple of hours in terms of the trading session become very important.
Yeah, absolutely. Even in terms of, what we are looking at, markets, just in that consolidation phase that we are seeing. So that's in terms of, the benchmark indices that we are seeing. Nifty 50, just flattish kind of moves that we are looking. In fact, if you look at the mid cap and the small cap indices also, mid cap 150 and small cap 250, if you bring that up, just for a downtick of around 0.15% is what we are looking at, and small cap 250 also similar moves is what we are seeing. So not much of that excitement that we are seeing in the market, Puneet, right?
Definitely, and I think let's put focus on the IT space now. Let's pull up the Nifty IT very quickly because we have seen some key movers over the last 6 to 7 days where the stock's actually been under pressure. Let's look at the last 1 week move as well as quickly pull up the constituents as well, because essentially in this particular point of time we've seen stocks like TCS hit 52-week lows. Let's look at the Nifty IT very quickly before we put the stock focus on Coforge as well today. So in terms of the Nifty IT, today it's up 128 points, led by Coforge as well. And that's largely based on a brokerage call for the day as well, which came in as CLS initiated coverage on the stock with an outperform rating, while Morgan Stanley has also maintained an overweight rating on the stock as well. Jasmeet's back with us to give us more perspective on this one. Jasmeet.
Well, right, yes, thank you for that. I have two brokerages notes on Coforge. While the first one is big, it's CLSA. What they see is they see a 50% upside from the given current price. So they initiate and outperform with a target price of 2,346. While what they say is they see a good leadership, well-intensified ESOPs and a strong record is something they're watching out for. They also look at, they say that they are the two key segments where the company drives its force is from the BFSI and the travel segment, which has been growing. While also note that the management's strong execution and strong book building in this are in these areas. While they also see that having a consulting mindset and is visible in the strong order book, the revenue as well as the earning growth going forward. While they've also given the guidance for FY26 to FY28, what they see is in terms of revenue, EBIT and EPS, they see it to have a compounded growth of 15%, 16%, 22%. While next one is Morgan Stanley on Coforge, they have maintained an overweight with a target price of 1880 rupees. What they see is they see that they believe the share price will rise given the country index in next 60 days. While they also see both the revenue growth and margin trends have been up in the Q2 as well as in the H2. While they also make a note that there's limited downside given the current EPS in the system. While just to make a note here, Coforge is the mid-cap IT firm which is the most expensive among the top 5 mid-cap IT players. While this is all about the Coforge brokerages.
That just made, but very interestingly, Morgan Stanley also had a similar view on Emphasis, that they believe the share price will rise relatively to the country index over the next 60 days, and they feel that essentially the valuations of the company, both absolute as well as relative, appear compelling as the growth trends improve, and expecting some order wins on this one as well. They have a target price of 3,625. Almost 1,000 points below the current market price, above the current market price as well. So this one will be something to watch out for. But let me go across to Mr. Chokalingam, who's still with us. Thank you so much for waiting by, Mr. Chokalingam. Your view in the IT space, because we've seen stocks like TCS actually hit a 52-week low last week. Do you also stay in the camp of preferring mid and small cap IT companies compared to large caps at this point of time?
Yeah, certainly small and mid would be the focus because the industry is growing at 2 to 4%. The leaders also growing in the range of 2 to 4% in terms of dollar revenue. And also the leaders would be more affected in relative terms in terms of this H1B visa fee hike. So therefore, I would strongly believe that large IT stocks would continue to underperform the broad market in the short term, at least for next 3 to 6 months. So one can focus on select 1 or 2 stocks in the small and mid cap, because I also believe that what has happened in 2014 to 2019 in terms of the consolidation through merger and acquisition can possibly happen again now, because the whole industry is in having a lot of headwinds. And however, overall IT sector, I am not very bullish. I would give a hold rating on quality small and mid cap stock. Selectively, I would give buy rating on stock like Oracle Finance, because it's a product company and the dependence on America is, only around 27% of the total business. But otherwise, I would generally avoid IT stocks now, because we are not sure whether any tax which was earlier proposed up to 25% on IT service exports can haunt this industry. So till the trade relations amicably trade agreement between US and India amicably signed, I would be very, very cautious on IT stock. Generally, I would stay away from most of the IT stocks.
The verdict continues to be, stay away from the IT pack. So that's the view for that particular sector that we are seeing. Now, coming to the primary markets, now, we've had a couple of listings in focus today, and it's a mixed reaction that we've seen so far on the board. I'll talk about Anand Rathi first of all. Now, this company came out with an issue size of around 745 crore. A total, if you look at the, this is a total fresh issue that we are seeing currently up around 8% or so. The company had received over 22 times of a subscription here, and this was mainly for working capital requirements that we'd seen. So that is Anand Rathi. But other than that, which was interesting was Solar World Energy. It had received over 69 times of a subscription number. But if you look at the stock performance so far, even that we are seeing a mixed picture over here. Now, if you look at the price band that came out with the 490 crore of IPO size is what we are seeing, but this, is mainly for the working capital requirements as well, along with the investment in subsidiary. But Puneet, even the other two names that we are seeing, Jaro Institute as well as Shahi Tech also, Jaro Institute down about 9% in trade is what we are looking at. What's the this is despite the strong overall subscription numbers that we've seen. So what are you seeing for these companies?
Well, I had the chance to speak to the management as well, and largely for Jaro, let's pull that stock up because it's continued to be, it's down 17% in trade now, and that's largely, a very strong reaction coming on this one because very interestingly for Jaro, they are looking to have increased tie-ups essentially with educational institutions. It's an edtech company for those who don't track it, and largely they collaborate with educational institutes like IITs and IIMs and have courses as well as upskilling platforms on them. So it's essentially seeing the strongest reaction on the downside for this deal sheet, while something like a Seshai Technologies as well was the other one. Seeing a flattish reaction on this one, down 2% as well. It's largely a manufacturer of payment cards, and almost 60% of its revenue comes from the payment space and 84% from the BFSI space as well. But Mr. Chokalingam, any coverage that you have on either of these IPOs and any view on them?
I have not looked at the fundamentals on these two stocks particularly, but however, I would caution the investors on certain facts that October to December, we can see a lot of failures in terms of rewarding the investors on the listing day because the valuation on the secondary markets have contracted substantially for many small and mid-cap stocks. And this is what happened in the last 30 years. Whenever the valuations contract very badly for many small and mid-cap stocks in the secondary market, that has got impact on the primary market. So word of advice, be very, very careful about the valuation comfort zone before applying for IPOs, particularly in the next quarter, October to December. Because as I already mentioned, the total money chucked out of the market through primary market is close to 1 lakh crore for 2025 calendar year. So the liquidity concern is going to evolve as a risk factor, not only for secondary market, even for primary market. That's what I would like to add.
Okay, well, thanks for that perspective. Now, another stock in focus is Vodafone Idea. Now, that has urged the Supreme Court to waive penalties, interest on penalties linked to its AGR dues. The plea filed as an amendment to its earlier petition. My colleague Danish, who is tracking this story, joins us now with more details.
Vodafone Idea has filed amendment to its petition, which was filed on the 19th of September, and NDTV Profit has seen that petition. And in this petition, the telco has sought, waiver on interest penalty and interest on penalty, and this is till the AGR dues of FY18 from 2018 to 2019. Before that, the earlier plea, which is already there in the Supreme Court, it is on the additional demand by the DOT, which nears around somewhere around 9,450 crore rupees. But in the petition, Vodafone Idea has also prayed to the Supreme Court to give waiver on interest penalty and interest on penalty by giving the fact that there is no there is no particular calculation that DOT has provided to Vodafone Idea, and the telco has said that both the parties, by that I mean DOT and Vodafone Idea, they both know that whatever amount that the DOT has sought from Vodafone Idea, it is not crystallized, it is not finalized. So giving this justification, Vodafone Idea has sought relief from the top court, and in the petition, Vodafone Idea has also highlighted another case between MADA and SAIL and given an example of that judgment, which was a judgment given by a 9-judge bench. In that, it is clearly stated that such things cannot be permitted, and hence Vodafone Idea has given an example of that judgment and has sought urgent relief from Vodafone from the top court. And this hearing is supposed to take place on the 6th of October.
Well, thanks so much for that, Danish. But we did put focus on Man Industries and the governance issues there. There was another one that was in focus, and that's PTC India Financial Services. Now, sources tell us that 3 independent directors have actually quit on differences with the chairman, Mr. Manoj Kumar Jhawar. My colleague Vishwanath Nair joins us with exclusive details on this one. Vishy.
All right, so the developments at PTC India Financial Services have come to light, of course, over the weekend. There was news reports as well as an exchange clarification saying that 3 independent directors from the board of PTC India Financial Services have resigned. all three of them had identical resignation letters. In their resignation letters, these three directors had pointed out that they are exiting primarily because the conditions in the company are such that they cannot uphold the highest levels of corporate governance at PTC India Financial Services, and that is why they've made the decision to resign from the company. Now, what we are learning from sources is that this entire thing was fomented by a very stormy meeting of the Nomination and Remuneration Committee earlier this month. Essentially, this NRC committee consists of these three same independent directors, Seema Bahuguna, Naveen Gupta, as well as PV Bharti, and Manoj Jhawar, who is the chairman of PTC India Financial Services. During this meeting, Manoj Jhawar had sought to recommend another independent director to join the board. However, this recommendation was made only a few hours before the board committee meeting. The requirement is that such recommendations come at least 7 days in advance, so the rest of the members are able to look at the candidature of this independent director and then decide whether their appointment is appropriate or not. So they did not get that time, and when the directors opposed this entire thing, Jhawar allegedly warned them of consequences that may follow if they don't agree to what the promoter wanted to do. Manoj Jhawar is also the chairman and managing director of PTC India, which is the promoter company of PTC India Financial Services, and therefore his position is quite important. He's also one of the nominee directors of the parent company on the PTC India Financial Services board. What we learn from sources is that despite all of these repeated discussions, the meeting became very heated, and then eventually the three directors decided that they should step down. In fact, the director in question whose appointment was being debated was Mini Ipe, who's also an independent director on PTC India's board. And therefore, the appointment of Mini Ipe was being pushed by the parent, which these independent directors had opposed, and that is why they have gone ahead and exited the company now.
Well, thanks so much for that, Vishy. But Mr. Chokalingam, you didn't mention at the start of the show that you would want to avoid any kind of corporate governance plays. So any view that you have on Vodafone? I know it's a stock that's, a very retail-friendly one, but avoidance on a lot of fundamental factors. Any view that you have on the same?
Yeah, definitely. I would love to give my view. I've studied it quite. I don't think there is any governance issue for Vodafone. It's only an issue of not able to earn adequately. It's a very big challenge for any analyst to take a call on the stock, because if you go by fundamentals, purely fundamentals at current level, it's a sell. There is no doubt, because the debt is increasing, debt is more than the sales, and company is making losses, company is losing the market share. So it's a very simple common sense for any analyst to give sell. But still, there is a chance that we may go wrong. Why? This industry is now almost monopolistic. Only the three players are there. So the country cannot, afford to lose third largest player because it caters to very important service of nation. And also the government has a stake. So by any chance, either government or the other private promoters are put together, they make a sacrifice in terms of writing of equity, then the stock can bounce back in a very big way. But as an analyst, whether I can predict such possibility, it is very difficult. But only I can say that extraordinary risk-taking investors can buy the stock, because the government cannot let the company go. You have a lot of employees, it's a vital services, and therefore extremely risk-taking investors can consider if the lender as well as the private shareholders, if they make sacrifice, then the stock can be turned around. It can give very good return. But the possibilities are 50-50, to lose money or to make money. So it's suitable for risk-taking investors. That's my view.
Okay, so well, that's a view for Vodafone Idea in place. Thank you so much, Mr. Chokalingam, for joining and sharing perspective on various of these counters that we have discussed. But moving on, we have an interesting management in focus, and this is Smart Works co-working spaces that we're talking about. Now, the company has launched Smart Vantage. This is essentially for catering to the GCC growth story in India. Now, the company will be delivering large format whole building campuses as well. This spans of spanning more than 0.5 million square feet as well. Company currently serves over 730 clients, including GCCs, what we are looking at. But talk to more about this particular product and the strategy forward. We are joined in by Nitish Sarda, the founder and MD of the company. Hello and welcome to the show, Mr. Sarda. First of all, just let me just let me ask you on the product itself, Smart Vantage. GCC is one particular area that a lot of these co-working space solution companies are looking at. Just want to understand your perspective. What's the kind of growth potential that you see? What's the kind of ramp up that you see for this particular product itself?
No, first of all, thank you so much for having me on the show. I think Smart Vantage is not a new division that we are starting here at SmartWorks. It is just a core offering. It is a part of our core offering. We're just creating a product which is custom made for GCCs to grow in India. If you look at the GCCs growth in India, it has been a phenomenal journey. The industry is already at about 50 billion with over 1.9 million people working in GCCs, different GCCs today. This is projected to grow almost double by 2030 to grow to about 110 billion with over 2.5 to 2.8 million people working. With the kind of demand that is coming in from GCCs, we thought that at SmartWorks, we need to create a product which is catering to the different requirements of GCCs. Whether it is scalability options, the designing options, consultancy options that they require within these organizations. Because SmartWorks has a core business which operates more than 12 million square foot today, we can create a product which is catering to the evolving needs of a GCC. And that's why Smart Vantage, which is not a different division, but it is a product that is integral part of our core offering, which we're custom making for GCCs now.
Mr. Sarda, just want to understand, of this 12 million square foot of parcel that you already have, of this, what's the kind of contribution coming in from GCCs, which end user industries are we looking at in particular, and with Smart Vantage now in place, just want to understand how the financials in terms of margins differ from your traditional business which is there.
No, so GCCs contribute a significant portion of our business. Currently, it is closer to the higher lower double-digit numbers where they're closer to about 14-15% as we speak. But it is continuously increasing. The contribution of GCCs over the last 2-3 years at a higher base has increased significantly, and we're seeing more and more demand coming in from GCCs who are looking at expanding in India. GCCs will affect both our top line as well as our bottom line. If you can create a product which is catering to the evolving requirement of a GCC, where you give them the ability of expanding in different cities, following their talent, creating a solution which is custom made for the infra requirement that they have, it is definitely value accretive. It is a part of our core offering as we speak, but we think that with the stickiness increasing with the Smart Vantage plan that we've launched, you will see a margin increasing and the top line also increasing.
Mr. Sarda, very good afternoon to you. Thanks so much for joining in. It's Puneet this side. We've seen at the end of Q1 and your first quarterly results post the IPO, so congratulations on that. Roughly around 10 million to 12 million of your portfolio. How much are you expecting that to be by the end of this year? Because you have about 1 million square feet also coming in Q2 and Q3, and the reason for that question is basically because we've seen in your ramp up as well, roughly 65 to 70% occupancy comes in the first year. So how should we look at both these aspects?
So Puneet, we have had a fantastic journey, so far. If you look at the company's journey in the last 3 years, we've grown at almost 25 to 30% year on year in terms of square footage addition. In fact, post-COVID, you saw that growth even accelerate, especially in the last 12 to 13 months. Just in the last 3 months from start of this financial year, we've added more than 1.1 million square foot of additional space, taking our total footprint to over 12 million square foot now. We are projecting to grow at that same percentage, 25 to 30% or 35% every year, despite the higher base, because of the value or demand of the product that is coming up. We have signed multiple large assets. Recently, we signed a large asset in Bombay, which was 560,000 square foot in Ghansoli in Mumbai. So we are looking at growing at that percentage at least over the next 3 to 4 years. And with the kind of demand coming in, all from GCCs as well as homegrown companies, as well as the IT, ITS and the diversified sectors, we're fairly comfortable with that growth rate going forward.
So, Mr. Sarda, essentially, given these growth rates, you should essentially be around at 15 million square feet by the end of the year. Would that be a correct assessment?
it is very difficult to point out a particular number because it also
just a ballpark range, essentially around between 14 to 15, given the growth rates and the occupancy which will come in, the capacity which will come in Q2 and Q3.
Yes. So in terms of the footprint that we're looking to grow at, we will be approximately that number. It might be a quarter here or there depending on when the buildings are coming available. But yes, the target is to grow by that 30-35% at least.
Got that, Mr. Sarda. Mr. Sarda, we leave it there today because of paucity of time, but a lot more discussions post our Q2 results, and we look forward to that as well. But thank you for joining in today, giving us perspective on what you're doing with GCC as well as for the year as well. But viewers, with that, that's all the time that we have on this edition of Profit Buzzers. From myself, Anushi, everyone who puts the show together, thanks so much for watching. Small Cap Buzzers comes up next.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी है।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights,
Real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Anushi. Well Anushi, if you look at the markets on the expiry date, there's not much of action when it comes to the benchmark index. There's Nifty 50, we are largely flat, but when it comes to the Nifty Bank Index, that has perked up 200 points in the day.
Yeah, even in terms of small cap and the mid cap indices, if you're looking at that as well, not much of an excitement there as well. We're looking at a 0.2% of a downtick. In fact, in terms of where the mid cap 150 is and small cap 250 also about 0.2% down. In fact, if you pull the advanced decline ratio, also it's a mixed picture that we are seeing. If you just pull that up, you are looking at around 1050 advances, declines around 1300. So it's net, almost a similar ratio that we are seeing in terms happening with the broader markets. In fact, if we see some of these small cap names which are in focus, I'll start off with the top gainers here. We have Tata Investment, Blue Dart, which is in focus, and this is on the back of the update in terms of the prices that they're increasing over here. J&K Bank is another stock in focus. We are looking at gains of over 4 to 13% in these three counters. But on the other side, what's not working out so well is something like a Happy Forge. Now that's down about 4%. Asahi India and Schneider Electric also under pressure, down about 2 to 3% as well. Also want to address a couple of these paper companies which are in focus. You have your JK Paper, Westmill, NR Agarwal. In fact, we'll be talking about that stock as well. They're up over 3 to 6% in trade. This is after the DGTR notification that we are seeing benefiting all these paper companies that we are looking at. But also let's address some of these stocks which are buzzing in terms of higher trading volumes. Now here we have Cybertech Systems in focus. IFGL Refrac is another stock in focus, up around 14 to 16%. So strong gains is what we are looking at. While we are looking at Oswald Green Tech as well, which is also seeing a similar kind of handsome gains in trade today. So that's the overall picture, Somit, in terms of what's happening with the broader market and which are the stocks which are buzzing in terms of high trading volumes as well.
Well, moving on, Asian Energy is the counter that remains in focus. Obviously, we'll be speaking to the management to get in more understanding about the merger that they had announced earlier. But before that, let's go across to Varsha to understand what does this company do and what is this merger that the company is doing with the parent company.
Well, thank you so much for that. About the company, if I were to talk about, it's a service provider when it comes to oil and gas industry, and they have strong presence in the hydrocarbon and of course some mineral sectors. Just to give an example, companies into seismic data acquisition, EPC projects in boot model, and of course in oil and gas led development. What is seismic data acquisition? It's just a technique used in the oil and gas industry to find out the resources such as oil and gas or minerals. Now the good thing that they're doing is there has been strategic shift from the seismic segment, and now they're gonna increase their focus in operating, that is O&M segment. Onto the key developments, one is the Cooper Group acquisition, which will help company to grow in future, and of course the Oilmax Energy merger, which will which will because of this merger, the return ratios for the company will go to 20%, and the EBITDA margin that they're targeting is around 24%, because Oilmax merger, Oilmax EBITDA margin are at around 56%. Onto the key highlights, the total order book, if I were to talk about, stand at around 1,688 odd crores, and they have a strong bidding pipeline which will help enhance their revenue numbers. Onto the FY26 outlook that the company has given, they are expecting almost 650 to 700 crores of revenue. Now this is excluding Oilmax merger, because the consolidated numbers will come only post FY26. Onto the EBITDA, they are expecting a standalone EBITDA of around 110 to 120 crore for FY26 overall.
Now let's welcome in Sumit Maheshwari, the Group CFO of Oilmax Group, which is the parent company of Asian Energy. So firstly, to start off with, the merger that you had announced between the listed entity, that is Asian Energy, and Oilmax, which is the parent company, and the unlisted entity. Now few analysts believe that the merger ratio that you have given, for every 10 shares of Oilmax, you will get 117 shares of Asian Energy. Now, given that Oilmax Group has a top line of just 130 odd crore rupees, few part of the street believes that this valuation is quite expensive. Could you justify why such a high valuation has been given to Oilmax? Is it the fact that more assets are developing and there's a good strong growth potential and revenue potential that could come in for Oilmax going forward?
Yeah, good afternoon, Sumit. Regarding the Oilmax valuation, one thing we need to understand: the Oilmax Energy valuation comprises not only the core valuation of Oilmax business, but it comprises the investment Oilmax Energy has in Asian and Analyst Ventures and other assets also. So to understand the valuation parameter, we need to bifurcate Oilmax Energy into two segments. So the one segment is this core oil and gas business, and the second segment is the value of investment it has in Asian Analyst Ventures and other assets. So the valuation comprises of both the things, and comparing the valuation based on the last year numbers, where Oilmax only one asset was under production, and as mentioned in the press release and other presentations also, the two of the Oilmax assets will come into the production this year, and the ramp up and production enhancement will start into the existing assets also. So the valuation has been done on the very conservative basis, taking only the reserves, the current proved reserves of Oilmax on the DCF basis, and the independent valuer has applied different discounting factors, and they have given a liquidity discount also. So in a nutshell, the Oilmax Energy valuation comprises of the two things, and the valuation has been done by independent valuer, keeping into the benefit to the retail shareholder of Asian Energy in the mind. So we as a management and as a company, we do not feel that the valuation is very stretched. In fact, the valuation is done on the conservative basis to provide a sufficient benefit to the retail investors of Asian Energy.
Okay, just wanted some idea. In fact, it will be good for your investors and viewers as well. For FY25, I believe Oilmax reported a net profit of 49 odd crore rupees. How should one look at this number growing for FY26, FY27? Any guidance you could share?
So definitely the numbers of Oilmax will definitely grow very significantly from here. We are expecting almost 100% of growth for coming years in Oilmax numbers. And as I mentioned, the two of Oilmax assets will come into production this year. That will significantly boost the numbers of Oilmax into this year. And the next year, the Oilmax numbers even will be much larger than what numbers we will see in FY26, because those two assets which are coming into the production will have a full year operating cycle of those assets. And as mentioned, in the existing assets of Oilmax also, we are going for the development of those assets to the next level. So it will yield into a much better numbers of Oilmax going forward.
Right, so obviously Asian Energy numbers will look much bigger after the merger, given the fact that Oilmax is also coming into the book, and Cooper Energy, which was also acquired by Asian Energy, that will also come in the books. But any guidance, how are you looking at Oilmax revenue or profit number coming in for FY26 from 49 crore? Where could this number stand at? Any internal guidance that you have prepared?
As I mentioned, we are looking at almost roughly around 100% of growth for Oilmax Energy in FY26. And as you rightly mentioned, the Kuiper number will also start adding to Asian revenue from this year. The acquisition was completed on 1st of September. So this year we will see 6 to 7 months of Kuiper's number are getting added to Asian numbers. So the last guidance which we have provided to Asian shareholders of 650 to 700 crore rupees of revenue was without Kuiper, and we'll come up with the revised guidance post Q2 board meeting, which will definitely have the flavor of the Kuiper business also. And as a merged organization, in the recently concluded AGM, our managing director had given a guidance that in 3 to 4 years down the line, FY29, we are looking at and we are aspiring to achieve a turnover of 3,000 crore rupees as a group level, where the Kuiper, Oilmax, and Asian all three will get combined. And we are looking for EBITDA of 25% of the combined entity, and we are looking at the profit of 500 crore rupees plus in FY29. So with this year will be a transformational year for Asian Energy, where with the strong order book what we have as a domestic business of 1,688 crore rupees, and then the Kuiper coming into the picture. So FY26 we will see a much robust growth. We are actually looking to double the numbers from the last year on Asian Energy standalone basis. And from the next year, once the merger with the Oilmax or parent is completed, then we'll start looking at the full year numbers, which will get combined of Asian Energy, Kuiper, and Oilmax also. And all the three businesses, we are looking at significant growth going forward.
So just quick follow-up on that, you mentioned that around 3 to 4 years, you're seeing a 3,000 crore of a top line. This is against the 465, 400 crore plus top line that you clocked in FY25. Just want to understand on that part, how would the business mix shape up? Because if you look at Kuiper now, that is more in the O&M space that we are looking at. And now with even the new acquisition in place, what's the kind of outlook that we're building in terms of margins? That you mentioned 24% is the range that you're seeing. But any particular headwinds also that we should be watching out for?
Yes, so definitely, as we mentioned, we are looking for significantly order book growth in India domestic business also. And India domestic business, we are currently working on 17 to 18% of EBITDA margins. And we are definitely looking for the margin expansion in our domestic business also. Kuiper on the full year basis will be adding 600 crore rupees of top line. And the Kuiper, the margins currently remain slightly muted. But we have a process and plan to increase the Kuiper business mix and the Kuiper margins and revenue also going forward. And as rightly said, Oilmax business is a very high EBITDA business. And in next 2 to 3 years, when Oilmax assets will come to a true potential, so the overall company EBITDA margins will get strengthened because of the Oilmax high profitable business getting added to Asian business. So on the overall basis, if we talk about in terms of the revenue mix, still the company majority of revenue, or more roughly around 60 to 70% of revenue will come from the services business, which includes Asian Energy, current business, and the Kuiper business. But in terms of the overall margins level, because of the Oilmax high profitability margins getting added to Asian Energy, we'll see roughly around 24 to 25% of EBITDA margin on the overall merged entity level.
Quickly, sir, just wanted to understand the increase in GST rate from 12 to 18% for the oil and gas ancillary services that have been provided. Does that impact your company in any manner?
Yes, definitely. Okay, so I'll answer that question from two different company point of view. First, I'll answer from Oilmax point of view. Oilmax being an E&P company, and the GST is a cost for E&P companies because currently both oil and gas are outside the GST. So it will have an incremental cost for Oilmax as an E&P company. But what we understand and what we believe, the government of India is looking to provide some relaxation, which industry is looking for to absorb this additional GST cost. And in terms of Asian, most of our contracts are cost plus GST, and the GST is being charged at applicable rate. So in Asian, we do not see any challenge in terms of any cost pressure in terms of the increased GST. Whatever the GST, it will be passed on to the customers.
Mr. Maheshwari, also just want to understand in terms of Oilmax, if you look at that now that's more asset heavy in comparison with Asian Energy if you're looking at. So just want to understand the impact in terms of financials, also in terms of how the capex would shape up, the debt structure also going forward, if you can help us with that.
Yes, so Oilmax is not a very capital heavy company. So our Oilmax, our business model is low risk and low capex model, where we focus on already discovered and developed assets. And we use our knowledge-based solutions to enhance their reserves and to put them into production very early. So Oilmax balance sheet is very robust. Oilmax is a debt-free company, and we do not get into any asset or any block which require very significant amount of capex. So our business model for Oilmax is low capex and low cost business model. So Oilmax is a positive cash company, is a zero debt company, and with the superior profitability of Oilmax, it will definitely enhance the both the balance sheet size of Asian Energy, and it will bring more cash to Asian Energy balance sheet. So in terms of the capex also, Oilmax business model is a self-funded capex model. So we are not looking to increase any debt, or we are not looking to take any debt for Oilmax fields development.
Thank you, sir. Thank you for joining us and explaining that merger details very in detailed manner. Thank you for doing that. Now let's welcome in Lancelot Dicona, CIO from ValueX Wealth Connect, our fundamental guest for the show. Lancelot, you heard the management. The growth prospects look quite strong. In fact, they're expecting Oilmax profit to double in FY26. Over and above, the merger with Kuiper will also come into effect. So how are you looking at this counter, Asian Energy?
I think it's in a very interesting space because we have seen good good growth prospects, and the industry is also slowly evolving, and them being an infrastructure provider to the industry, they will benefit in terms of higher profitability, higher revenues. So I think it's interesting. Maybe we would expect to see that this company can probably do extremely well as from this month onwards. And maybe over the next 2 years, you should get good returns looking at the future prospects as well.
Okay, well, that's the view for Asian Energy, a company that you should be watching out for, considering its 3 to 4 year outlook. As management said, 3,000 crore is the top line that we are looking at. But now let's put spotlight on Man Industries. Now that's the talk of the day. In fact, down over 11%. In fact, if you see over the course of the day, it was down 17%. So a bit of a recovery from those levels as well. In fact, if you look at the volumes, also up over 17 times in comparison with its 30-day average. Just a bit about the company. It's in manufacturing of large diameter carbon steel line pipes is what we are looking at. Now, why the company is essentially focused. Now, SEBI has barred the company, its chairman, MD and ex-finance from the markets for a period of 2 years. This is in line with what's happening. Now, the SEBI said that company failed to consolidate its unit, Marino Shelters financials from 2015 to 2021. In fact, it also misrepresented related party transactions, saying that the company was engaged in round-tripping of funds to hide true financials which were in picture. In fact, they've also imposed a penalty of rupees 25 lakh on the company as well as the 3 executives that are in picture. However, Man Industries did come up with a clarification on the same, that they said that this related non-consolidation of Marino Shelters on account of legacy issue which were taking place over there. In fact, these issues are historical in nature and do not dissolve any misrepresentation which is on board, and the company is also taking legal routes on SEBI, barring the company on exchanges. But we also spoke to the management earlier today, so let's listen into what they had to say about these compliance issues since 2021.
Obviously, it concerns when the order is, though there is no financial impact on the company, the shareholders, it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date. And we are keeping monitoring very, very close, and all the related party or any we have stopped completely since 2021. And this is to, interest more shareholders, and which we have seen over the last 2 years, with where we have reached from where we were. Today we are, the order book is the strongest, which was never been the case. We were always trading between 1,000, 15, 2,000 crores of top line. And today we have a 5,000 crore order book already in line. We have managed to, remove the assets which were not performing and generate that income as well into the company. And looking forward also, we will be doing the same. So yes, obviously this affects us, but it has been a long time overhang for the company as well. And by paying 25 lakhs and getting this matter disposed of and getting it over and done with, we can look forward now positively. So I think it was to be done someday or the other. It's happened today. It was supposed to happen someday. And yes, we will fight for our legal rights wherever we feel the order is not in our favor, and we will do the needful.
Lancelot, that's a strong reaction that we are seeing on this particular counter, and issues regarding the corporate governance is something that we are seeing for Man Industries. Just want to take your overall perspective on the overall matter in terms of what's happening with Man Industries and what could be investors be looking out for.
I think, while the stock price has corrected and one can look at, whether it's probably trading around 14, 15 times earnings. But I think where there are, concerns about corporate governance issues, unless we are, completely satisfied that all the issues have been taken care of and that whatever happened in the past is not likely to recur in the future, it is better to stay away because, many times these issues can actually snowball into bigger concerns and could impact the very financials that the company is publishing. So there are lots of, issues, hidden issues, which you only come to know at a later date. So for individual investors, it is very difficult to assess, as to whether the company is now in compliance with all the regulations and whether there's no issues or, no concerns regarding round tripping, etc. So it's best to stay away, from these things because it's more of speculative aspect, and you may not be able to sustain the losses that may happen when capital gets destroyed when these misallocation takes place.
NR Agarwal is the next stock in focus. The paper company stock prices are up more than 8% in trade. In fact, it has been gaining for the last 2 consecutive sessions. The volumes, if you look at, it's more than 20 times its 20-day moving average. So, strong volume growth, a strong share price jump. Let's get in Jasmeet with more details on the same.
Well, right, yes, thank you for that. Let's quickly understand the stock performance over a span. Well, over 5 days, it's nearly up 25% and over the term of 6 months, the stock is nearly doubled. It's up 97%. If you look on an yearly average, it's nearly up 25%. Now, what does the company do is basically company manufactures black and grey boards. Also, it manufactures the recycled paper. While company has 4 main products, starting off with the copier, newsprint, writing and printing, as well as the duplex boards. That's what the company manufactures. And now, while this buzz in stock comes on the back of operationality of one of the units of the company which was caught under fire back in Gujarat and Vapi, and the particular unit starts operating from today, and that's why the stock is buzzing in trade. If you look at the key financials of the management, the FY25 revenue stands at 600 odd crores versus the FY24 is 500 odd crores. And when you look at the margins are at 7%, nearly halved from what it was in the previous year at 14 odd percentage. Now, if you look at the long-term borrowing of the company, why the margins are being impacted is on the back of borrowings. If you look at the borrowings of the company, the trends of the borrowing, it has increased from 46 crore back in FY21 up until 501 crore in FY25. That's in the current year. While increased borrowing is leading to increased interest payment and decreasing the margin for the company. Overall, the revenue which the management scores from Indian market is 82%, while the rest comes from the global market. And if you look at the revenue by product, the major product revenue which the company earns is through packaging boards, as well as the writing and printing paper contributes to 37% of the overall revenue. Now, given understanding the trade statics of the company has advanced twice at 7.3% of the previous month, which has also little decline. This is what the previous trends of the stock performance say.
Lancelot, have you tracked this counter, NR Agarwal? Any news that has been buzzing in the paper space, the reason why the stock is up for second consecutive session today?
So I do track the counter, and there may be, because I think paper prices have started to move up globally, so there could be some advantage. But if you look at the stock, it's actually trading at a fairly high multiple, and this is a very low margin business. The net profit margin of this company is close to like 3%, and in a very low margin business, any changes in raw material prices, could actually impact their profit margin significantly. So, given that the stock has really driven, it's given like 30% return in the last 12 months, and is trading at 25 times earnings, and we are not seeing significant earning growth, as well as significant revenue growth. I think one should probably stay away and let the stock settle down, maybe 20-30% lower, and then it could become attractive.
That's the view for NR Agarwal. Well, thank you so much, Lancelot, for joining and sharing perspective on discounters that we've discussed on small cap buzzers. But that's all the time that we had on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit. India Market Close coming up next.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
जिसके हम ना हो जान रहे दिल ये तो जान दी है तू
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
The markets move fast.
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Markets are just trying to protect themselves from that 8th consecutive session of loss. That's what we're staring at. Welcome to India Market Close with me, Hiral Datia and Neeraj Shah. Clearly, if you see Nifty 50, we're below that 24,650 mark on the borderline. No ups, no downs here. That's where we are at. Similar is the trend on the Sensex as well. Bank Nifty, marginal uptick on that front, 0.4% higher here. Now, the key in terms of Bank Nifty is trying to inch towards that 55,000 mark, but absolutely failing on that end. Let's quickly look at, what the PSU banking index is doing, and then we'll have a look at the Nifty 50 heat map, because this dichotomy is absolutely great. There you go, 1.5% up move coming in with regards to where the Nifty PSU bank index goes, and this is pretty much ahead of the RBI monetary policy. That's the reason why these kind of gains on this front. Muted moves on the other aspects. Let's look at the components in terms of Nifty 50 and see what that trend is looking like right now. You have more of greens versus the reds, so that is a positive. But one stock which is continuing to be on the uptrend, Hero Motors, started in the positive, continues to trade with gains of 2.7%. Few of the metal counters are pretty strong in trade, from a JSW Steel, Hindalco. It's a complete silver and zinc play that you're seeing currently that's happening. ITC is losing out, Trent is losing out, Titan is losing out. Titan was the top gainer when we started off the trading session. Today it's come back into the red. L&T, Bajaj Finance, Bharti Airtel, Reliance, few of the heavyweights which are trying to put pressure here as well. Overall, if you see in terms of India, WIX, 11.56, that's up around 1.6%. So that is clearly telling you where the volatility is headed from here on. Let's look at the advanced decline ratio as well, because that will give you some bit of a flavor in terms of what's happening to the broader markets. You're seeing, convergence that did happen midday. And again, your declines have increased. We're almost at around 1,400 versus 1,000 advances on the markets overall. In terms of broader markets, let's pull up the mid-cap and the small-cap index. Mid-cap index, there you go, at the day's lowest level, 0.3% lower on mid-cap 150. And if you see small cap 250 as well, similar kind of cuts at the day's low. So the pressure in terms of broader markets is way higher right now. A lot of stock specific action, sector specific action is what you're seeing, and I think Neeraj will take us through what individual sectors are doing and individual stocks from the broader markets. Neeraj.
Yeah, Hiral, good afternoon viewers, and it's been skittish with volatility moving up as well. Can that change is the key question, and we'll get to know over the course of the next few days. But there are buckets of stocks which are correcting, and a set of stocks or a bucket of stocks which are doing well too. So you have the Dixons and the Ambers, so the EMS players are under a bit of a cloud today, and both of these stocks too trading not at the lowest point of the day, but certainly lower in trade. So that's the first set of names you want to keep an eye out for. Surma SGS is not too far behind, down about 3% as well. So that too is showing that pressure. KPIT Tech is the top loser on the Nifty 500, 6.3%. At a point of time was down about 7% in trade, or trading nearly at the low point of the day. Trying to think of the reason why this could be the case. Could it be expectations of a weak quarter from KPIT or something else? Remains to be seen. I think they will give the quarterly declaration, right? At that point of time, we'll get to know what happens thereof. There is weakness in Lloyd's Metal, there is weakness in Schneider Electric, there is weakness in Hitachi Energy. So a clutch of these names are trading at or around the low point of the day today. On the gaining side, Ola Electric, yet again a 5% uptick, so that's doing well. And the whole metals pack, Nalco, Hindustan Zinc, etc., are all doing well. Now when it comes to Hindustan Zinc, it's up about 2.7%. And I just want to bring out a small piece of research that we did in the morning, which I just want to highlight, that for Hindustan Zinc, it is one of the key 3 stocks that we mentioned in the morning as the stock to watch. But if you just look at the reason why this is happening, the silver play, about 40% of Hindustan Zinc's Q1 profits came in from silver, and silver prices are way higher than what they were at the end of Q1 too. So suffice to say that Hind Zinc might have some gains too, and we'll talk about that in detail with our experts. Let's get in Kush Bora to try and figure out how is he seeing the scenario today. Kush, thanks for joining in. Bit of an uptick in volatility, but the key is a couple of dealing rooms are saying that there might be some bit of a reversal and some bit of an uptick in the last 1.5 hours of trade. Do the charts show any possibility of the same?
Hi, Neeraj. First of all, very good afternoon to you and to all the viewers. Possibility, yes. I wouldn't give it a very high probability just yet. The reason I say there's a possibility is because while we've had 7 sessions of negative closings, and that's a bit of a worrying sign. If you look at on the closing basis, the retracement of the September rally that we had when we had those 3 weeks of consecutive gains, 78.6% of that retracement comes at 24,625, close to those levels. And while we've dipped on an intraday basis, on a closing basis, we've held onto those numbers. Even today, we dipped below that, but Nifty is trading just above that. So it's definitely an attempt to find support. Now, where the concern is really is that there has been constant selling by FIIs, and especially in the cash segment, and that's why you're seeing a lot of big cashes on a lot of names, including including the likes that you mentioned, right now in your commentary. So yes, that's a bit of a concern. The first thing that needs to happen is that the fall needs to stem. We need to have one positive closing, but more importantly, what we need to see is the break of the lower high, lower low formation that we've been seeing for the last 7 sessions. That would be an indication of any kind of strength returning to the market. So yes, while there is an attempt at stabilizing, while there is an attempt at recovery, until it turns into a positive price action, my suggestion would be an avoid in terms of a trade, especially as far as Nifty is concerned.
Kush, afternoon. If you're looking at markets, not only in terms of today's session, we're nearly 1 year from that record high level that markets witnessed. Since then, Nifty is down nearly 6%. What is that kind of time frame you're seeing where we can expect that next high on Nifty 50?
Hi, Hiral. My standard answer for time frames is the crystal ball gazing. That I left my crystal ball at home. But no, I understand what you mean. This is a market where we're getting a little impatient. 4 years, we've been seeing consecutive new highs, and I mean from COVID to about 2024. I think 1 year of consolidation, while it seems painful as we go through it, maybe a quarter or two outside, from here on when we start that up move, will look healthy. So I think there will be some more consolidation that could happen. Even if we go out and hit that 26,200, 26,300 kind of new high, I don't know if the portfolios will really be performing as well as they did the last time around. These stocks were at those levels. So that will actually be a bit of a concern. So I actually expect the markets to consolidate, perhaps even, could be some negative bias as well going forward. But yes, I mean, I take it as 1 year of consolidation after 4 years of pick-up moves.
Okay, what about the ideas for the afternoon, Kush?
Difficult to find pockets of strength, but we continue to do so, Neeraj.
No, you can give us a short idea.
You know what the concern is, Neeraj? The short ideas are also not favoring the risk.
Yeah, it is not. Right? It is not. You're right, Kush. You're so right.
Give us a short idea, and any kind of short covering from here on, Neeraj, we'll see about 300-400 points of uptick on Nifty.
Kush, sorry, just before you give your idea, Kush, very sorry. So viewers, I must apologize because in the morning, on the part of the trade setup, I mentioned that now to have a large leverage short might not be a great idea because of this very reason. And I was asking Kush to give me a short idea. So Kush, apologies for that. But yes, please finish your point.
No, spot on, Neeraj. I would love to have a short idea as well because, why not make money on both sides? But just now the risk reward ratio doesn't favor. So since finances have been doing well, my ideas are from that fact. PSU banks, are a standout rank outperformer, from a very near-term perspective. Indian Bank, Bank of India, these are a couple of names that we've already discussed. So continuation of that trade. Indian Bank continues to shine today also. If you see the volumes on this one are picking up. So why not continue that trade? Previously, we had this with a target of about 735, 740. That's been hit today. So an extension of that to 750, 765, and the initiation price is 725. So if you put your trailing stop losses there, you lock in your profits. Very similar to that, Nippon India. Here too, we had this second target of 895, first target of 875. That's been hit today. Volumes again very healthy on this one. So financials really don't reflect what's going on in the rest of the market. On the upside in Nippon, 895, 915 are your targets, and 855 that initiation price becomes.
Okay, so Nippon Life and Indian Bank topics coming in from Kush, but it's that time where we do the stock of the day, and one company that is buzzing, Hero Moto. The counter has actually zoomed ahead in trade, tracking the ongoing festive season at the day's highest levels. What's aiding the counter, Puneet, is with us with this analysis. In comparison to 2024, Puneet, if you have to look at a Hero Motor in terms of the festive sales, how are they stacking up, number one? And two, why would this be a stock of the day for you?
Well, thank you for that. So, a couple of reasons, and we've taken this from one of the key launches last week as well in the 110cc space. That's the Destiny 110. This was launched at 72,000. That's the first key reason. And the second one, as you rightly mentioned, we put out the story yesterday on NDTV Profit that this could be one of a very strong 32-day period season for Hero MotoCorp, and that's the second key reason for that. Because apart from that as well, we've seen they're anticipating record sales in the festive season period, which starts from Navratri on day one and then goes across till the end of Diwali as well. And till that time, last year was a very strong period. But let me first start off with the scooter key aspect as well, because how big is India's scooter market? It's roughly 68 lakh scooters that get sold in the country in 1 year itself, and that's roughly 1/3 of the total two-wheeler market in India. Most of the sales actually has been dominated between the 90 to 120cc space, and now largely in the 125cc space as well, including all of those aspects. So that's the point number two. And point number three is rest of the segments are largely in the sporty segment as well. So let's pull up the table here and you'll get a sense of the domination essentially by players like Honda as well as TVS. Honda Activa sells roughly 28 lakhs scooters in just 1 year itself, and that's the highest in terms of market share as well. Overall, I mentioned 68 lakh scooters, 28 lakh is of one company itself, that's Honda. But the other key player is TVS Motor at 15.4 lakh scooters is what they sold in the last year, and that is again a very, very strong number to say the least, because they have multiple brands. It was essentially a space that they weren't there till 2013, and brands like Jupiter, Vigo as well as now Ntorq have made it a superpower essentially, with a new category created over the last decade. But watch out for Hero as well. It's at number 4 spot. It operates brands like Destiny and Maestro, and Destiny 125 is one. The 110 is now launched, so a new addressable market. But at 3.32 lakhs has fallen from the last year because of lack of new launches. But that will be one key trigger, is that they can increase their addressable market, try to challenge the number 3 player. And while it might take some time, TVS did it in 1 decade. Why not Hero MotoCorp? When you finally look at the EV space as well, that's the other one which will boost the company's presence in the scooter space. Roughly about 56,000 scooters have been sold in just the last 6 months. So starting from April till September is what this number is. Whole of FY25, they sold roughly 48,600. So they've already done what they did in last 1 year in just 6 months. Monthly numbers are indicating the company's market share has increased to 12%. This was roughly about 7% in April of 2025. So a considerable, almost a 50-60% jump in market share per month. And when you look at new models like the Vida VX2, that has been continuing the company's growth as well. Finally, record sales we mentioned for the festive period, that's one, because in 32-day period, they sold roughly about 15.98 lakh scooters, including motorcycles, of course, last year. They are looking to inch above that number as well. But largely in the scooter space, that's going to be one of the key positives for Hero MotoCorp going forward. The valuation is also sustainable compared to the other players like TVS as well as something like an Eicher Motors. So keep the stock on your radar.
Okay, so keep the stock on your radar. That's a Hero Moto. Thank you so much for that. Kush, the stock is at the day's highest levels. And if you have to peg this versus a Bajaj Auto or a TVS or even for that matter, a Eicher, the entire two-wheeler basket, may it be premium, entry level, what are charts indicating?
So I would suggest a very clear avoid on a Bajaj Auto. When the entire pack is doing well and the stock does not, then you don't really bet on such a stock. Eicher Motors continues to hold ground. Serious negative RSI divergences. I think this is in for a big round of profit booking, and you don't want to be the last one to enter, right? TVS Motor, I would still consider because it's had its round of profit booking and gaining ground. But the momentum could slow because it's already had a good run up. But I would still consider this for a long trade with a stop loss around the 33.60, 33.75 mark for recent swing highs of 3600. Now coming to the stock from where you started the discussion, which is Hero Moto. This one still stands out. It's actually come a little late to the party, but it's now holding ground today. If you see, as you rightly said, gaining ground and near the high point of the day, I think this is due for a breakout. The recent high of 5,500 that could be taken out in this current rally. Volumes also fairly healthy and encouraging. So if you were to bet amongst these four names, Hero MotoCorp would be my first pick, and then TVS Motor. I would avoid Eicher and Bajaj at the current.
And Bajaj, Hero Moto, a good pick coming in with a TVS Motors for a Kushbora. Moving on, Fiscal India, that's one stock to look at on the back of the order wins. If you see the counter, today trading with cuts of around 0.8%. Let me get in. Ramneet Sehgal, Chairman and Managing Director at Fiscal India. Ramneet, welcome to the show and a pleasure to speak to you as always on NDTV Profit. The recent order wins that you've seen, what is the kind of overall addition on the order book and the execution timelines for the same?
First of all, thank you for having me over. So, yes, we have entered into two new verticals, which is transmission distribution and renewable energy. We have won almost 557 megawatts of renewable order, which is a mix of solar and solar plus BESS, which is battery storage. And then we have won another, we are L1 in Welgaon distribution, which is roughly around 500 crores, and which is on a tariff-based basis where we're going to get a annuity of about 58.5 crores for next 35 years. So we are very happy, and that was a strategy going forward that this sector is good, energy sector, and way forward there's no dearth in the work as governments are going ahead with creating a lot of new space in this, and a lot of gigawatts have to be added. So, I mean, we are very happy. We are in a very happy space. And besides this, for existing work, we have got one LOA worth 431 crores, which is again a mixed use of a road, public health, electrical. Then another is a bulk drug park in Himachal. So, with all these order book, we've added to new states also, and geography-wise, we are already in about 12 states now. And vertical-wise, we are in 11 verticals. So, very happy to share that with this order book. We have our target or our guidance towards our investors was close to 5,000 crore for this year. But we have already achieved about 3,855 crores. Thank you.
Okay. Ramnik, good afternoon, Neeraj here. And the last 15 days, I've seen an announcement about some order win or some LOA that you've gotten 4 times or 3 times at least. So congrats on all of that. Now, just tell us, because your order book is now starting to get diversified, where is it that the bulk of growth will come for you? Because in the call as well, I believe you've said that the dependence on highways is going down and you are doing a lot of other work. So tell us a bit about the current order book and where will the growth come from?
Thank you so much, Neeraj. So, as you rightly said, we are looking forward towards, as a developer, a project IRR. And in EPC space, we're looking forward towards a PAT. So, we have 11 different verticals. We'll be quoting for all these verticals. We have spare BGs with us. We have spare surety bonds with us. So, we just have to see our PAT, EBITDA levels at EPC level. And as a developer, the project IRR. If you're getting that, achieving that, it could be road, it could be renewable energy, it could be transmission distribution, it could be airport, it could be a railway line, it could be airports, so tunneling. So we are in almost 11 verticals. And order book right now with the LOA L1, we are close to 14,000 crore. And last year we did 3,400 crore. So fairly we're at more than 4.5x. So way forward, the way we guided that this year our target would be 5,000 crore. We have already achieved 3,855 crores. Fairly, we have another 6 months of this year. So being in 11 verticals, it'll be easy play for a company like us to grow and to get the order book, because fairly with 11 verticals, we can get it in any of the verticals. We just have to keep one thing in mind, getting a right PAT for the EPC business, EBITDA, and as a developer, right IRR at the project level.
Okay. The other question would, which is fine. So that's the strategy that you've adopted, but would it therefore be project by project basis, and therefore you cannot give a clear indication of where the growth vertical will be, because you are kind of vertical agnostic, you are more margin focused?
So typically at the project IRR, we look after 25%. which is a development project, and EBITDA level we play 11 to 12.5 or 13 also.
So therefore my question is, since you're focused on the margins, will it be the case that you will be project agnostic or vertical agnostic? Whatever gives you that, you will take, and therefore you can't quite tell us where the growth will come from?
So, no, I mean, renewable is a great space to be in. We are lucky to be there now. But otherwise, yes, what I want to explain you is, if we are not getting projects in highway, we have a lot of verticals where we can get projects with our proper IRR and our EBITDA levels.
Okay.
Ramnik, the other aspect is in terms of your overall bid pipeline. 70,000 odd crores is what you're sitting on. What portion of it is renewable and what portion of it is the non-renewable pipeline right now? And to add to that, any other, and what's the pipeline looking like going ahead?
So, first of all, I'll just correct our bid pipeline, which we have already quoted projects are for 15,700 crores approximately.
Okay.
Every week we bid a lot of projects. As I said before, we just want to maintain our EBITDA levels and project IRR at the developer level. So we are fairly, in terms of the mix, highway would be around, which includes tunneling business, which includes elevated business, which includes the structure business, would be around 72 to 75%. The rest is the other verticals.
And in terms of your net working capital days, they have been on a rise. It was 75 versus a 45 in FY24. What is the reason for that and the kind of impact you're seeing? Are you seeing that reversal happening soon?
So, before 24, there was Atmanirbhar scheme by Government of India.
Okay.
So, Atmanirbhar was removed last year. So, what is the difference between Atmanirbhar and right now is, in Atmanirbhar, which was introduced during the COVID, we were paid for even 2% of the project. We do EPC projects, and EPC projects are paid as per the milestone payment. Now we have to achieve the proper milestone. And other aspect is, like, for example, we're doing a Danapur Beta project, which is a elevated road project. The land given to us still is around 80%. And we have to achieve that milestone completing 100%. So land is not available. So that amount, 70-80 crores, is stuck till the time land is available to us. We are continuously in touch with NHAI, requesting them to amend these. But, the department takes its own good pace of time. But otherwise, things are good. And other big aspect is, earlier with Atmanirbhar, no retention money was getting deducted in our bills. So if you see in last balance sheet, it was around 95 crores. This year, with about 10-15% growth, you can imagine what kind of money will go into retention. But yes, otherwise, we are trying and pushing hard to get the payments as per the same old pattern. But yes, Atmanirbhar was a great support to everyone in the country.
Okay, so that's with regards to Seagull. Thank you, Ramnik, so much for joining us on the show. Always a pleasure to speak to you as well. Let's just pull up the stock. Today is slightly under pressure. If we can just have a 6-month chart as well to see what the kind of, moves or, gains that a Seagull has seen. Pretty volatile. I mean, it's seen its ups and downs, a marginal 2.5% uptick on this one. But moving on, with stocks that were down and how. One of the stocks, in fact, that was down and how. Casualty of the day, Man Industries, after SEBI issued an order barring Man Industries and its 3 top executives from assessing the securities markets for 2 years due to alleged fund diversion. Anushi joins us to take us through the details in terms of what went wrong and what was the clarification and key highlights from the management interaction.
Hiran, in fact, over the course of this day, we saw about a 17% of an intraday low. From there on, we saw some bit of that recovery coming in, and again, a bit of a fall after that. So it's been quite a volatile day for Man Industries, and deservedly, because of a couple of reasons that we are looking at. Now, what has happened is SEBI has banned Man Industries. Along with that, they've also banned Chairman, MD, and the ex-finance also for a period of 2 years from security markets. And this is over the alleged claims of what's happening with the Merino shelters, failing to consolidate the financials of this particular unit that we are looking at from the period of FY15 to 21. After that, they started consolidating the financials, but this was one of the major reasons why we are seeing the SEBI order in place. In fact, they also said that they have misrepresented related party transactions. Along with that, they were engaged in round tripping of funds as well. This was to hide the true financials. Now, this was via the subsidiary subsidiaries that we are looking at in terms of the claims that have been said, and penalty of rupees 25 lakh has been imposed. However, if you look at the management's commentary on this type of SEBI action that we are seeing in place, the primary issue is related to non-consolidation of arm, and this is a legacy issue which was seen. So post FY21, they did start seeing consolidation of this, and these issues are mainly historical in nature. Along with that, they are now looking for legal routes in terms of this SEBI order coming in place, while they do not see any impact in terms of financials, considering it's a 25 lakh of a penalty. The main emphasis should be on how the future fundraising plan should be. But we spoke to the management earlier today, and this is what they had to say in terms of what's happening with the related party transactions, in terms of why this kind of SEBI order has come in place. So let's listen into that as well.
Obviously, it concerns when the order is, though there is no financial impact on the company, the shareholders, it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date. And we are keeping monitoring very, very close, and all the related party or any we have stopped completely since 2021. And this is to, interest more shareholders, and which we have seen over the last 2 years, with where we have reached from where we were. Today we are, the order book is the strongest, which was never been the case. We were always trading between 1,000, 15, 2,000 crores of top line. And today we have a 5,000 crore order book already in line. We have managed to, remove the assets which were not performing and generate that income as well into the company. And looking forward also, we will be doing the same. So yes, obviously this affects us, but it has been a long time overhang for the company as well. And by paying 25 lakhs and getting this matter disposed of and getting it over and done with, we can look forward now positively. So I think it was to be done someday or the other. It's happened today. It was supposed to happen someday. And yes, we will fight for our legal rights wherever we feel the order is not in our favor, and we will do the needful.
Okay, so that's the management of Man Industries giving out his side of the story. But when this gets challenged further, that's when we have to see what happens. Currently, the stock continues to trade under pressure. Kush, any view with regards to Man Industries? What are charts indicating for this one? And a quick view with regards to the PSU Bank Index as well, which is trading at the day's highest levels. So ahead of the RBI policy tomorrow, any bets that you would have?
So, first upon Man Industries, I think 360 is a strong support zone, while the stock had dipped fairly deep, to 340 levels. Also happened to be the 200-day moving average. It's, rebounded mildly from there. Right now, if you have a position, I would suggest a hold with the stop loss at the day low close to the 340 mark. But if you don't, I wouldn't suggest a fresh entry. The first day of a big sell-off after the news that has come out, you want to see how the subsequent days pan out. So yes, a wait and watch. If you have, you could continue to hold with the stop loss of the day low, as I mentioned. And you're right, as I mentioned in the start of the show, right? PSU banks continue to be the rank outperformers. It's not a bad idea to still trade them. The reason I have this confidence is because if you look at some of these names, Canara Bank, PNB, Indian Bank, the call that we just gave, Bank of India, they are not only up, they are up on the back of fairly healthy volumes, which means the market still has belief that, there is room on the upside. Now, the recent highs that some of these has made, for example, a Canara Bank close to the 125 mark, I think that could well be taken out in this rally, and the stock could head to 128, 131 kind of levels. PNB also a strong move and a strong run that we've seen recently. So first target would be 115, the recent swing high. Once that is taken out, 118. And Indian Bank, the stock that we've just discussed as a call, just to reiterate the levels on that, 750, 765 on the upside, and 725 being your stop loss. This is one pocket that I could, I would still be long on. You could take your pick amongst the names that we just discussed.
Right. So that's with regards to Indian Bank. You've been talking about it, 2.7% up move on that one as well. But we'll quickly slip into a short break. Stay tuned to NDTV Profit. Up next, we'll bring you all the chatter behind the dealing rooms in our segment Heard on the Street. Please stay tuned.
the world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी होगी।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching India Market Close on NDTV Profit. Let me get in Avinash Guraksakar as well. Avinash, welcome to the show. Clearly, this is a day where probably we could be ending lower for the 8th consecutive session, but the markets are trying to protect that as well. Been a year since we hit a record high in terms of Nifty 50. And from there, we're down nearly 6%. A lot of factors that we're watching out for right now. Taking the RBI policy, which is slated tomorrow, a lot of other factors that the street is eyeing. Anything that you would recommend as your top pick in that last hour of trade?
Yeah, I think good afternoon, Hiran. See, I think clearly, from the automotive space, we like, frontline companies like Mahindra and Mahindra. I think in a volatile market like this, it pays good kind of dividends to actually bet on something which I believe the second quarter and the rest of the financial year is going to be extremely strong. Most importantly, the tractor business is likely to record double-digit growth. The utility vehicle business is doing well. The electric vehicles, business is also doing extremely well. So my sense is that at these levels, this could be a good defensive bet and a very kind of a growth bet also considering the GST cuts which have been announced. So M&M is our top pick in the automotive sector, and the other stock from the hospitality space is Indian Hotels. We have been seeing that this stock has been consolidating for a very long time, around 720, 723. Another trigger for the stock is for Indian Hotels is that their New York property is likely to be sold off very soon. And if that happens, that could possibly cut down losses because that is not a profit-making entity. But overall, I think we expect a very strong growth trajectory, not only in the second quarter, but for the full financial year, considering that room rentals, the average RRRs have gone up, supply crunch still continues, and we could be looking at a profit of 2,400 crores compared to 2,000 crores last year. So this could also be a good bet, in a market like this where capital is protected and it gives a sufficient room for growth going forward.
Okay, so that's with regards to where the top picks go. Very quickly, can I just pull up a KPIT Technologies that is seeing some sudden pressure, 7.5 to 8% downtick coming in on a KPIT Technologies, now a 9% downtick. Kush, a quick view with regards to KPIT Technologies?
A very sudden move, you rightly said. 1180 is a good support zone that was being held on to for some time. It was attempting a rebound, but I think it's given way now. With the kind of volumes that you're looking at, I think you should be considering the next support zone, which comes close to about 1055, and if that is taken out, the recent low of 1010, could well come into the picture. I wouldn't really, be very adventurous and look for a long trade here. Key support zones broken after a fair degree of consolidation on the back of strong volumes. The downward momentum still persists.
Downward momentum could persist. Neeraj, this is an interesting move that you're seeing on a KPIT Technologies in today's session. 8.5% downtick coming in on this one. It's a sudden move in the last couple of minutes.
Yeah, I think the talk doing the round, Hiral, when it comes to KPIT is that the Q2 number could be weak with organic revenue declining about 2% quarter on quarter versus earlier expectation of a 3% quarter on quarter growth. So that's about
a story.
Yeah, so that's about a 5% deviation from what was anticipated earlier, and lower contribution from acquired entities versus expectations of a full quarter consolidation. So I think the belief is that the top line support will come in from cross-currency tailwinds. Had those not been there, then the numbers could have looked even weaker. So I think this is the talk doing the rounds, which is why this very sharp gash now at 8.5%. And I dare say it may not be the end of it.
Absolutely, may not be the end of it. I think that's something which we need to pull up during the show as well. But moving on, the DGC has granted aerodrome license to Navi Mumbai International Airport. My colleague Danish Anand joins us with more. Danish, what are you picking up?
Well, in a major development, the DGCA, which is a civil aviation regulator, it has granted the aerodrome license to the Navi Mumbai International Airport. So now the license is granted after the regulator is satisfied with the basic protocols that the airport should have. And now we know that soon the airport will be inaugurated by the CM. So before that, this aerodrome license was an important step before which the official launch can happen. And in the next coming few days, we will see flights taking off from the Navi Mumbai International Airport. There will be more calibration flights that will be taking place. There will be a lot of test flights that will be taking place. So as of now, Air India Group has also announced its plans to start flights from the Navi Mumbai International Airport, and so has Akasa in the past talked about starting flights. So we can expect a major, kind of a positive development for Maharashtra as a whole, for the Maharashtra's aviation sector. And as far as Mumbai's aviation sector is concerned, the city is all set to get relief with an additional airport coming up.
Okay, so that's with regards to where the Navi Mumbai International Airport goes, where they've got the aerodrome license, which is an absolute key milestone that they have crossed as well. But moving on, let's talk about more stocks that are buzzing in trade and must make it to your watch list today. Varsha has got it on hers. Varsha, what are you picking up for the viewers?
Well, thank you so much for that. Let me start with the paper stocks, which are buzzing. You have Imami, Paper Mills, JK Paper and West Coast. Now, DGTR has announced an anti-dumping duties on paper boards, which are being, the duties which are being originated from China or Chile. So, because of this, all the paper stocks are buzzing as of today. Then we have Tata Investment Corp, wherein if you see the stock buzz is led by upcoming Tata Capital IPO, which is in next week, and the stock is up almost 18% over the last 3 trading sessions. And company has recently announced 1:10 stock split, which is its first such action. Last on the list is Dixon Tech, wherein if you see yesterday there was a news wherein Trump is planning to impose tariffs on foreign electronic device, and for Dixon, if you see, US contributes almost 4 to 5% of the total sales, and exports are expected to increase at 16%. Now on the same, if you see, Goldman Sachs is expecting 4% quarter-on-quarter growth when it comes to mobile and EMS division versus 15% growth guidance which has been given by Q2. So this is the reason why Dixon Tech is under pressure. So these are all the 3 stocks which are on the news as of today.
Thanks a lot for that, Varsha. Now, Avinash, coming on this one, coming on Dixon. The thing is this, that Goldman has put out this, set the cat amongst the pigeons, that the number would be low single digits. What if the actual number could be higher, let's say 10-12%? The stock got smashed yesterday because of those tariff conversations, now some more today. Is this giving an opportunity?
So I think, Neeraj, my sense is that if the numbers are slightly better than expectation, then you could definitely expect a bounce back on the stock. And I think, this company has been bettering its numbers quarter on quarter. And I think despite the fact that the stock has jumped significantly, I think the markets are still looking at a significant kind of runway ahead. So my sense is, yes, there could be a little bit of uncertainty now, but once the September quarter number come out, the management gives out its commentary, and obviously, what goes with the management, I think what kind of growth numbers they, spell out is going to be closely monitored by the markets. I think there's no doubt the stock is valuation-wise fair to expensive, but I think one needs to take a very long-term view, at least the next couple of years, if one takes a positional call at these levels. So I think, the structural story still continues to be positive, but I think if at all there are some slow quarters, then I think the stock could remain under pressure. We'll have to wait for the Q2 numbers and the commentary and then take a call.
Got it. That's Dixon Technology. Kush, Tata Investment, Dixon Technologies, and you're talking about 2 to 3 of these paper stocks which are buzzing in trade as well in today's session. Anything that comes to your radar that could be either a buy or a sell call?
Hiral, honestly, all the stocks that you've mentioned are mostly an avoid category, and for very different reasons. See, paper stocks, they generally move when you've got some sort of a news or another, and then they give way. And I don't know anyone who's made big money in paper stocks per se, trading or investing otherwise, right? So I would actually probably take this opportunity to exit if I had any positions in something like a JK Paper, a West Coast. Some of these names have moved, but haven't really given a sustainable big up move, in a while. So yes, take this opportunity as an exit. Tata Investment was on my radar for some time, but the move is just too high, too fast, and now it's hit overheated territories. So from the current level, it makes no sense to enter. But if you had a position, then yes, with the stop loss around the 9,700, 9,800 zone, you could continue to hold on because this momentum could take the stock higher, but definitely not worth investing right now. The most interesting name is Dixon, because yes, it's fallen quite sharply. It is coming to an accumulation zone, and I'll give you a broad band, which is 15,300 to about 15,900. That's the zone where you could look to accumulate. The 50% and the 61.8% retracement, of the current rally comes in at that zone. 200-day moving average also happens to fall in that zone. So maybe if there is some more downside, Dixon could be an interesting pick. But with 3 days of big gashes, on the back of good volumes, perhaps the downward momentum could still continue. So within the 15,300 to 15,900 range, Dixon could make an interesting, buy, but maybe not at the current juncture. You want this fall to settle first.
for some correction to happen on a Dixon Technologies to accumulate. And you have a Tata investment also, which is absolutely heated right now. But moving on to our bull versus bear segment today, we put the spotlight on Coforge. It's an interesting play because it's one of the most expensive mid-cap IT companies. We have my colleague Jasmeet, who's getting us all the details in terms of what are the bull and the bear cases for this one. And then we'll leave it to Avinash to decide which one he would go in for. Over to you, Jasmeet.
Well, right, thank you for that. Let's quickly go through and understand the bull and the bear case for Coforge. While starting off, the bull case would be the management guides a 14% EBIT in FY26. If we look at the guidance and the margin for FY25, they stand at 13%, and management plans to reach an 18% guidance by FY27, so on the way they're guiding a 14% EBIT by FY26. If we look at the bear case, we have a lot of transitional happening. That's AI transition, which will create pressure on the margins, and we also have H1B, we have tariff and uncertainty weighing in the bear case. If we look at the other aspect, Morgan Stanley says the revenue margin trends are steady for Q2 and H2 going forward. But on the other hand, we also have CLS's view, which says they're still weak disparity when it comes to the BFSI segment and the travel segment as well. Well, if we look at the third scenario, we see that the company has created its niche positioning under the new CEO of that Sukhbir Singh. But given that there is no promoter in the company, it creates more pressure on the CEO, and that's the bear case. Going ahead, let's understand the last aspect of it. While as we see the bull cases, Morgan Stanley and CLSA have weighed in positive stands. They have given overweight with an upside of roughly 50%. On the other hand, we also see that it's the most expensive among the mid-caps, as given the valuations are high compared to all the mid-cap IT firms. Now, let's quickly understand the ANR and what does analysts recommend for this particular stock. If we look at the buy rating, they're currently at 28, while the hold is at 4 and sell at 7. And the potential of the return that the stock can give going forward is at 18.3%. So this is the complete breakdown of Coforge.
Interesting. Thanks a lot for that, Jasmeet. And, you know, we'll get in Somit in a few minutes from now to just try and understand if mid-cap IT names come up in the list of dealing room conversations or no. But that analysis by Jasmeet of why Coforge is being preferred by some brokers is interesting. Avinash, expensive name, IT is not a sector which is in favor. Is Coforge a name that could find favor with you? Why or why not?
No, I think, Neeraj, valuations don't give us the kind of comfort. If you ask me, typically at these levels, the risk reward is not very attractive.
Avinash, just allow me to come to you. I think we just lost your feed. We'll try and reconnect that. Kush Bora, can I just bring you in on that Coforge conversation meanwhile and understand from you, is there a trade here?
There is, and if you recall, Neeraj, Coforge has been on my buy list for some time among the IT names. Positive divergence on the RSI daily setup. There was a sharp gash along with the other IT names, but that was on fairly low volumes. Today, the stock is up on good volumes. I think the risk-reward ratio is extremely favorable. Keep a stop loss near the 1530 mark, which was the recent low. Once that is taken out on the upside, we're looking at 1650 and 1725 as the immediate targets. So yes, if I were to pick a couple of names in this space, Coforge would be one of them. The other one would be Infosys, and I'm also monitoring Emphasis. Not just turned into a buy call after the fall it had, but any positive uptick, and perhaps we'd be discussing that as well.
Avinash, how are you placing it? Because Coforge is one of the most expensive stocks as well, but there are positive notes that are coming on this one. Would you go in for a Coforge or something else would fit your bill from mid-cap IT?
No, I think mid-cap IT, Hiral, we were positive on KPIT, but I think today some, significant fall has come in. But my sense is that Persistent and KPIT are stronger bets in this, segment. I think Coforge, we would not be comfortable considering the valuations which currently the stock trades. So our sense is that we'll wait for the Q2 numbers and the commentary. I think any letdown in the numbers could possibly lead to a bigger sell-off. So I think it's better to stay away. We would be more comfortable with Persistent and KPIT. And I think the overall IT segment, even the large cap companies like Infosys looks better. I think in a volatile market like this, IT provides a good defensive kind of, place where I think earnings could be steady. And I think, the cash flows are pretty strong. And plus, they have announced a buyback at 1,800 rupees. So that also gives a kind of a comfort to the investor. So I think Infosys looks pretty attractive even at these levels.
So that's with regards to where Infosys go, and we've spoken about mid-cap IT by large. But now it's that time of the show where we talk about all the chatter that's happening in the dealing room. My colleague Samit Sarkar joins us with all the details. Samit, clearly, if you see in terms of what's happening in the markets, we are down nearly 6% from record high levels, which was exactly a year back.
Right.
No major moves coming in here. The markets are trying to protect from getting into that 8th consecutive session of a negative close. What is the dealing room telling you, and any action you're seeing in individual stocks?
Even if we close in green, it will be considered as an 8th consecutive day of loss because we are down from the day's highest point. In fact, at one point of time, we were touching that crucial support zone of 24,600. But we have seen strong support coming in at that level of 24,600, and hopefully that will be that trend should continue going forward. But when it comes to stock-specific action, Bajaj Healthcare, firstly on the cash side, is what dealers are saying that there are buy flows on large HNI desk at lower levels in trade. They're expecting some positive announcement to come in soon for this counter. For Vinati Organics, if you look at smart large HNIs and PMS have started to accumulate this counter at lower level, is what dealers have indicated. When it comes to Persistent Tech and KPIT Tech, there are sell flows on large HNI desk in both these counters. For Persistent Tech, for Persistent Tech, in fact, they're not saying that the numbers will be weak, but what they're saying is that despite the growth that the company might report in the second quarter of FY26, they might have to revise their guidance downwards because they won't be able to meet the guidance that the company had given earlier. So that is the negative pressure coming in for Persistent Tech. And when it comes to KPIT Tech, that stock is down 10% in trade. And what dealers are indicating for this counter is that the second quarter numbers could be on the weaker side for this counter, and this is because a lot of investor relations have started to speak to analysts to give some idea about how the Q2 was, and post that we are seeing this kind of a down move when it comes to KPIT Tech in trade today. When it comes to Dixon Tech, that stock is down in trade largely because Goldman Sachs came out with their preview note which indicated that mobile segment growth will be just 4% as against the management guidance of 15%. Hence that stock had opened lower, but what dealers are indicating that there are strong buy flows coming in at lower levels when it comes to Dixon Tech, and they're expecting that the growth number will not be as bad as this number that Goldman Sachs report has is saying of 4%. When it comes to Jubilant Foodwork, there are sell flows on large HNI desk. Q2 again is expected to be weak for Jubilant Food. And lastly, when it comes to Eicher Motors, there are buy flows at lower levels on PMS desk. That stock, in fact, is up now 2%. It was flat when I was speaking, I spoke to the dealer about this counter, but now that stock is up. It's flat. It's 0.3% up, Eicher Motors. And dealers are indicating that there are buy flows on PMS desk. And dealers expect that the September month sales number could be much better than what the street is anticipating. Even after the last 5 days of strong number, what the street is anticipating the number could be. In fact, Nomura estimates is close to 134, 135,000 number. The actual number could be much better than that is what dealers are indicating.
Wow. Okay, so here one more point on Dixon that Somit mentioned, that the numbers may not be as low as Goldman is suggesting, and which is the point that I think we are trying to do with Avinash Kudakshekhar as well.
And a KPIT Tech as well, you know, another aspect that's coming in where you are seeing sell flows.
Okay, Avinash is back with us, and Avinash, you want to come in on the KPIT point?
Yeah, I think, Neeraj, my sense is this seems to be an overreaction. I think we have to wait for the Q2 numbers, but I think this kind of sell-off, I think, looks to be a little far too, kind of negative. I don't think that, any major negative surprise could come in. But obviously, I think if there is a letdown in the earnings growth or letdown in the order wins, I think margin pressure, then I think the stock could come off. But I think we'll probably wait for the numbers. This kind of fall seems to be more of a scare that something very bad is going to be reported, which looks very unlikely. So we prefer to wait and watch. And I think we should, our suggestion to all the investors is that don't panic as of now. I think things may not be as bad as what they are projected.
Okay, the scare, as Avinash is mentioning, is what you're looking at in terms of where KPIT Tech goes. In fact, where from here is going to be the key question that one should be watching out for. Kush, let me come to you with regards to, a few of the other names that are seeing pressure. You have the Pharma pack and the consumption pack, which is down in trade. Let's talk about consumption. At the current levels, the way consumption stocks are panning out, are you seeing any opportunities emerge over there, and likewise with regards to pharmaceuticals as well?
Hiral, I think the profit booking round was equally sharp in the FMCG names. You're starting to see some sort of a move, but I'll tell you what, the moves that you see, on the expiry day, perhaps even the expiry week, is often the reverse of what's happened, in the recent past or throughout the month. So I would read a lot of these moves that you're seeing on, the FMCG names, which are showing a mild uptick as rollover activities and, short covering activities, just because it's the monthly expiry. Not very constructive, because the fall on these, even in the recent days, after falling about anywhere from 8 to 10 to 15%, has been fairly sharp and on the back of good volumes. So I would wait and watch on a lot of these FMCG names. Wait for the price action to start stabilizing, taking out key levels, and then perhaps consider. I am tracking Britannia and Tata Consumer from a long perspective, but mind you, this is just tracking. This hasn't turned into a call, because while there is, the initial green shoot, I still need some more confirmation on the upside for some of these to be turned into, a call. As far as the pharma pack goes, yes, I mean, they've been muted, and we all know the reason why. Everything's happened, outside of the country. But the fall here also seems to be quite exaggerated. Right now, it's more of a recovery attempt, more of a short covering trade, hasn't really turned into a long trade. So I would wait and watch on some of these names as well.
Wait and watch with regards to consumption, as well as Pharma, Britannia and Tata Consumer. Both of these are on Kush's radar. Let's quickly slip into a short break. On the other side, we'll get you the top buy today and sell tomorrow picks as well. Stay tuned to NDTV Profit.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Welcome back to India Market Close. Thyrocare is undergoing a strategic transformation under API Holdings with debt refinancing easing, promoter pledge pressure easing as well, and it is signaling financial discipline. We spoke to Rahul Guha, MD and CEO of Thyrocare Tech, and the MD and CEO of API Holdings about this. Listen in.
My first question, Mr. Guha, will be so the API Holdings have refinanced old high-cost debt with new one with a lower interest. How much interest savings, do you expect from this refinancing on an annual basis?
Sure. Firstly, the original debt was at a very high cost. So our primary objective was to refinance the debt as soon as possible and, bring the debt down to a sustainable interest cost. It's difficult to share specifics on the interest rate and all of that, but what I will share is the debt is substantially lower than our previous debt, which was, had a dollar exposure as well. And I can say that the current debt is almost 40% lower cost versus our previous debt, and we'll save almost 100 crores per annum in interest costs thanks to the refinancing.
Understood. And also, Mr. Guha, the pledge the pledge has been reduced from 71% to 61%. What is the planned timeline to, further reduce the promoter pledge?
Sure. We have about 1,700 crores of debt on the balance sheet at API against which Thyrocare shares are pledged. We are very clear that by the end of this year, we want to get the debt down to sustainable levels, and we're working very hard towards that. And I'm sure, while not making any commitment, but we are very actively working on reducing the pledge over the next 12 months.
Understood. And onto the operational or business highlights. In AGM, you had said that the non-core business are being exited. How will this impact overall revenue for Thyrocare?
So, see, Thyrocare is doing very, very well. Our primary focus has been to ensure that the momentum that we have built in Thyrocare over the last 3 years continues, right? The results are there to see already, right? We have the highest test volume in the country by far, industry-leading growth, much higher than our peers, both in terms of volume as well as revenue. The best quality footprint in the country with 100% NABL, us being the only chain in the country that every single lab is NABL accredited. And the growth is coming through with confidence from our franchise base, our partnerships base, and the business is doing very well, right? We were, in fact, the first company to reduce rates after the GST announcement and ensuring that the benefit is passed on to the customer. And we just want to ensure that this momentum at Thyrocare continues. So in no way is Thyrocare a non-strategic asset. In fact, it's one of the most valuable parts of the group, having seen the share rally from 450 levels to where it is today. It's created outsized value for the group as well. And we are looking at different options to think about monetizing and bringing our debt down to sustainable levels.
Okay, so the plan is to bring down debt substantially. 1,700 odd crores is what is sitting on the balance sheet of Thyrocare on the back of the interaction right now as well. You're seeing a strong recovery that's coming in with regards to Thyrocare, still in the negative, but at the day's highest levels as we speak. In fact, another company which is buzzing in trade today, to whom NDTV Profit did speak to as well, is Shelby. Now, what the management has indicated is that they're expecting the unit economics of Sanar to improve from here on. Now, margins for the hospital business is expected to be in that 20 to 23% range in FY26. And the implant business that has been trading under pressure, that is expected to be EBITDA break even after a couple of quarters. And if you see the stock as well, which is seeing gains of little over 5.5% from the healthcare industry. So both the counters, Thyrocare and Shelby, that one should be watching out for. Avinash, two different segments from the healthcare space. Your views?
think looking at what the management of Thyrocare mentioned, if there is indeed a savings of 100 crores per annum, I think that is going to definitely boost up the bottom line quite significantly. Of course, the stock has got re-rated significantly, but I think within the diagnostic space, things have come back to normal. I think volumes are growing quite healthily, and most importantly, Thyrocare is a well-established brand. It's one of the older brands in this market. So I think hopefully the second half of this financial year should be good and FY27 should be much better. As far as Shelby is concerned, I think, their overseas business is now going to take off. I think very clearly within the domestic hospital space, they managed to have a very, very good kind of geographical kind of penetration. Overall, I think looking at the kind of growth in the hospital business and the overseas export opportunity, I think definitely at these levels also Shelby can be a good investment bet if one takes the next 12 to 18 months in time. So I think Shelby looks more attractive as compared to Thyrocare, but I think you need to give in a slightly longer time frame. Earnings will definitely get a leg up in the third and the fourth quarter.
Okay.
You know, the other piece, Hiral, and just Hindustan Zinc, and I know we're going to talk about it in great detail later on, but just the fact that the stock is trading at the highest point of the day now, 3.56% higher, 483 and counting. Really strong moves by HZL, and purely because of silver pricing. And we'll talk about it in detail, but prima facie, it is just this, that with silver prices doing what they are doing, and with Hindustan Zinc having nearly 40% of its revenue, of its profitability in quarter one from silver, I think it is benefiting out of that. 483, 3.68% of Aditya Agarwala. Would you trade it now? Is it looking strong for further gains?
Good afternoon, Neeraj. Thanks for having the show. There is definitely some more room on the upside. I won't rule that out, but one has to be very careful and watchful if you're looking to go long on Hindustan Zinc, because this has a tendency to disappoint every time long trade is initiated in this counter. On the upside, I see levels of 500 to 520. Definitely, if one is looking to buy at current levels, place a stop loss somewhere around 472 to about 475 on the downside. And it's building onto the gains, which is no doubt about that. And this gains is backed by healthy volumes. So my sense is this up move is likely to continue at least for a few more trading sessions. So definitely you can take a long trade, but one has to be a little careful and watchful when you're going long in this stock.
Okay, so that's with regards to metal names. In fact, Aditya, what would your picks and strategies be?
So I've got a couple of buy recommendations here. Good afternoon. One is from the banking space, because we're clearly seeing PSU lot outperforming big time, and this is likely to continue. My sense is Bank of Baroda is something which is looking quite interesting to me on the chart setup. It's a fresh breakout from a consolidation on the back of healthy volumes. So for a target of 275 on the upside with a stop loss at 255 on the downside, I would recommend a Bank of Baroda first. Second stock on my radar is BHEL. This is also one stock which is looking quite interesting and has been slowly building on to its gain from the morning trade. So I think there is more room on the upside as far as BHEL is concerned. So for a target of 260 on the upside and a stop loss at 233 on the downside, I would recommend a fresh long in BHEL as well.
Okay, so that's with regards to a buy call coming in on BHEL. In fact, Bank of Baroda, which was also positive on this counter when we were talking about, plays that could be looked at ahead of the RBI policy meeting tomorrow. But moving on, Trent, that's an interesting play. Let's pull up that one on the screens because it's Nifty's worst performer since the time it has got added to Nifty 50 as well. Year to date, it's lost nearly, I think, 43% since index inclusion. In fact, the relative strength index is below 30, which is actually signaling oversold conditions. And the analysts are yet bullish on the counter, citing a 20 to 25% sales growth. We did speak to, Jignanshu from Bernstein. Let's quickly listen in to what he had to say.
I think there were three simple reasons why the problem for Trent from a stock price perspective began. The first was on its revenue growth numbers, which were completely burdened by the expectations. The expectations were to continue a 40-50% growth rate for a while, and that has crashed from 100% to 50% to 40% to now 20%. That's from number one. Number two, the lead indicator for their growth was store additions. And over the last 2 quarters, the number of stores that they've added has also been materially lower, which has dampened expectations for the future. Number 3 is the lookalikes similar to Zudio, which have come up in their micro markets where Zudio has strengths. So that gives the impact of competition, and that all three put together create a narrative challenge for Trent as well. So I think those are the 3 narratives which have turned the tide for Trent after its inclusion in Nifty last year.
Okay, so that's the view coming in from Jignanshu Gore. He's expecting around 6,000, 6,200 on this counter. Aditya, what are charts indicating to you? I mean, the next target that you would be tracking from a 4,700 right now?
It's looking weak, Hiral. There's no doubt about that. And stock has been constantly making lower lows, lower highs after it had broken down from that key support area of 6,200. Immediate supports on the downside now are close to about 4,500 to about 4,450 on the downside. If the stock manages to consolidate around these areas of 4,500, 4,450, then I would be interested in going long on Trent, and that too in a staggered manner. Right now, there is no momentum on the upside. Rather, on the downside, we are seeing a correction on an every single day. So I would wait it out for the stock to actually form a proper base around these areas of 4,450, 4,500, and then look at a staggered buying in the stock for maybe a potential target of 5,000 plus.
Recovery in Sammaan Capital is looking very, very interesting. So look at the intraday of Sammaan Capital today, and you will see that recovery from the intraday lows. Sharp spike up back to 160, 161, and it's a stock that's rallied quite a bit. Today too is rallying on significantly high volumes. Now, there is a corporate event at hand as well, and we don't quite know the outcome of that one. But so from a trade perspective, Aditya, is there more steam? Would you ride this up move that you're seeing in Sammaan Capital, or would you book profits here?
No, definitely I would want to ride it, just that it's under the ban phase, so you can't take an F&O trade in this. But yeah, apart from that, this definitely looks very strong to me on the chart setup, and this up move is likely to continue if you're buying in the cash and want to hold on to it for some time. My sense is the stock can easily test levels of 190 to about 200 on the upside. And the volumes are, if anything, volumes do suggest that this up move is likely to continue. On the downside, 150, 145 are very strong support zones.
Avinash, do you like Sammaan? There are changes afoot. There is obviously some bit of corporate action that has been announced as well. You would have looked at all of that. Do you like Sammaan as an investment candidate, or are there other NBFCs that you may like?
No, I think clearly, at these levels, the risk reward looks pretty good, Neeraj. I think if one were to take the next 12 months, I think whatever negatives were there have been factored into the price. We have been also telling our clients to accumulate this slowly, but I think the kind of volatility we have seen in the last few days is quite surprising. I think we would like to have a little more clarity on what the commentary from the management is. But I think Q2 numbers and the rest of the second half of FY26 is going to be significantly better than the first half. So we have a structurally positive view. We would suggest that one could accumulate here slowly for a reasonably good risk reward over the next, say, 12 to 15 months.
Lot of stocks buzzing around. By the way, just before I get in, Anushi, some of the chemical linked names. So Indo-Borax Chemicals has zoomed in trade. India Glycols, I believe, has zoomed in trade as well. So spikes there. There's a stock called Stallion India Fluoro. I had not heard of a name until now, but that stock seemingly has had a big move upwards. So look at some of those moves there. Quite stunning, really. And while I highlight the chemical space, Anushi's looked at the entire broader market space, and she brings us some of these key buzzing stocks for the afternoon. Anushi.
Hi, afternoon, Neeraj. So in addition to that, what we are seeing is, paper companies which are buzzing in trade. But apart from that, a couple of counters in the small cap space which stood out as well. This includes the likes of Praveg. Now, the stock is up, in fact, more than 7% in trade today. But now, even if you look at the trading volumes, they were around 3 times higher compared to its 20-day average. Now, just a bit about the company. This is in the hospitality business that we are looking at, especially in the luxury side of it. If we are seeing company planning to see an expansion for over 2,500 plus rooms. This is across 65 locations that we are seeing by 2028. The second company in radar is IFGL Refract. Now, this company also saw about a 14% of an uptick in the last 5 trading sessions as well. In fact, if you look at today, it's over 18%. So this is the kind of an upside that we are seeing. Now, the company has a strong management outlook in place. It's seeing about a 15 to 20% of a revenue growth for the next 2 years. Along with that, it's what is also beneficial is the kind of margins we should be looking out for, considering that its high cost inventory is expected to be consumed by the second quarter end. So outlook post H2 would be something that we should be watching for. The third company on our radar is Bliss GVS Pharma. Now here the company, if you are looking at the key triggers, they have an established presence in terms of their positioning in Africa. In fact, it wants to deepen its presence over there. So that is something that we should be looking out for. International business, the company wants to expand on that field. Now, if you look at the 3-year CAGR growth in terms of how revenues have shaped up, we are just looking at a 3% of an uptick, so not bit of an excitement in terms of where the 3-year perspective is, while 44% is the kind of growth that we are looking in net profit. So these are some of these small cap names also which are buzzing in trade today.
Yep, strong moves there. Avinash, thanks Anushi for that. Avinash, do you track any of these?
No, I think Praveen looks interesting, Neeraj. I think the stock has been beaten down very badly from levels of almost 700-800 rupees. And I think now recently the company announced that a new resort at Adalaj in Gujarat has been operational. So I think you're going to see a much stronger second half. Typically, the second half is a period where business grows more significantly better. October to December and January to March are typically busy season months for the company. So our sense is that with the recovery in business and obviously with the new resorts getting fully operational, you could see better numbers from Praveen. I think this is a debt-free business and a very high margin business. A lot of operating leverage present in the business. So I think we'll have to wait and watch how the scalability in the new resort happens.
Okay, so that's with regards to where Praveen goes. 6% up move is what you're already seeing right now in trade. But moving on. As silver shines, Hind Zinc is in the spotlight, as Neeraj has been pointing out since morning, with the kind of advantage a Hind Zinc would see on the back of silver prices. The white metal has been surging, driven by strong demand and supply deficits. Global peers are also seeing a re-rating. Valuation upside could be on the cards for this Indian player. Let me get in Vansh, who tracks this space pretty closely, to tell us more. Vansh, what are you picking up from where Neeraj left it on India Market Open today?
Well, yes, so as you rightly mentioned, the silver prices are already up 63% on a year-to-date basis. Now, if we talk about some of the reasons for this up move, it's firstly the industrial demand for electronics, the growing EV demand, and the demand for the solar cells as well. Moving on, we have strong demand in terms of supply deficits that we are seeing, and also the weakening US dollar. In fact, we have seen the US dollar index has already plunged about 10% in the past 8 months as well. Now let's also look at the Hindustan Zinc, who is the key beneficiary of the rising silver prices. Now the silver is basically a byproduction of zinc production for the company, and in fact silver contributes about 20 to 25% of the revenues and 35 to 40% of their EBITDAs as well. Also, if you look at the revenue of Hindustan Zinc, now 88% of this revenue is a direct pass through to EBITDA, which signifies the margins that they are having in terms of silver as well. Let's also look at the sensitivity analysis now. A $1 per ounce move in the silver prices yields a 1% sensitivity for Hindustan Zinc as well. So clearly, any increase in the silver prices have a direct pass through to EBITDA of Hindustan Zinc as well. Now let's also look at the performance of the global peers in terms of Hindustan Zinc. Now what we have clearly seen that the Hindustan Zinc has consistently underperformed in terms of the global peers. We have clearly seen outperformance coming in from Fresnillo. Now if we talk about this comparison, so Fresnillo is basically the largest primary producer of silver in terms of the global production. And also if I talk about the Hindustan Zinc, now it clearly remained a laggard in terms of the production. And lastly, if I talk about the silver mining globally, now the Hindustan Zinc also has a production of about 22.5 million ounces of silver as well. Now if we look at the detailed analysis of their annual production, now what we clearly see that Hindustan Zinc stands at about number 3 in terms of the global silver production. In fact, it is having a silver production of 22.5 million ounces as well. Now moving on to the parent Vedanta, now Hindustan Zinc contributes about 40% to the Vedanta's consolidated EBITDA as well. So clearly any rise in the silver prices will likely favor to Vedanta as well in terms of their EBITDA as well. So clearly the path looks, so clearly with the silver prices rising, the path looks very strong for Hindustan Zinc and Vedanta as well.
Okay, thanks, Vansh. I mean, you did it much better than I did, so thank you for that. And therefore, my question to Avinash Gorakhshekar now is, because Aditya has given his view on Hinzinc. Avinash, do Hindustan Zinc or Vedanta become investment candidates because of this uptick in silver and, of course, the whole optimism around metals any which ways?
No, I think Hindustan Zinc definitely looks pretty attractive, Neeraj. I think clearly from an investment standpoint of view, as the silver prices go up, that is going to incrementally add to the bottom line for Hindustan Zinc, because as we all know, almost 35 to 40% of the EBITDA is coming from silver. Overall, I think, the second quarter is going to be good, but I think hopefully even if silver stabilizes at these levels, this year we could see a big bump up in the profitability for Hindustan Zinc. So definitely, I think at these levels, it's definitely a good investment case. If somebody has the 6 to 12 month kind of time frame, valuations will catch up, and I think markets will definitely give a further re-rating to the earnings growth, which actually comes from the higher silver price, prevalent as of now.
Okay, so that's with regards to where Hinzinc goes, the stock at the day's highest levels. In fact, Aditya, let's look at your BTST calls.
So here I've got a NMDC that's looking quite interesting to me on the chart setup. I think one can actually look at a fresh long addition in BDST at current levels for a target of 83 with a stop loss at 73 on the downside.
NMDC 73 on the downside is what you should be looking out for. Stock also seeing a good surge in trade today. Let's quickly look at the auto pack in trade, because the September auto sales numbers that will be trickling in tomorrow with expectations pointing towards a positive trend across segments, and this will be largely driven by the recent GST cuts. Positive sales growth led by GST cuts, improvement in entry-level demand and export revival is what is anticipated with regards to two-wheelers. Four-wheelers, an improvement in the entry-level demand and inventory build-up is what you've seen with dealers, and that's what the commentary we got from M&M as well as Maruti managements as well. The commercial vehicle, the growth is going to come on the back of a favorable base, because we'd seen a 12% downtick on a year-on-year basis last year, and the pickup in execution of infra projects is what is going to aid the CV players from here on. And tractors, GST cuts as well as the positive rural customer sentiment is what will drive growth from here on. So that's with regards to where the auto pack goes. Aditya, anything that you would want to be a good call for the investors from this auto pack?
I'll stick to the two-wheeler names, and then especially domestic-led two-wheeler names. And the one stock that instantly clicks is Hero Moto, and that is one stock which has actually been surging off late. So I would be a buyer in Hero Moto from an investment perspective at current levels, and add further if it starts to trade beyond 5,500, and look for a target of 6,400 on the upside. This definitely is one stock which I believe has the potential to hit a new all-time high. So definitely Hero Moto is one stock that I'll pick from the auto space, and especially the two-wheeler names with a domestic focus.
Okay. I mean, and Hero Moto at the day's highest levels. Avinash, your views, what are your expectations with regards to the auto sales numbers that will trickle in tomorrow?
No, I think you could see very strong numbers from Maruti as well as from the two-wheeler majors. I think, TVS as well as Hero Motors, I think are bets which I think should definitely work for the investors, considering the fact that, the GST cut has been quite significant. And that is going to drive volumes already from the 22nd of September when the GST cuts became effective. I think you're going to see some, improvement in the last month's sales, but the real impact will be felt in the third quarter here. October to December would be a much better quarter in terms of volume growth.
By the way, IT Tech is now down 10%, and just goes to show that when. Okay, no, sorry. Just a bit of a recovery. It was down about 10%, 9.75%. I think it's just recovered a little bit, but effectively on that volumes, the stock is cracked and went below the 1,100 mark as well. Quite something out there. Okay, well, let's wait and watch. We've discussed about this in detail, so I won't spend time here. What we will spend time upon is, of course, what is it that the MPC commentary might be as well. So that is one thing we bring up. We also try and tell you what is it that you should do with the auto companies. Now, remember, Aditya has already said that Hero MotoCorp is something that he would like to buy. Avinash, the question though is this, that if two-wheeler sales and if four-wheeler sales are happening the way they are, or if air conditioner sales in North India have already equaled 100% of what the expectation was, what about the ancillaries supplying to them? What about the air conditioner EMS players? What about the auto ancillaries supplying to two-wheeler companies? Would you buy any company with that, from that bucket?
No, I think from the two-wheeler ancillary basket, Neeraj, you look at companies like Uno Minda, or for that reason, Lumax Industries. These are very large players to two-wheeler players. And most importantly, I think even from the bearing space, NRB Bearings is a company which caters largely to the two-wheeler segment. So I think these could be good bets, considering the fact that if volumes grow, then there's definitely good news for the auto component players, because that gives them a bigger volume kind of growth momentum. And I think these two, three companies definitely should do better. I think, but the real impact of this volume growth, my sense is, will be felt in the coming 2 quarters, because the GST cuts have come in just in the last week of September. So obviously October to December and Jan to March are going to be 2 better quarters for all these auto component players.
Your auto component makers in focus, Uno Minda, 1.5% up move coming in there. Very quickly, let's just pull up a Blue Dart as well as Aegis Logistics. Both of these counters were buzzing in trade. Blue Dart higher. It has cooled off, 3% up move on this one, and the Aegis Logistics, which is now at the day's highest levels, 4% upside on this one, on the back of the 10 to 12% price hikes that they will be taking from the 1st of January. Aditya, are you seeing any momentum play in on these logistic names?
Maybe an Aegis Logistic, Hiral, at max, if I'm looking at for a target of 900 on the upside, can be looked at. I would still avoid a Blue Dart because, like you also mentioned, stock has actually given up most of its gain from the top. And that is how the trajectory has been for the stock. The other stock which actually looks interesting to me is VRL Logistics from this space. Can be bought for a target of 320. So 2 stocks, Aegis Logistics and VRL Logistics. These are the 2 ones that I look at. Aegis for a target of 900 on the upside, and VRL for a target of 320 on the upside.
Okay, so that's with regards to the logistic players. Now, all eyes, as Neeraj was mentioning, are on RBI MPC outcome tomorrow. Policymakers widely expected to hold rates. My colleague Pallavi joins in with the key factors at play, including the lingering uncertainty around US-India trade deal. Yes, Pallavi, over to you.
Right, so benign inflation, better than estimated GDP growth in the previous quarter, but juxtaposed with significant H-1B visa changes, a weak rupee and continuing external uncertainty. What's changed from the last MPC to this one? Clearly, quite a lot. And what does this mean for MPC members as they take a decision on the benchmark lending rate tomorrow? It means that a rate cut is likely to be an extremely close call. Now, of the economists that NDTV Profit spoke to, about 2/3 expect a status quo on the repo rate, but at the same time, almost a third are batting for a 25 basis points rate cut. The stance is largely expected to continue to remain the same. So what are the factors that could push the MPC for cutting rates? The undershooting of inflation, the tariff overhang on growth, and the recent tightening in financial conditions that we have seen in the month of September. On the other hand, the other scenario that can play out is that the MPC might choose to adopt a wait and watch approach. It might look at waiting for a couple of months to see the impact of fiscal measures, most notably in recent times the GST cuts, any developments on the external front, its impact on the rupee, and this could mean that the decision to cut rates could be pushed to December instead. Still, there's enough to watch out for. What we're going to be watching out for tomorrow is whether the MPC and the RBI choose to change the inflation forecast, more in terms of the commitment to maintain adequate liquidity, and possibly, maybe, any targeted liquidity measures for export-oriented MSMEs hit by tariffs.
Okay. And it's arguably the most important thing, and Pallavi, of course, got us all the details of what's to be anticipated. I think this announcement and the commentary thereof would essentially be the key thing. As we start wrapping up the markets, take a moment to thank Avinash as well as Aditya for joining in today and giving us their thoughts. Really important to get their views today. And remember, viewers, as we wrap up the markets, keep in mind that banks have held fort even as the markets, even as the market largely have been extremely sluggish. And Hiral, as we wrap up, you have to argue that not too much of a disappointment.
Absolutely, too much of a disappointment. I don't know whether we should say that or not yet, but absolutely not the 8th consecutive session of losses so far, Neeraj. 24,636, we're still below that 24,650 mark. So yes, something pretty much on the expected lines. Bank Nifty, as Neeraj was mentioning, has held fort, and the outlier over here is the PSU Bank Index, which has actually ended at the day's highest levels. If you pull up the PSU Bank Index and see what's happening at that, and there you go. Smart moves on this one, 2% upside ahead of the RBI policy meet tomorrow. Let's quickly look at the heat map in terms of Nifty 50, and that will tell us the story. Hero Moto, top gainer, followed by IndusInd Bank, Adani Ports, Ultratech, JSW Steel, and Tata Motors. Strong moves on these ones with the Hindalco. ITC, Bajaj Finserv, Bharti, Tech Mahindra, Trent, Titan, RIL. Few names that were losing, but the breadth clearly is telling you that was in favor of the bulls. If you see in terms of India VIX as well, that actually receded and that's actually turned. We were seeing an uptick of around 2.5-3%. We were at levels of around 11.5 to 12. Now it's ended lower with cuts of around 3%. So this is an interesting move here. And as we know, it is expiry. Let's look at the sectoral heat map also and see what happened in terms of individual sectors. Top gainer, PSU Bank Index, followed by metals, auto sales numbers that will trickle in tomorrow. On the back of it, you're seeing some smart moves there. Media continues to be at the losing end, second or the third consecutive session ending in the negative. Consumer durables, real estate, FMCG consumption. So that's the pack where there has been weakness. Healthcare as well as pharma also witnessed good amount of weakness. Mid cap and the small cap index, let's pull up that one because there was pressure, but a good recovery that has come in mid cap 150 from the day's lows. We've ended flat but slightly in the positive. And if you look at the small cap 250 as well, a similar chart where we've ended in the positive after dipping into the red at the day's low. So that major recovery that has come in the last 15 to 20 minutes of trade. Let's look at BSE 500 as well to look at the broader markets. Tata Investment, 20% up move on that one on the back of the Tata Capital IPO. Nalco, Jyoti Laboratories, Bank of India, IIFL, Sanman Capital ahead of the corporate action and good volumes that are being built on that one. JK Paper on the back of the anti-dumping that we are tracking. KPIT Tech also saw a smart recovery after dipping 10%. It's ending lower with cuts of 8%. Zydus Wellness, Godfrey Philip, Patanjali, Praj and Garware Tech were few of the top losers. But clearly, that muted move in the markets has continued. It is expiry. Volatility has remained high, and that you can see from the gyrations on the VIX as well, and the way the breadth has been moving on. Key events. RBI monetary policy as well as the Sensex monthly expiry today was the Nifty expiry. Apart from that, you have Vikran Engineering and Crystal Integrated. Both of these will see exit, shares that will be exiting the anchor lock-in tomorrow. And very lastly, on both these counters, whether there are moves or not is what we have to wait and watch and see. But completely out of time. With that, it's a wrap in this edition of India Market Close from Neeraj, the team that put this show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, benchmark indices have ended a volatile day of trade with a negative bias right ahead of the weekly F&O expiry. Now while the Nifty has ended 36 points above the 24,600 level, the 30-pack Sensex has wrapped the trading near 80,200 odd levels. Now Reliance, Bharti Airtel and ITC have contributed and dragged the Nifty by most points. Now on the sectoral front, the market posted a mixed performance. So metal and banking stocks have witnessed a sharp uptick. Realty, consumer durables and also media was seen under pressure. Now the advanced decline ratio has ended skewed in favor of the bears. Let's look at Man Industries, which has declined as much as 16% after a SEBI order barring the company and top executives for 2 years. Now, the company allegedly misrepresented related party transactions and also engaged in round-tripping of funds. Now, the company's MD says that they haven't faced any compliance issues since 2021 and they plan to appeal against this order. Also, the company expects to recover 600 to 700 crore rupees from its unit Merino Shelters. Also, we have courier giant Blue Dart is hiking the shipment prices by 9 to 12% from January 1st. Now, the move follows its yearly pricing practice. Now, customers signing up between October and December will be spared the hike. So, meanwhile, margins have dipped in Q1 after a steady FY25.
Next up, we have Allcargo Gati, which is raising prices by 10.2% for its express distribution services starting January 1st. Now, the hike aims to offset the rising cost and also infrastructure investments. On the financial front, the company expects 204 crore EBITDA in FY25 with a strong 20% CAGR growth projected through FY28. CLSA has initiated an outperform rating on Coforge with a target price of 2,346 rupees. Now, the brokerage cites strong leadership, domain expertise, and also a consulting-led approach driving growth. Now, Coforge earns 2/3 of its revenue from financial services and also travel. CLSA projects robust CAGR of 15% in revenue, 16% in EBIT, and 22% in EPS from FY26 to FY28. Morgan Stanley maintains its overweight rating on Coforge with a target of 1,880 rupees. Now, the firm expects that the stock to actually outperform the country index over the next 60 days. Now, it also sees stable revenue and margin trends in Q2. So, limited downside to EPS estimates and also potential for improved free cash flow margins and the re-rating. Kotak Securities have initiated an ad rating on Leela Palace with a target price of 475 rupees. Now, the brokerage sees a long runway for luxury growth and also backed by Leela's pure play focus on high-end hospitality in India. Strong earnings growth is also expected over the next 5 years, which is supported by favorable demand-supply dynamics. Axis Capital has initiated a buy on Leela Palace with a target price of 505 rupees. It also highlights Leela as India's only pure luxury hospitality player, expanding its own portfolio. Now, growth will be led by owned palaces and also same-store RevPAR. Now, strong financials are also expected with revenue and EBITDA CAGRs of 14% and 15% over FY25 to 28. Tata Steel's green ambitions hit a cautious note today as Citi reiterated its sell rating with a target price of just 145 rupee per share. Now, the call comes amid Tata Steel signing a non-binding letter of intent with the Dutch government for a massive decarbonization push. Now, Citi has warned that the Dutch transition is far trickier, demanding a larger setup and also a tripartite pact involving unions and also locals. Now, unlike the smoother UK deal backed by £500 million, Tata stock has dipped amid broader steel sector woes, including the rising input cost and also global oversupply. Polycab India has gotten a big vote of confidence from Citi. Now, the brokerage maintains its buy rating with a target price of 8,600 rupees per share. Now, Citi has introduced a 90-day positive catalyst watch, forecasting a strong earning trajectory driven by Polycab's dominant wires and also cable segment. Now, the company commands a 22 to 24% market share in India's organized cables market. Citi expects sustained revenue growth of 15 to 18% annually through FY27, which is fueled by rising infrastructure spending, housing demand, and also renewable energy projects. Margins are projected to improve to 13 to 14% from 12.5% in FY25, thanks to the operational efficiencies and also the premium product focus. Jaro Education made its stock market debut with a flat listing. Shares of Jaro Institute opened at IPO price of 890 rupees on both the NSE and BSE, reflecting investor caution despite blockbuster subscription demand. Now, the 450 crore IPO compressed a fresh issue of 170 crore for expansion and also an offer for sale for 280 crore rupees, which was a hit. Now, ahead of the listing, the company has secured 135 crore rupees from anchor investors. Analysts note that the PE ratio of 38 times prices in aggressive growth, but competition in the edtech could actually test its edge. So proceeds will fuel brand building, tech upgrades, and also the debt reduction. Now on to another listing of the day, which is Sesha Sai Technologies, which has made a subdued market entry. Now, shares listed at 436 rupees on BSE and a 3.1% premium over 423 rupees of issue price, and also 432 rupees on the NSE, which is up 2.13%. But the initial cheer faded fast, with the stock slipping by over 6% amid broader fintech jitters. Now, the 813 crore rupee of main board IPO was a runway hit, oversubscribed 69.64 times. Founded in 1993, Hyderabad-based SSI services banks with EMV cards, secure IoT devices, and also fulfillment services, which is valued at 28 times earnings. Proceeds will drive the R&D capex and also the debt reduction. And the listing spree continues. Anand Rathi shares and stockbrokers debuted with a 4.4% premium. Now, shares listed at 432 rupees on the NSE and 432.1 on the BSE. 745 crore rupee fresh issue IPO smashed the expectations by being oversubscribed by 21.8 times overall. Now, with over 30 years under the Anand Rathi banner, the firm offers broking in equities, derivatives, commodities, and also currencies, plus margin trading and also wealth products. Now, 550 crore rupee from the proceeds will be used for the working capital, rest for growth, and stock has held steady post the open at 428 rupees, which is up 3.4%. And another stock that has made its debut was Solar World Energy. Now, Solar World Energy Solutions, which is an EPC player, debuted with a solid 10 to 11% premium today. Now, shares have opened at 389 rupees on the BSE, which is up 10.8% from the 351 rupee of issue price, and also 388.5 on the NSE, a 10.7% gain there. So 490 crore rupee main board IPO has consisted of 440 crore of fresh issue and also 50 crores of offer for sale. Now, established in 2015, Solar World specializes in engineering, procurement, and also construction for solar projects, with a 2,528 crore order book across 46 completed sites in key states like Uttar Pradesh and Maharashtra. Proceeds from the IPO will fund a 1.2 gigawatt of solar PV manufacturing plant in Madhya Pradesh via its subsidiary Kartik Solar World. Now, plus the corporate needs, which positioning it for 18 to 20% ROE in the competitive solar market. Now, time for an NDTV Profit exclusive, viewers. Corporate governance clouds are gathering over PTC India Financial Services. Now, what makes me say that? So, 3 independent directors have resigned abruptly, citing differences with, Chairman Manoj Kumar Jhawar. Now, the exits by Seema Bahuguna, a former IAS officer and also an ex-secretary in the Department of Public Enterprises, Ajay Kumar Gupta, and NV Bharati follow, a heated nomination and also remuneration committee meeting in September, where Jhawar pushed a last-minute independent director appointment without the mandatory 7-day notice. Now, opposing directors were reportedly warned of consequences. Now, creating an environment Bahuguna called difficult for impartial functioning. Now, this echoes to 2022's mass exits that actually toppled the former leadership and also triggered penalties. Now, in another major leadership overhaul, the government has appointed Ashish Pandey as Managing Director and also CEO of Union Bank of India, and also Kalyan Kumar as Head of Central Bank of India, each for a 3-year term. Now, the Appointments Committee of the Cabinet, chaired by Prime Minister, greenlit the moves today. So Pandey is currently the Executive Director at Bank of Maharashtra, while Kumar is from Punjab National Bank's executive ranks. Now, he will succeed MV Rao at Central Bank of India. The Financial Services Institutions Bureau recommended both the leaders on May 30th after a rigorous selection process. Now, in a big move for India's aviation sector, the Directorate General of Civil Aviation has granted an aerodrome license to the Navi Mumbai International Airport. Now, this clears the final regulatory hurdle for its operations. Now, this milestone actually paves the way for the airport's inauguration on October 8, 2025, with commercial flights set to commence shortly after. Developed by Adani Airport Holdings in a 74:26 joint venture with Citco, the project actually spans 1,160 hectares near Panvel and also Ulve, easing congestion at Mumbai's Chhatrapati Shivaji Maharaj International Airport. Now, Phase 1 will handle 20 million passengers annually with 4 terminals and 2 parallel runways. Tata Motors have shared an optimistic yet cautious insight at its recent analyst meet, navigating a cyber attack setback while spotlighting the robust domestic growth. Now, Jaguar Land Rover hit by a September 2025 cyber incident that halted the production, plans a phased restart in the coming days. Now, near-term demand remains challenging in Europe, China, and also the US due to economic headwinds and tariffs, but management eyes recovery through premium branding. The Iveco buyout, excluding defense, promises initial EPS accretion, turning meaningfully positive in 2 years, potentially scaling South America revenues to $2 trillion. And management has upgraded the FY25 to 30 CV CAGR to 6 to 8% from 5 to 7%, which is outpacing the industry's 20%. Now, Q3 discounts will push the volumes amid the demerger effective October 1. Tata's role hit 24% in FY25. Home textiles giant Wellspun Living has kicked off its first analyst meet post the stinging 50% US tariff. Now, management has revealed that they have shouldered full 25% penalty hit to actually shield the market share in the US while passing the reciprocal slice to the customers. Now, this has kept retail demand steady, which is, as big box chains like Walmart and Target hold back full pass-throughs to the shoppers. But caution reigns as retailers are skimping on inventories, forecasting a 15 to 20% US revenue plunge in Q2 and also Q3 of FY26. Now, on profitability front, a near-term washout until the penalty lifts is being penciled in. So to counter Wellspun is ramping cost efficiencies, diversifying to UK, Europe and also Japan markets, and accelerating India investments. With FY25 revenue at 10,269 crore rupees and PAT of 547 crore rupees, the company is eyeing a long-term resilience in its spaces and Christie brands. YouTube has agreed to pay $24.5 million to settle a lawsuit brought by Donald Trump, filed after the video platform suspended his account in the wake of 6th of January attack on US Capitol. Now, settlement from the video streaming giant's parent company, Alphabet, which also owns Google, comes after social media sites X, formerly known as Twitter, and Facebook also agreed to pay Trump for suspending his accounts. Now, Trump had accused YouTube and other tech companies of political bias, claiming that they had unfairly censored the conservative voices after the Capitol riot in 2021. On to some more global news. Now, China's manufacturing activity shrank for a 6th month in September, which is an official survey. So this suggests that producers are waiting for further stimulus to boost the domestic demand, as well as clarity on a US trade deal. So the US official purchasing managers index rose to a 6-month high of 49.8 in September versus 49.4 in August. Now, it has also remained below the 50 mark, separating growth from the contraction, but actually have topped a median forecast of 49.6. On to some national news now, which is a major weather alert from the Indian Meteorological Department has issued warnings for heavy to very heavy rainfall across 11 states and the Union Territories. Now, from Telangana to Assam, expect intense downpour with some areas facing up to 20 centimeters of rain in just 24 hours. Coastal regions and the northeast are also bracing for possible flooding and landslides, while rough seas have grounded the fishermen. Authorities has urged the residents to avoid the low-lying areas. Massive raids on casinos across Goa, Delhi, NCR, Mumbai and Rajkot have exposed an alleged Hawala and crypto racket tied to the Big Daddy casino. Now, over 15 locations have targeted under FEMA. ED has seized 2.25 crore rupees in cash, 14,000 US dollars, foreign currencies worth 8.5 lakh rupees, and also froze USDT crypto valued at 90 lakh rupees. Now, documents reveal that cross-border laundering through online platforms like WinDaddy. Now, the probe into the offshore gambling could actually unravel a larger network. On to some more global news, viewers. A White House meeting with top Republican and Democratic congressional leaders yielded no budget breakthrough, with both sides trading blame less than 36 hours before the government funding runs out, without Congress passing a bill to fund the federal operations before midnight Tuesday night. The government will partially close up shop and plunge Washington into a new round of political crisis. Now, you're looking at delayed key economic reports there, non-essential operations grinding to a halt, hundreds of thousands of civil servants temporarily left without pay, and payment of many social safety net benefits have been disrupted. 3 students confirmed dead and at least 38 still missing after an Islamic boarding school collapsed in East Java's Sidoarjo district in Indonesia. Now, the building gave way during afternoon prayers amid unauthorized construction, which is trapping dozens under rubble after over 100 injured and many critically. And there are many critical. So rescuers are racing against time, delivering oxygen to the survivors, but also unstable debris forced a brief halt. Families wait in anguish as the death toll may rise. Authorities probe lax safety standards in this second such incident this month. On to some more global news. Nepal has scripted history, clinching a stunning 2-0 series lead over West Indies in their first ever T20 bilateral against a full member. Now, after a 19-run win in the opener, they demolished the Windies by 90 runs. Now, bowling them out for a record low 83, the lowest by any full member against the associate. So, half centuries from Asif Sheikh and Sandeep Johra have powered Nepal to 173, with Muhammad Adil Alam 4-wicket haul sealing the route. So this massive upset, the biggest victory margin for an associate over, which is a test nation, boost Nepal's World Cup qualifier dreams. Now, before we wrap, viewers, let's also take a look at some of the key events to watch out for tomorrow. All eyes will be on the RBI's monetary policy decision. Economists expect rates to stay unchanged at 5.5%, while inflation remains muted, global risk loom. RBI may also revise the forecast with the rate cut still on the table. September auto sales data is set to be released tomorrow. Early signs point to strong growth driven by GST cuts and also festive demand. Two-wheelers benefit from the rising entry-level demand and also export revival. Four-wheelers see gains from dealer inventory build-up. Commercial vehicles also rebound on the last year's low base and infra push. With that, viewers, it's a wrap on this edition of Market Express, but stay tuned to NDTV Profit and don't go anywhere.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
बुझो जरा भी प्यास जिसके हम ना हो जान रहे दिल ये तो जान दी है तू
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360.
The Nifty and Sensex closed flat with the negative bias ahead of the RBI's monetary policy meeting. Sectoral indices end mixed with the PSU Bank Index as the top gainer, while Nifty Media is the loser.
It doesn't impact the company's day-to-day workings. It doesn't impact our growth plans.
Man Industries loses close to 10% after SEBI bans the firm and top executives from the market. Management tells NDTV Profit that the regulatory action will have no operational impact. Tata Motors saw 25 to 30% growth in bookings from the 5th of September until Navratri. Expects GST cuts to aid the growth outlook for FY26 in commercial and passenger vehicle segments. 3 independent directors resigned from the board of PTC India on differences with the chairman, Manoj Kumar, quoting unfavorable environment in the company as their reason for their resignation. And DGCA grants aerodrome license to Navi Mumbai International Airport that allows the use of an airport for regular landing and departure, bringing it closer to its vision of enhancing regional and international connectivity. Precious metals shine as gold scales a fresh record peak with a weaker dollar as the key headwind, while silver hits a 14-year high on the back of industrial demand for electronics. Prime Minister Narendra Modi welcomes Donald Trump's peace plan for Gaza, says it provides a pathway to long-term and sustainable peace, security and development for Palestinian and Israeli people. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. First up, let's take a look at how the markets fared today. Nifty and Sensex closed slightly in the red ahead of the RBI monetary policy. And on the sectoral front, we saw indices ending mixed with PSU Bank Index as the top gainer, while Nifty Media was the loser. For more details, let's go across to my colleague Varsha, who's going to give us a wrap of all of the market action of the day.
So yes, benchmark closed flat with a negative bias. In fact, Hero Motocorp gains over 3% for the day, its best Nifty performer, while Hero Motocorp and JSW Steel are the top gainers when it comes to Nifty 50. ITC and Bharti Airtel fell the most in the Nifty, while Nifty mid-cap, if you see, remains flat for the day. Tata Investment and Sundaram Finance gained the most when it comes to Nifty mid-cap. Onto the small cap 250, the index ended in green. Gains were led by TV18 Broadcast and National Aluminium, while Nifty PSU Bank, if you see, emerged as a top gainer sector for the day, and the gains were led by Bank of India, Central Bank of India and Indian Bank, while Nifty PSU Bank and Nifty Metals gain over 1% for the day. Nifty Auto snaps 4-day losing streak, and Nifty Pharma fell for the 7th consecutive day, while Nifty Metal, Financial Services and Bank gained for the 2nd consecutive day. Nifty IT fell for the 8th consecutive day, while lastly Nifty Media, if you see, fell for the 6th consecutive day.
Thanks for that, Varsha. And what's the best approach to take in this market? Vijay Raghavan Swaminathan, Managing Director and Head of Research, Avendus Spark Institutional Equities, believes it's the bottom-up or stock-specific approach. Let's listen into a snippet of our earlier conversation with him to understand why he thinks so.
I think I'll stick to my bottom-up ideas, because every sector today has got something or other in form of headwinds. Okay, so as a result, it is going to be a stock-specific or bottom-up specific approach is what is needed at this point of time. Given that there is lots of uncertainty around job creation and lots of uncertainty about this exports, I think these two are important elements for us to see a holistic recovery in earnings cycle. So to put another way, I think for the broader indices, 15-16% of earnings to come through, only with consumption-led recovering is not adequate. So while consumer-related stocks can see some marginal upgrades, but it will be equally neutralized by downgrades in non-consumption sector, whether government-dependent sectors or B2B sectors can see downgrades if my other concerns continues to play out the way it is right now.
Meanwhile, Man Industries has not faced any compliance issues since 2021. This is the word coming in from Nikhil Mansukhani, the managing director of the company, and this is what he had to say while speaking exclusively to NDTV Profit, and adding that SEBI's action that barred the company's management has not impacted operations. He further commented on the company's clean compliance record. Let's listen in.
Obviously, it concerns when the order is, though there is no financial impact on the company, the shareholders, it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date. And we are keeping monitoring very, very close, and all the related party or any we have stopped completely since 2021. And this is to, interest more shareholders, and which we have seen over the last 2 years, with where we have reached from where we were. Today we are, the order book is the strongest, which was never been the case. We were always trading between 1,000, 15, 2,000 crores of top line. And today we have a 5,000 crore order book already in line. We have managed to, remove the assets which were not performing and generate that income as well into the company. And looking forward also, we will be doing the same. So yes, obviously this affects us, but it has been a long time overhang for the company as well. And by paying 25 lakhs and getting this matter disposed of and getting it over and done with, we can look forward now positively. So I think it was to be done someday or the other. It's happened today. It was supposed to happen someday. And yes, we will fight for our legal rights wherever we feel the order is not in our favor, and we will do the needful.
Meanwhile, Tata Motors shares were in spotlight after its analyst meet on Jaguar Land Rover, with the automaker addressing concerns post a cyber attack back in September, saying JLR will resume production in phases. However, the near-term demand outlook remains challenging across Europe, China and the US, is what the management cautioned. This update came even as Moody's downgraded Tata Motors, citing continued JLR headwinds. My colleague Puneet now brings you the big analyst call takeaways.
We did get an update from the company that they have started to resume some key operations. Yesterday at the analyst meet, they also discussed that it's coming up in a phased manner. So that's a key positive. Overall, they're expecting in terms of demand outlook, that does remain challenging. And that's going to be one of the key ones because, it's in near-term pressure experienced across geographies in Europe, China, amongst others, and the US, which is one of the key markets. 25% of the company's volumes comes from that market. So that's for JLR. It is reeling under pressure because of the cyber attack and production being halted for the second time this year. First time was in April due to the tariffs. When you look at the GST cuts, as well as that is aiding essentially the passenger vehicle space as well as the CV space, they're expecting a single-digit growth in H2 FY26, but that's high single digits, so that's a key positive. They've also highlighted that 25 to 30% of the bookings have come from September 5th till Navratri as well. So that's another key positive coming in because that was the Shraddh period. So they have seen increased booking at this time, while they are expecting Q3 to see slightly higher discounts to push much more volumes, gain back that market share. So we are expecting some pressure on margins for Tata Motors, but that seems to be the consistent across the board for someone like a Maruti as well, who has taken a higher price cut on Brezza to match the 3XO in the market. Amongst others, management is expecting a 7 to 8% growth, a sub 5% growth for the passenger vehicle space, and that largely is something to watch out for. CV outlook is much more positive. Iveco, which was one of its key acquisition of over $4 billion, likely is EPS accretive initially, but that'll be the other progressive of how post the demerger, the focus shifts on that one. They've increased essentially the outlook to 6 to 8% for the industry for commercial vehicles versus 5 to 7% earlier. So that's another key positive. And finally, expecting a double-digit growth for the industry in H2 as well.
Thanks for that, Puneet. And now let's take a look at the IPO listings for today. Shares of CSHI Technologies made their debut today, a 3% premium over IPO price, but shares slipped over 7% post-listing as early gains fizzled. Meanwhile, let's take a look at Anand Rathi Share and Stockbrokers Limited that listed earlier today with a 4% premium against issue price, reflecting robust investor appetite despite market volatility. Jaro Institute of Technology Management and Research Limited had a flat listing, its issue price then fell 13% in initial trade as investor enthusiasm cooled after strong subscription for its 450 crore IPO. And last, SolarWorld Energy Solutions jumped 11% on listing as the solar EPC player rode sector momentum. All four IPOs drawing heavy subscription across categories, but post-listing reactions ranged from modest gains and high volatility to sharp profit booking. Here are some reactions from management.
So essentially, if you see in the payment solutions vertical that we have predominantly three products. One is obviously the payment cards that we do, which are cards like debit cards, credit cards. We've got mass transit cards, prepaid cards, etc. We also do check leaves. So we have 1.2 billion check leaves a year. For customers across various banks, for their SME customers and their savings account customers who ever use check leaves. And then we also have QR code that we do for banks and some of the fintechs for their merchant payments where you scan and pay on the QR codes. And recently we've innovated to add chips onto the QR code where you can tap and pay on the QR code. So these products comprise of revenues which get into our payments solution vertical.
From last 3.5 years, obviously we have started and we learned the way how fast and how and what kind of a transparency and what kind of a results is to be provided to the investors and how investors are looking at various different companies. And I think that philosophy is going to follow, because if you really look at it, we have been very, very meticulously delivering in our Anand Rathi Wealth result dot on between 10th to 15th of every quarter ending after post quarter ending. So I think the similar kind of similar nature and similar fashion, I think over here also we are going to probably start coming out with our results. So far growth of this company is concerned, so we are quite confident that this company is also going to grow over a period of time. There are enough shoots for the growth are available. By diversification the revenue stream, by stabilizing and looking at our total revenue mix between broking and non-broking and trying to improvise on a non-broking side so that you can create an annuity kind of a revenue over a period of time.
So since you have a lot of these courses at these said institutions, I think you also have roughly about 22 offices come learning centers. How should we see the growth of this? Will this largely be that the courses will continue at these said partner institutions, or are there a lot of them which use your learning centers, and how should we see the growth essentially of opening of new learning centers in this digital era?
Yeah, so basically the growth will come with more partners. Every year we'll keep on adding 4 or 5 partners. And we are also mindful about the deliverables. So that's why we don't want to get too many partners very fast. We should be ensuring the delivery is quite good. More partners, more programs, more enrollments, and that's how the growth will come. And the TAM, the total addressable market, is quite big. In 2023, the TAM was something around 13,200 crore. And the TAM is expected to be in 28 around 41,450 crores. So the CAGR growth is around 25% plus.
Meanwhile, Adar Poonawalla has entered the race to acquire the Royal Challengers Bangalore IPL franchise as part of his broader business diversification strategy. Sources say this move underscores his ambition to expand beyond vaccines and finance into sports and entertainment. Let's go across to my colleague Vishwanath Nair for the latest updates.
Right, so the race for the Royal Challengers Bangalore cricket team is heating up. Now, what we understand from sources is that Adar Poonawalla is in the race to buy this cricketing franchise under the IPL. Remember that a few months ago we had reported that the United Spirits was looking to sell its stake in RCB as a way to monetize its assets, because it has been holding it for a fairly long time. So now, of course, it wanted to get rid of this asset. So what we understand from sources is that negotiations between potential bidders, including Adar Poonawalla, are still on. As part of this transaction, United Spirits, the owner of this franchisee, is expecting a one-time lump sum payment. This is different from what typically happens, which is that payments happen over 10 years. So in this specific case, they are seeking a one-time payment. Of course, the bidders are still in negotiations with the franchise owner. What we also know is that this is part of Adar Poonawalla's broader plan to diversify his business. If you remember that he's already bought considerable controlling stake in Dharma Productions, a film production company, and of course now with the RCB cricketing team online, it does seem like Adar Poonawalla is looking to expand his ownership into various types of businesses, specifically entertainment.
Thanks for that, Vishwanath. And moving on, Navi Mumbai International Airport has secured its aerodrome license from the DGCA, authorizing it as a regular landing and departure airport. Now, this critical milestone brings the airport closer to operational readiness ahead of its planned inauguration by the Prime Minister on October 8th and 9th. Maharashtra Chief Minister Devendra Fadnavis confirmed this. Now, the airport is a joint venture between the Adani Airports and KIDCO and is expected to enhance regional and international connectivity. Airlines like Air India Express, Indigo and Akasa Air have announced plans to begin operations from the new airport soon. Moving on, the September 30th deadline for Tata Suns to go public ends today. However, with its application for deregistration as a core investment company is still pending with the RBI, the company may avoid the mandatory listing requirement for now. Tata Suns has been working to shed its non-banking financial company status since March 2024, a move that could exempt it from this listing mandate. My colleague Vishwanath Nair joins us now with the latest details on what this means for Tata Group and its shareholders.
Talking about the missing listing, specifically about Tata Suns. Now, of course, it's part of the RBI's list of upper layer NBFCs. This is a list that was released back in September of 2022. At that point in time, the RBI's rules were that within 3 years, whichever companies of this list are not listed need to come out and list. And this was primarily being done so that corporate governance issues could be handled if there are any market sort of impact that might come in because of the wide sort of borrowing that these companies may have from listed players as well as lenders out there in the markets, and then those can be addressed as well if the company is listed on its own. So that's why the RBI pushed for the listing. Tata Sons, of course, is missing from that listed list. You've got Tata Capital that has already opened its IPO later this week. Why is this important, and how are they actually missing or avoiding that listing? Well, it's important because this essentially is a precursor to the RBI taking any action. Will the RBI take any action against this or not? And if the RBI does not take any action, then the question being that do the Tatas actually get a free hand when they talk about their companies being listed under the mandatory rules? How can they avoid the listing? Well, this CIC deregistration, that is something that they've been attempting since August last year. It's been a little over a year and the RBI is still in the consideration phase. They've not taken a call on deregistering the company as a core investment company. It's a core investment company essentially because it invests money into other Tata Group companies and therefore that's its only business. It doesn't have any natural business of its own. So if it is able to avoid that CIC tag, then it doesn't need to be classified as an NBFC and therefore it doesn't need to list because it gets removed from the upper layer NBFC list. The whole issue here is that Tata Sons has already repaid its outstanding dues with the broader market, 20,000 crore. They've cleared their debt and that makes them disconnected with the broader system. So the CIC tag doesn't necessarily apply. It's only a holding company or a sort of incubator company of the Tata Group for other group companies. So that's how they're going to avoid the listing. But whether the RBI buys this argument or not, that's something that we'll wait and watch.
Thanks, Vishwanath, and stay with us because big governance issues have now come to the fore at PTC India Financial Services, with sources telling us that 3 independent directors have resigned, all of them citing differences with Chairman Manoj Kumar Jhawar. Now, this marks a fresh governance crisis at the company, which had faced similar boardroom turmoil in the past. My colleague Vishwanath Nair back with us to tell us the exclusive details on what triggered these resignations and the wider implications for the firm. Vishwanath, over to you.
All right, so the developments at PTC India Financial Services have come to light. Of course, over the weekend, there was news reports as well as an exchange clarification saying that 3 independent directors from the board of PTC India Financial Services have resigned. All 3 of them had identical resignation letters. In their resignation letters, these 3 directors had pointed out that they are exiting primarily because the conditions in the company are such that they cannot uphold the highest levels of corporate governance at PTC India Financial Services, and that is why they've made the decision to resign from the company. Now, what we are learning from sources is that this entire thing was fomented by a very stormy meeting of the Nomination and Remuneration Committee earlier this month. Essentially, this NRC committee consists of these 3 same independent directors, Seema Bahuguna, Naveen Gupta, as well as PV Bharti, and Manoj Jhawar, who is the chairman of PTC India Financial Services. During this meeting, Manoj Jhawar had sought to recommend another independent director to join the board. However, this recommendation was made only a few hours before the board committee meeting. The requirement is that such recommendations come at least 7 days in advance, so the rest of the members are able to look at the candidature of this independent director and then decide whether their appointment is appropriate or not. So they did not get that time, and when the directors opposed this entire thing, Jhawar allegedly warned them of consequences that may follow if they don't agree to what the promoter wanted to do. Manoj Jhawar is also the chairman and managing director of PTC India, which is the promoter company of PTC India Financial Services, and therefore his position is quite important. He's also one of the nominee directors of the parent company on the PTC India Financial Services board. What we learned from sources is that despite all of these repeated discussions, the meeting became very heated, and then eventually the 3 directors decided that they should step down. In fact, the director in question whose appointment was being debated was Mini Ipe, who's also an independent director on PTC India's board, and therefore the appointment of Mini Ipe was being pushed by the parent, which these independent directors had opposed, and that is why they have gone ahead and exited the company now.
Thanks, Vishwanath, for that. And now let's take a look at how metals are doing. We saw precious metals shining in trade as gold scaled a record peak, while silver hit a 14-year high. Robust ETF inflows, resumption of interest rate cuts by US Fed, and lingering geopolitical and tariff uncertainty, along with a ramp-up in buying by central banks, are the key tailwinds for this gold. Meanwhile, industrial demand for electronics, growing EV demand, and solar boom are the factors fueling the silver rally. Now, earlier today, we spoke with Sachin Jain, Regional CEO, India, at World Gold Council for his outlook on gold prices. Let's listen in.
Let me reflect upon the Indian ETF side first. So the Indian ETF side, if you look at the AUMs on the 1st of January 2024, were about 41 tons. On the 1st of January 2025, were about 57 tons. Now, 16, 17 tons over the last year. You might say that is small, but based on the base value, it is fairly large. As of right now, we've seen upwards of 72 tons as AUM on ETFs, and we're seeing a constant interest on not just HNIs and financial investors, but people or average people on the floor or the street are getting interest. And I think ETF as a product is a regulated product. It's a phenomenal product. Not everybody understands that it's backed by physical gold, and hence we foresee that gold ETF in particular in India is at the cusp of a growth, and we foresee a very phenomenal growth in the coming time because being regulated, the ease by which you can hold it, purity, and all of those elements are taken care of.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to KYC on NDTV Profit. On this show, we're going to talk about a stock that has gained over 30% in the last 1 month. This is at a time when viral and flus are on the rise. Is this hospital a beneficiary? We will get to know that. We're talking about Shelby. Welcome to KYC. I'm Hiral Datia and with me is Varsha. Clearly, this is an interesting time that we're talking to the company as well, when the entire season is with regards to virals and flus. But yes, Shelby does do a lot more. First, let's quickly understand what are the key answers that we want from the management so far. First up, the occupancy ramp up in Shelby Sonar. What is that actually going to look like from here on? Because that is the key in terms of the recent acquisitions as well. Secondly, when you talk about the Mumbai Greenfield Hospital, the timelines with regards to execution and operationalization of the Mumbai Greenfield Hospital is what we will be watching out for. And very lastly, if you talk about the company's implant business, now that is something that we should be looking out for because it actually sits under Shelby MedTech, and this is a key part of the company's long-term growth strategy and diversification plan as well. So these are the first 3 important points, Varsha, that I'm looking at.
Well, what I am looking at, one is the growth in average revenue per occupied bed. Because, Shelby is at such a phase wherein at a certain point of time, you cannot increase your ARPOB beyond a certain level. So we might want to understand what is that ballpark percentage that Shelby is expecting when it comes to growth in ARPOB. Then I would also like to know the EBITDA margin stability. Because in Q1 FY26, if you see, the margins were under pressure. Now this was because of high doctor costs. So I would want to know what is the sustainable EBITDA margin going ahead for next 2 to 3 years. So these are my 2 main questions that I would want to ask to the management.
Absolutely. In fact, let's shift focus and understand more about the company. Shelby operates a chain of multi-speciality hospitals, and this is across India. They have 11 hospitals which are spread across Western, Northern and Central India. A franchised hospital network is what they look at as well. In fact, implant is another segment that they're looking at. They manufacture US FDA approved implants and sell them across the US and other international markets as well. The plan is to make this $100 million business in the future, and that is one of the pressure points right now that the company is facing.
Right. And also we might want to understand what are the business highlights, when it comes to Shelby hospital business. So if you see the ARPOB, that is average revenue per occupied bed, which is an important metric in an hospital, which stands at around 45,673 rupees. The operational bed, if you see, is at almost 1,400 odd. The occupied beds stand at 639 beds. With that, if you see, the occupancy rate is at 45%. Also, onto the average revenue per occupied bed, if you see the trajectory, company has seen a decent growth, when it comes to ARPOB. So in FY22, the ARPOB was 32,106. Fast forward to FY25, it stands at around 41,377. So good growth we have seen in ARPOB when it comes to Shelby.
Okay, so that's with regards to where the ARPOB go. But let's understand the segmental mix as well. Now, it's a specialty business, so the revenue mix is also pretty interesting. Arthroplasty, 41% of the revenues come in from here. Orthopedic contributes around, say, 10%. Oncology is pretty similar, and others is around 40%. So that's the kind of revenue breakup that you're looking at across verticals.
And also, Hiral was talking about Shelby Sonar, which is an important acquisition that the company has done. And why this is important? Because that will outline the growth going ahead. So onto the Shelby Sonar, the ARPOB for that stands at around 89,803 rupees, while the bed capacity is at 130. The occupancy rate over here is only 22%, which management want to increase it, going ahead. So overall, if you see the pain point in Shelby Sonar is the occupancy rate, which is at only 22%.
Okay, so that's a question we will check with the management, Varsha. But let's understand all the parameters that we are going to consider from here on. First up, you have the income statement check that we will be doing. Balance sheet is another one. Cash flow return ratios are very important over here as well. Shareholding, street cred and valuations along with the outlook is what NDTV Profit is considering. But first up, let's quickly look at the income statement. It's very interesting because it's consistent and robust upward trend is what we've seen in revenues over the last 3 years. Between FY23 to 24, the growth did stabilize at around 15 to 16%, which indicated sustained business expansion. If you talk about the operating profit as well, that has seen a significant growth, and the growth on both these parameters is actually translated into profitability, which you can always see on the screens right now. Though what is interesting is in FY25, the profit number was only 2 crores, and a lot of factors that have impacted as well. The recent performance is also suggesting margin pressure, and this is potentially on the back of the acquisition which has been made, because over there occupancy was lower initially and the finance cost was also higher. We're talking about acquisition of Sanar hospitals. In fact, it has been a significant point of concern right now. The new hospital has actually faced slower than expected occupancy rates and has been operating at a loss, negatively impacting the consolidated margins and profitability. In fact, the management is expecting the facility to break even in the near future, but its performance will remain a key credit monitorable from here on. And the challenge is effective integration and scaling of the newly acquired expanded facilities to maintain the margin trajectory. And very lastly, when we spoke about the implant business, this division, while expected to contribute to revenue diversification, has actually faced challenges, and it is evident in the kind of profit growth and the margins that you're seeing, because it is a high working capital business with a significant inventory that is holding up, and it's yet not become consistent in terms of profitability. Expenses are also high, and that is what is impacting the margins, and the margins have been fluctuating over the last couple of years.
Now, talking about the balance sheet, let's see what are the key concerns there. Well, overall, not a dramatic one. The good thing is the debt to equity ratio, if you see, stand at around 0.48 levels, though debt has been increasing, but not at an alarming sign. So, and if you see the cash and bank balance, which has increased from 12 crores to 35 crores. So overall, not a dramatic one. So we have given a neutral rating when it comes to balance sheet.
Okay, so that's the balance sheet. Now let's look at the cash flow. Now there has been an increase in the working capital days of Shelby, and that is what has actually locked up most of the cash in the business. Acquisitions have dragged the cash flows, and this is on the back of initial losses, lower occupancy, as well as the integration costs, and hence a downtick. That's a thumbs down on the cash flow, because your net cash flows, though have turned positive this time around, your cash flow number is negative at around 4 crores.
And talking about return ratios, let's see what's happening there. If you see return ratios, there's been dip in FY25 from FY24 levels. This is because of the impact of the profitability that we have seen, and one of the reasons is also the higher tax outgo that the company has seen. So overall, if you see the return ratios barring FY25 is good compared to its peers like Aster DM or Yatharth Hospital, but because of this a pressure in profitability, that 14% we are seeing for FY25, and that's one of the reasons why we have given a neutral rating when it comes to return ratios.
So that's with regards to return ratios. Let's look at the shareholding pattern from here on. Overall, promoters absolutely consistent. FIs have actually gone ahead and increased their stake from a 4.88 to a 5.21, which is a positive. Likewise, the DIIs have also marginally increased the stake as well. And your public shareholding slightly has gone down, though your shareholder base that has increased. So taking these three aspects into consideration, we've given it a thumbs up with regards to shareholding pattern.
Considering street cred, so in the last 1 month, company has given a very good returns of almost 30%, while in last 5 years, the stock is up 190%, though in the last 1 year, the stock was down almost 10%, but overall, if you see, that's, considering the returns that company has given, not a bad one. Even if you see the year-to-date returns have been around 9%, and so, the last 1 month, the stock has given actually very good returns, and one of the reasons why we have given an upward rating to it.
Okay. Let's look at the valuations over here. It's a very interesting aspect to look at the valuations here on, because if you have to compare it to peers, it probably sits in on number 3 in terms of being expensive, because you still have an Aster DM and Kims, which are way higher as compared to a Shelby. And it's not only in terms of FY26, but even if you talk about FY27, the scenario remains the same. Now, with this kind of inconsistency that we've seen in terms of the earnings right now, I'm talking about the latest quarter, the investments that it is making as well, I think what analysts are of the opinion is that the outlook is something which is supporting the kind of earnings multiple that a Shelby is sitting on. And taking the outlook and the current and the future multiple into consideration, if it all fits in well and is able to perform, that is what we have to see, and hence a neutral rating in terms of evaluations go.
Right. Now, lastly, combining your analyst recommendation and outlook. Well, on analyst recommendation, there are not much analysts who are covering this stock, and hence there are only 2 analysts who have given buy rating, 0 hold and 0 sell, while the downside potential for is 15%. But then we have given a thumbs up. Now, this is basis outlook that the company is expecting. So they expected the EBITDA margin with operational leverage and business mix shift. So the EBITDA margins are bound to inch up. The occupancy is expected to touch at 50% plus for FY26, and the government mix is expected to reduce to 20% of revenue, and the single digit EBITDA margin is been expected for their implant business in FY26 and 27, and which will scale up to 20 to 25% in next 4 to 5 years. So good outlook, when it comes to FY27 and of course for the next 3 to 5 years, and this is the reason why we have given thumbs up when it comes to outlook.
Okay, so those are the parameters we are considering, but let's quickly look at all the parameters, the 8 ones, what do they stack up? Income statement, balance sheet, return ratio is a neutral, cash flow is a thumbs down. On the other 4, you have 3 thumbs up, which is shareholding, street credentials and street coverage and outlook. Valuations, again, neutral. And this takes us to a 5 on 8, which is also a pretty good rating in terms of where KYC goes. And the conversation from here on is going to be interesting, because Varsha did catch up with Shanesha, president of Shelby, to discuss the company's outlook and the plan of Mumbai Greenfield project. Let's quickly listen into that conversation.
Let's talk about what is the talk of the town when it comes to Shelby, because of the Delhi acquisition that you made, that is Sanar. The occupancy there remains low. I think it was almost 22% in Q1. Now, what steps are being taken to ramp up it quickly, and where do you want to take that occupancy level to?
Sure. So, look, Varsha, thank you for having me. We have seen that, usually we take 2 to 3 years for a hospital to really turn around. Essentially, this is a hospital where, it's been 6 quarters since we've taken over. And we have taken the right steps over the last, 6 quarters by getting the right clinical talent on board, as well as, the entire management rejig that happened at the senior level. So, the worst is behind us, and we will see that the numbers will start improving, and they have started improving. In a couple of months ago, we also had an issue with due to the Middle East crisis, and a lot of the patients were not traveling into the NCR region at that time, so that did temporarily affect us. But as I said, it's a high-end center for transplantation, whether it is liver, kidney, bone marrow, all high-end treatment happens at that hospital. And we are getting good traction, not only from international patients, but also from, the domestic patients, as well as patients traveling in from the neighboring states.
Understood. Also, Shanay, when it comes to your standalone hospital business, the margins over there were dropped due to higher doctor cost. When do you expect that margin stability, and what is the sustainable margin when it comes to hospital business going forward?
See, over the last few quarters, we have, kind of added a lot of doctors, and, we have, including some of the star doctors in some of these locations. So, we are building institutes of different specialities across all these different hospitals that we run. And for that, the initial investment is to get the right clinical talent on board. And that is the reason why we saw that, the earnings as a percentage to revenue has come down. not very significantly, at the absolute EBITDA level. But in the times to come, we do believe that we will stabilize, and we are looking to be at anywhere between 20 to 23% in this year.
Understood. Also, continuing on that, your Mumbai Greenfield Hospital, now that, Charity Commissioner has, the approvals are in place, what is the expected timeline for final approvals and handover?
So the Charity Commissioner, as you rightly said, has given the nod to us, and what we have to do now, as the trust is obliged to kind of submit the document to the Charity Commissioner, the document which has been agreed. So they are in the process of doing that. Once that is submitted, the following that the other formalities will be completed, and then we will be going in for the approvals with the BMC for the building plans, etc.
Usually, just wanted to understand a ballpark number, or rather ballpark months, if you could give us, by when you're expecting this project to go live?
So after the complete handover of the property to us, which should happen hopefully very soon over the next 3 to 6 months. Once that happens, it should take us roughly 3 years to kind of operationalize the hospital.
Understood. Also, continuing with the Mumbai, Greenfield Hospital, what is the expected bed capacity and target revenue per EBITDA once it becomes operational?
Yeah, so this is going to be a 175 bed facility where Shelby will be investing close to 250 odd crores. And it is a pure revenue share, with the trust. So there's no fixed lease arrangement here. And the average revenue per occupied bed, if that is what you were asking, in Bombay has been in the range of 50,000 to 60,000 for most hospitals. So we will be in that range for the Bombay hospital.
Continuing on that, Shanai, so if you see in Q1 FY26, the ARPOB, that is average revenue per occupied bed, was almost 45,000. Now, after a certain point of time, it's not possible to increase ARPOB at a certain level. What is the growth estimation when it comes to ARPOB, maybe, in next 1 or 2 years?
So see, I think for Shelby, the ARPOB has consistently gone up over the last several years. So if you look at the data 5 years ago, we were at around 30 to 33,000. Today we are at 45,000. We believe that the ARPOB growth will continue to be in the 4 to 5% range, on an annual basis. Now it may happen, it may be that you may see that there is a spike of 10% in 1 year. At times you will not see a spike in a particular year because the specialty mix also changes, and different specialties have a different ARPOB. So that might change, but in terms of the price revisions, the price revisions are in the range of 3 to 5% every year.
Understood. So 3 to 5% is what ARPOB growth is expected. Now, Shanai, let's talk about your implants business. Now, the revenue over there has seen growth of around 20%, but the EBITDA is still negative. When do you expect EBITDA to break even?
Yeah, so see, there are a couple of major changes that that is expected over the next 1 to 2 quarters. And these major changes, will basically help us reduce our cost of goods and at the same time improve our gross margin because of higher revenues and higher earnings per implant. Because we are launching certain implants which will actually give us a higher realization compared to our existing set of implants. So with these couple of things changing, and as you can see in the revenue growth, the acceptability of these implants is very high among the clinicians. Now, this is something that will take a quarter or two, but we do believe that, once that comes in place, we will definitely be EBITDA positive. and also, then be inching for a higher EBITDA margin.
Understood. And any revenue target that you have set for implant business, Shanai?
Yeah, so we have set revenue targets. Unfortunately, we are not sharing these revenue targets, at the moment. But this is a business which is grown significantly. So last year we did about 90 crores. The year before that we did about 60 odd crores. So it is growing at 50% for us, and we believe that it will continue the high growth trajectory.
Understood. Also, Shanai, a significant portion of debt has been linked to implants. Now, when do you expect your debt to meaningfully reduce? Any target that you have set for that?
Well, if you ask me, the debt equity ratio right now is roughly 0.3 to 0.4. So, we feel that, we are basically in a very comfortable debt to equity kind of position. Having said that, the plan is not to increase the debt, very significantly from here on. We believe that our internal accruals, in the hospitals business will take care of the interim requirements of funding, the implant business, as well as, some of the newer strategic interests of the group, like the hospital in Mumbai.
Understood. Shanai, my last question, before I let you go, you have given a top line growth target of around 12 to 15% for FY26. Do you want to inch that up, number one? And number two, what are your target for EBITDA margins on a consolidated level?
Right. So, unfortunately, I will not be able to share, the numbers in terms of, what the EBITDA margins will be. But I told you that, we will be in the range of between 20 and 23% for the hospitals business. And in terms of, the revenue growth, we are well positioned because as I discussed, the implant business is in a high growth trajectory, and we are heavily investing in newer clinical practices. As I mentioned earlier, we are also investing heavily in oncology in terms of adding new linac bunkers in 3 of our hospitals, and also robotics in a very big way. So the robotics within orthopedics for knee and hip replacements has really picked up very significantly for the group. And all these factors, will really help us, beat some of the past trends in terms of, our revenue growth numbers.
Well, this was the management of Shelby Limited. The top 3 takeaways from this interview would be: they expect unit economics for Shelby Sana to improve. EBITDA margin for hospital business is expected at 20 to 23% in FY26. And lastly, implant business to be EBITDA break-even after few quarters. So, all the main pain pointers have been addressed.
Absolutely. All pain points that the management has addressed, and the stock seeing some good moves, but completely out of time. Thanks for tuning in to KYC, only on NDTV Profit, for your profit.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The world's defining stage. Leaders, visionaries, decision makers,
watching Your Money Matters here at NDTV Profit. I am Mahima Vajrajani. Now today we are going to take up two very interesting topics. The first one is how movies teach you a lesson in terms of where financial aspects are concerned. Movies are more than just entertainment. They make us laugh, cry, even dream big, and sometimes even teach us the smartest lessons about money. From iconic dialogues to unforgettable stories and the silver screen that has hidden gems of financial wisdom waiting to be discovered. Now in this show, we'll decode popular films and see how real life can actually guide our real life financial journey. And to discuss exactly this, we're joined by Anant Ladda, who's the founder of Invest Aaj for Kal, joining us now. Anant, hi. Always a pleasure speaking with you. Just want to start off this conversation by asking you as to what are some common financial lessons that movies so far have taught us as investors, and probably people would not have picked up them very well, but you'll be the right person to tell them as to what are these lessons.
Hi, firstly, thank you so much for having me on the show. Always pleasure discussing important financial topics with you guys. I think I'll give you some examples of movies which I loved and the financial principles which we can learn from the same movies. For example, there's a movie known as Bagban. That movie till now we have watched it from a emotional point of view, but I would suggest now you should watch that movie from retirement planning point of view. How important it is for each and every working professional to have a proper financial plan and to ensure that their retirement is taken care of is perfectly depicted by that movie. The 2008 crisis is one of the biggest crises which we have seen in history of the world, and there's a movie called as The Big Short. That movie teaches us how the complete crash happened in the market, how there was a person who actually predicted the crash and he was on the right side of the market still, just because people who were investing via that manager were not patient. He had to face a lot of trouble managing his positions, and how the complete crash happened. So it's a beautiful movie which will explain you the complete scenario and how big was it and how bad it was. Another hidden gem which is available on YouTube absolutely free of cost is Gafla. It comes from Harshad Mehta Times and shows you the exact depiction of how Harshad Mehta was, how he dealt. I know we have seen many movies and maybe many web series around Harshad Mehta, but that is one of the most raw movies you will see. It was made long back, so that is why I still love it, and it will teach you how banking system was, what were the loopholes of the banking system, how there were a lot of people who were misusing those loopholes, and how the system evolved eventually. So it will teach you a lot of stuff.
Interesting. In fact, I also wanted to ask you that how accurately do you think movies depict that real life scenario and help you understand as to what financial challenges are and how, that overall impacts your decision making as well?
See, I think movie dramatizes our real life in a big way. So we cannot directly take inspiration from movies, but yes, we can take lessons from movies, because at times we see there's a flashy hero who's spending XYZ amount and impressing a heroine and finally winning everyone's heart, but that is practically not possible in real life. So we cannot blindly follow what is happening in movie. We usually go out, watch a movie to move around from the real life and real life problems which we have. But at the same time, there are some movies like there's a very interesting movie called Confessions of a Shopaholic. It teaches us how debt trap is, how you can be a part of that debt trap if you don't have control over your habits, if you have impulsive buying, what bad can happen with you, and how you can completely your financial life can be ruined because of the credit card cycle. So we can take some inspiration, we can take some learnings from movies, but we cannot completely follow the movies in our real life.
That brings me to the next question, because do you think that this kind of depiction or movies or documentaries that we see can completely change our behavior towards money? Because from what I understand is books have definitely done that. For me, I think Psychology of Money by Morgan Housel has changed the way I think about money, right? But do you think that impact, in the same manner and format movies can also make?
I think yes, if you are choosing the right movies. For example, there is another movie which is one of my all-time favorites, Guru. it teaches us the real life story of Sri Dhirubhai Ambani ji and how he started from nothing, what were the struggles which he faced and how he carried on his business. And today we all know, we all are fans of what Reliance has done for the country, or what Mukesh Ambani is now doing for the country. But how it actually started, from where it started, and how was it in 1980s. So we can take inspiration specifically if you want to do business of your own, and if you think it will be a cakewalk, you should watch a movie called Guru, and you will learn the hardship of a real businessman and how you have to tackle it. So yes, we have to be very choosy about our movies. At the same time, if you're watching a movie where you have been shown how betting is done, and if you have been shown or depicted the glamour life of betting, and you're taking inspiration from that movie, probably you're on the wrong track. But if you have right selection of movies and then you're taking inspiration from them, can really help you out.
Makes sense, makes absolute sense. And, in fact, what you mentioned about the way your brain works, right? If you watch something, you're going to catch that easily. That brings me to my next point, that key behavioral biases or pitfalls that these movies generally show about movie. What are those generally? And probably your suggestion as to what movies should take care of before making these things, and making sure that financial stability is kind of inked in the minds of every viewer that's watching a movie.
See, I feel debt is at times glamorized in some of the movies. So that has to be taken care of, because when a youngster is watching a movie and seeing a guy who's taking 100x leverage and actually becoming successful in the end, might be a wrong example for him. I won't quote the movie. This is the exact story of a movie, but I won't quote it here, because probably we are more attracted towards negative stuff as compared to positive stuff. And I don't want any attraction towards such kind of movies. But at the same time, if you if you're a parent of a young kid, you can probably make them watch some movies where from they can gain some inspiration. So that is how you can ensure that everything is taken care of. There's a movie known as The Wolf of Wall Street. So it's a single movie from which you can take right motivation as well, and you can get misguided also. If you will see the lifestyle of the main character of the movie, you will see glamour. You will see fun, you will see thrill. But when you see the end of the movie, you will realize that you have to be careful while dealings in the market. So completely depends on how you select a movie. And probably there are some of the movies which we as a parent should try and show it to our younger generation, so that they can learn from them.
Good that you talked about The Wolf of Wall Street. You also talked about The Big Short. There's also a movie called Inside Job. I want you to give our viewers a perspective as to what are the kind of financial lessons that these movies have actually taught, especially investors out there. I mean, maybe key 3 to 4 points that you think are really important, and probably the takeaways from these movies.
See, if you talk about Inside Job, that is also around the 2008 financial crisis. Correct. And how the complete crash happened. And it also it also covers topic around how even the government was involved in that scam or in that crash, and how government made mistakes. I think 3 important lessons which we can learn from these movies is, firstly, having proper asset allocation. If you're all the time invested 100% in equities and sometimes something happen in the market, your portfolio will go on for a toss. Secondly, learning and adopting newer technologies, newer investment options is also important. For example, till 2008, I don't think a lot of people were shorting the market or knew about shorting the market. But once that crash happened, everyone learned about derivatives. Everyone learned about how shorting happens or hedging happens in the market. So we should be open to newer investment options and investment possibilities. And third and final thing is, whatever happens, you should know your limit. You should know the risk profiling. You should know how much risk you can handle. If you take a risk which is beyond your capacity, then you will go on for a toss. If you don't have emergency fund and anything like that happened, your complete life will be shattered. So having proper emergency fund, proper financial plan is important. However aggressive you are, however good an investor you are, but whenever market wants to teach you a lesson, that will be really harsh. So plan for the worst and be ready for the best.
Fair point, Anant. And you know, in fact, my question to you would be that because a lot of these movies have taught about this, right? What you just spoke about. How much do you think storytelling can be leveraged to teach these financial lessons? Because we've seen that happening in the past 2 to 3 odd years, or maybe more than that, in short form content as well, right? Because people are adopting storytelling and trying to give financial lessons to the viewers out there. How do you think that this is the best tool, or maybe this can be leveraged in the best way possible to teach financial lessons?
I think it is very important, and you guys have also been doing an amazing job around the same. I have seen a lot of content which you guys are putting, which is in a story format. Because whenever there is a story which is being narrated, we connect to that story. We become one of the character of that story, and eventually we can take some lessons out of it. So this is one of the most beautiful manner to learn stuff. And of lately, specifically looking at the number of scams and the number of mishappenings which are happening in the market, storytelling is probably one of the best way to communicate the message and to ensure that investors are aware of the financial frauds which are happening in the market. Investors are aware. Recently, yesterday only, I was reading a story where around 20 crores of money was scammed by a scam happened to a Delhi person, and that was a digital arrest scam. We all know about digital arrest scam, but still people are getting scammed by the scammers in one or the other way. So storytelling probably can reach greater audience, can appeal to greater audience, and we can probably make a change.
Absolutely, Anand. In fact, I met an Uber driver very recently who talked about how he was scammed and probably lost 4.5 crores in dabba trading, and because of that, he's now driving an Uber. So it's very important that these mediums are used to portray the best financial knowledge that one person has. So and you're doing exactly the same thing. So thank you so much for that, and of course taking out the time and speaking with us at NDTV Profit.
Thank you so much. Have a good day. Thank you.
You too. Thank you so much. Okay, moving on to our next conversation. Now, big changes are arriving for NPS from 1st of October under the new multiple scheme framework. Non-government subscribers can now hold multiple schemes under one PRAN and invest up to 100% in equities in a high-risk variant. At the same time, PFRDA is revising annual maintenance charges as well via slab structure, setting upper caps based on corpus size. Now, also draft proposals suggest more flexible exit and withdrawal rules, shorter vesting periods, and higher lump sum limits. This is exactly what we're going to talk about today, what this means for your retirement planning. And to discuss all of this, we're joined by Rohit Chau, the co-founder and CEO of GYR Financial Planners Private Limited, joining us now. Rohit, hi. Thank you so much for taking out the time and speaking with us. Take us through the entire view of what's happening from 1st of October. What are the changes that one can expect